Hearty good morning, ladies and gentlemen, and a warm welcome to all of you to the 5th edition of the Global FinTech Fest. My name is Kavya R. Chavali, and it's an honor to gather with such a distinguished global audience, as we all know that this event is a testament to our collective commitment to building a financial future that is inclusive, responsible, and resilient. Before we get started, once again, I'm going to request all our members of the audience to please take your seats, and a humble request, of course, to keep your mobile phones on the silent mode so that we can deep dive into all the insights flowing in for the next 3 days. Before we get started, we'd also like to thank the Payments Council of India, the National Payments Corporation of India, and the FinTech Convergence Council for their tireless efforts in organizing this conference. Our gratitude also extends to MeitY, the Ministry of External Affairs, the Department of Financial Services, the Reserve Bank of India, and IFSCA for their invaluable support. And we'd also like to thank our partners. The Global FinTech Fest 2024 is co-powered by Google Pay and PhonePe. Our technology partner, Perfios. The event is brought to you by HDFC Bank, State Bank of India, Punjab National Bank, and MasterCard. We'd also like to thank our associate partners, Amazon Pay and Razorpay, our consent partner, NeoCred, our payment enabler partner, Lyra, and we'd also like to thank our supporting partners, ONDC, World Bank Group, IFC, International Finance Corporation, Better Than Cash Alliance, Reserve Bank Innovation Hub, Gujarat International Finance Tech City, Aadhaar, Invest India, and Digital India. With that, ladies and gentlemen, we have a very befitting theme on blueprint for the next decade of finance, responsible AI, inclusive, resilient. That being said, we're about to get started with our very first session for the day, which is all about the next decade of finance. Let me inform you all that we have the august presence of our dignitaries right here inside the hall. So without any further delay, let's actually get the very first session started. To do so, first up, if I could please invite on stage Mr. G. Padmanabhan, former Executive Director, Reserve Bank of India, ex-Chairman, Bank of India, to please come on stage. May I further please invite Mr. Vishwas Patel, Chairman, PCI, Mr. Ritesh Shukla, Chief Executive Officer, NPCI International Payments Limited. May I further invite Mr. Yash Rajarande, Global Head of FinTech and India Head of Financial Services, BCG. Well, let's keep that applause going, ladies and gentlemen. And may I humbly please invite Mr. Chris Gopalakrishnan, Chair, GFF 2024, Co-founder, Infosys, and Chairman, Axlo Ventures. And I further request Gopalakrishnan, sir, to also please accompany our special guest for the day, none other than Sri Damu Ravi, Secretary, Economic Relations, Ministry of External Affairs, Government of India. Ladies and gentlemen, I believe we have the dynamic presence of our dignitaries. Can we have a dynamic round of applause to give a beautiful head start to this phenomenal edition of the Global FinTech Fest? With that, as we get up for the very opening session, as we get to hear from our dignitaries, may I first please request Sri G. Padmanabhan, former Executive Director, Reserve Bank of India, and ex-Chairman, Bank of India, to please address the august gathering. Over to you, sir.
Very good morning to all of you. Secretary Damu Ravi, Chris, Chair of the Advisory Board, GFF 2024, my other colleague members, Vishwas, Ritesh, Yash. Welcome to the 5th edition of the Global FinTech Festival. Now, almost 6 years ago, when the industry was asked by the government authorities why we can't plan and execute an event like the FinTech in an international scale in this country, all of us initially, I must admit, were a little dazed and overwhelmed. This meant really dreaming big, and then we remembered the words of one of the most famous presidents of this country, Dr. Abdul Kalam, who said, "Dream is not which you see while sleeping, Dream is something which does not allow you to sleep. I must admit that none of us, particularly the members who worked hard, never slept for several weeks planning an event of this scale. The first two editions had to be done virtually because of COVID. But given the enthusiastic participation and the support we received, we persisted in our efforts. Then, as they say, two things happened. A world-class infrastructure like the one we are in, the Geo Center, came up, and more importantly, the entire ecosystem, the government, the regulators, the industry, all came together to support us. Again, we remembered the words of the former president who said, "Look at the sky, we are not alone. The whole universe is friendly to us and conspires only to give the best to those who dream and work." And we continued with our dream. So today we are here, the opening session of the 5th edition of what has become a landmark event in this part of the world. I take this opportunity to thank all those visible or working behind the scenes who have made this possible. A few words about this year's event. With over 900 speakers from more than 75 countries participating over 3 days, one of the key highlights include participation of over 150 central bankers and global agency representatives. They will deliberate over various issues, truly engaging in the theme of this year, which is blueprint for the next decade of finance. Much anticipated address by the Honorable Prime Minister, Sri Narendra Modi ji, day after tomorrow, underscores the significant scale that this event has achieved. Another major highlight is the closed-door interactions with the regulators, policymakers, industry leaders, which will really lay the foundation for the development of the fintech system. Additionally, we will witness over 100 product launches and the release of numerous reports and white papers, one of which is going to get released just after this event. The event's greatest achievement, I would say, is bringing every stakeholder together to network, which is crucial for the development of any ecosystem. To set this year's ball rolling, we have with us Sri Damu Ravi, Secretary, Ministry of External Affairs, sharing his thoughts as we set the blueprint for the next decade of finance. Secretary Ravi has had a unique career in the Indian Foreign Service, which includes a longish stint in the Commerce Ministry. In fact, I asked him before we came in, is it normal? He said, no, I wanted it because I liked the role that I was doing. So he has a very unique experience, I should say. Chris, chair of our advisory board, will first briefly share his thoughts, followed by the Secretary's address, which all of us are eagerly looking forward to. I once again welcome all of you to the 5th edition of the Global FinTech Festival. Also, Mr. Chris Waller, who is already here, who will be your next speaker. And thank you for your contributions and participations. Chris, over to you.
Thank you, Padmanabhan. Good morning to all of you. Let me add my welcome to all of you. This event to me is a celebration of the hard work and success of all of us. It's really getting all the people together and celebrate. Indian fintech industry has come a long way, combining emerging technology, business model innovation, the digital public infrastructure together, we have put together collaboratively, among large enterprises, small and medium enterprises, startups, regulators and government together, we have crafted this industry. And these 3 days, now we will talk about what is the future for this industry, what is the next 10 years going to look like. New technologies that are emerging, AI, ML, ChatGPT, voice and image recognition, real-time translation, IoT, sensor devices. So every evolution of technology will require responses. And how the fintech industry navigates this and maintains the momentum will be what I believe we will discuss. On top of this, of course, there is global collaboration now to look at how we can leverage this new technology. What we have been able to achieve in India in terms of number of transactions, the lower cost of transactions, the real-time settlement that is happening, how we can take it global. There is tremendous interest now. And then, of course, cross-border transactions. I also believe that because technology is so much integral to our daily life and business, discussions around responsible use of emerging technologies, ethical growth, the need to build trust with all stakeholders, and continued collaboration now, not just with national governments, but globally, across borders. All of these things are required. So I'm looking forward to all these discussions in the next 2-3 days. We have a fantastic line of speakers, as Padmanabhan already mentioned. And let me wish you the very best in terms of learning, in terms of conducting your business, and in terms of networking over the next 2-3 days. We couldn't have chosen a better venue for this, a better location for this. And looking forward to the next 3 days. Let me now invite Sri Damu Ravi, Secretary, Economic Relationships, Ministry of External Affairs, to share his opening remarks. Thank you.
Well, good morning to all. Thank you very much, Mr. Padmanabhanji and Chris Gopalakrishnan for a very generous introduction. Distinguished gathering, captains of the industry, foreign delegates, media. For me, it's a great honor and privilege to be here with you and to be actually part of this festival that has attracted so many captains of the industry who are making a big change. Myself and my colleague Mahavis Singhvi, who has come with me from New Delhi, we are truly privileged to be part of this FinTech festival. Well, at the outset, I acknowledge and I confess that I'm not tech savvy at all, and I don't understand very much this world of FinTech technologies that is actually making a big change. But it's important to understand there are gaps at the policy level and the industry looking forward. And there is always, and I've confessed that we need to understand the industry sentiment, the industry urge how they are looking into the vision that Prime Minister had laid out for this country. But let me tell you and share some trends, perhaps to set the context for the next decade and how we see the rise of India and navigating itself on the global stage. Today, we all are fully convinced that we are in a globalized world. We are interdependent and interconnected. That is taken. But that's a process. It doesn't happen in phases. It's a process. Sometimes it takes a break, it sometimes slows down, but it's a process which is linearly moving forward. And most of it is driven by technology. We've seen this at the beginning of the last century with the transportation, technology, and communication subsequently. And then you're looking at technologies in the data space, which is driving this interconnected world, and somewhat unstoppable. No matter what may happen, it may just slow down. Many people say that India missed the bus of transition to a more major economy because we missed the Industrial Revolution at the beginning of last century. But then we leapfrogged. The innovative and creative minds of the Indians brought in the software technology and the IT revolution. India leapfrogged. That's a very significant milestone in the evolution of Indian economy. Of course, the reforms had to keep pace with that outburst of innovation and technology of the Indian mind. And that's beginning to happen. The policy is trying to keep pace with that urge for the Indian innovation to go onto the global stage. And 21st century, at the beginning of it, we are now in the third decade, is the data revolution, which is going to bring major changes around the world. And in that space, fintech is significantly important. That will drive change. We are today at the crossroads of an inflection point. And what it means is that around the world, policymakers, leaders are somewhat in a state of dilemma as to whether the policies that they're making, the technology that is driving the economies, are actually bringing about major shifts in the way people live. Is there inclusivity or not? I think that's the biggest question mark that is being posed to the leadership around the world. Honestly speaking, there is that sense of dilemma, sense of diffidence that we have not addressed that gap. How do you explain that the world GDP at $85 trillion, the world trade at $62 trillion, both services and goods included, and you have wealth, the world wealth at $400 trillion, and investment flows at $125 trillion, but yet the inclusivity issue and the gaps have not been addressed. And this is the biggest challenge for the governments around the world. How do you address this? So can digital public infrastructure narrow the gap? That's what we are actually talking. And that's what I feel is the Prime Minister is looking at and focusing so much in his vision for the 21st century India that will hopefully be fully developed by 2047, the Viksit Bharat. So it is basically, DPI is a very basic technology. There's no complexity, as I understand, but it provides a scalability, interoperability, and brings in efficiency. So in a way, it can be truly transformative if you are able to bring it at a scale that includes all its citizens. So the ability to reduce documentation, the reducing the physicality of movement of people for goods and services, even for finances, is actually empowering common man. It also spurs innovation. And the larger outcome of that is actually inclusivity. In the last decade, looking forward, and we have to also see what we have achieved in the last decade, this is truly a significant achievement in India. And singularly, we should bring back to our discussion table the importance of the digital public infrastructure that has played in the country. 1.4 billion people under the Aadhaar. You had 500 bank accounts under Jan Dhan Yojana. Then this covers about 97% of the beneficiaries which are rural, and 950 million mobile phone connections. So what does it do? It brings in efficiency, it brings in transparency, efficiency in governance, efficiency in the delivery of public goods, minimizing leakages, or rather elimination of lackages, and bring in a large amount of predictability in the government policies. So most of it is measurable. And that is where we see a significant value and importance, even for the common man, also for the policymakers, because you are able to measure all that you are implementing. So within that scale of the digital public infrastructure, you have the UPI. And that's, again, a major shift that has caused in the economy. The NPCR, the real-time cost effectiveness, the payment systems, these are now ubiquitously used. Even tipping, you are using the payment systems, and that's so convenient for people. So what does it mean? That ultimately, it is the cost effectiveness and the convenience that will drive this change. And going forward, we are going to see increasingly billions of transactions. I don't want to go into the real numbers of the volumes and the value of transactions that are taking place within India. And that, I think, my colleague tells me that it is larger than even developed economies could do together. We are also seeing a next stage in our own fintech technology and the fintech revolution, which is the digital currencies, the digital credit, and all that is going to make a big change for the MSME and in the agriculture sector, which are actually going to create the jobs in significant way than the big interests could ever do. So these are the changes that are going to make a breakthrough in the inclusivity, as I see it. Let's come into the global stage. It's not that, India will alone see these big changes. We have to see in an integrated world that how these technologies can also help others, particularly in the global south. India's G20 presidency was a big opportunity for us to put the spotlight on the importance of the digital public infrastructure. And that's what exactly Prime Minister has focused on during India's presidency. India's achievements, particularly the low-cost solutions to the digital processes, technologies, are indeed attracting worldwide attention, which is why the G20 task force that was set up on DPI has become an important discussion point even during the Brazilian presidency. And we know that in the days to come, there will be soon a traction on that. We have to, while addressing the inequality debate in the G20, there is a significant focus on the inclusivity through the DPI infrastructure technologies. We also have to be worried about the lack of significant progress on the sustainable developmental goals. We are just 6 years from the date of the cutoff date, but yet the progress on the SDGs have not been strong enough. And again, we have to think whether the fintech technologies can bring that change in an accelerated manner. And so is the same thing about climate change. the more you use fintech technologies, that you are depending less on paper, the paper currency. So in a way, it's also a big support to the climate change challenges. We are within the G20 have been talking about green finance, the bond market, the pension funds, and India has been playing a constructive role in all this. Most importantly, we believe that the Global South agenda, which has taken center stage within G20, should be a priority. For a very long time, the multilateral developmental banks have been focusing on actually policy interventions, policy changes, but not addressing the structural issues that developing countries are affected by. And this is where, again, India has a role to play. Can we bring in the digital public infrastructure, the fintech revolutions, the fintech solutions to the Global South, and then address the structural issues there? Perhaps there could be a big change in those countries later. And we are working from the Ministry of External Affairs, pushing our industry to go into the Global South and work towards finding solutions. Another idea on which we need to work is actually on the rule making. And again, we in the government feel that for a long time, India has been a rule taker. And we are just abided by how the rules are made, what rules are made by the global community, largely driven by the Western nations. But in the fintech solutions, the fintech technologies, in the DPI world, India has an eminent role to play in the rule making. And that is because most of the technologies are made in India. The youth of India, the innovation, the creative energy that is very inherent and embedded in India is driving change. So we recognize this in the government, and we feel that we should be in the forefront of taking this lead. In the Ministry of External Affairs, my colleague and my team, we are constantly wanting to support the industry, both under the bilateral mechanisms and the multilateral mechanisms. G20 is one, but there are also other platforms, the Commonwealth nations, the BRICS, the IPSA, and the Quad. The solutions that India can provide, particularly the low-cost solutions, are just not for the Global South, but I believe these are even useful for developed countries, which is why our bilateral mechanisms are also working with countries like Singapore, UK, United Kingdom, UAE, and countries in European nations. We are working very closely. We also want to collaborate with World Bank, IMF, and the UN to help to set standards on digital payments, blockchain technologies, and cyber securities. We have to also worry about certain threats that will come, and they're inherent in a technological change. The existing models might find some disruption, and this is natural, which is why the industry would need to adapt. And they have to adapt to the changing times. And if you don't adapt, then you will see a natural death. We also have to look at the cybercrime, which is increasing. And there again, the solutions have to come from all of us through collaborative manner. The skills gaps, because as you are focusing on technologies, it's natural that people who are driving technologies should be highly skillful, but also people who are using it should be highly skillful to be able to do it. So there will be a gap, and that needs to be addressed. For example, in India, 24% of the adult population is actually digitally illiterate, and there's a huge gap there. And I see this gap also in the Global South. Even as we are building up technologies for the countries in the Global South, the platforms that we will build, you would still need to address the capacity deficiency issues in those countries. And Ministry of External Affairs will be in the forefront in that regard. So, and I would like to convey this to all of you in the industry that we are trying to build and help countries in the global south in the DPI. And any technologies that you think are useful and that you can be partnering them, please come to us and we will help you and facilitate that role. We are also working financing arrangements, because it's easy to talk that you develop technologies, but at the back of it and the underpinning that is actually financing arrangements. So again, there are huge opportunities in tapping that, both in the space of global pension funds, the global green funds that can be tapped, but also in a trilateral cooperation. It's not that solutions should come from India alone. I believe collaborations with other countries are very important to drive change. I would like to leave one thought with all of you. The next decade is very, very crucial. We are already looking at a target of 10 trillion by the end of the next decade of India's GDP. And by 2047, 30 trillion is the target. This is highly ambitious, but we are confident we will reach there because of the entrepreneurship, the innovation, and the creative energy that India possesses in its people. But it is also important that we have to keep this at the back of the mind, that as India becomes a significant player on the global stage, the industry has to rise. The industry's rise has to be commensurate with the rise of a nation. These are two important connects, and this is true for any nation that has arrived there. The trajectory of big countries and emerging countries are driven by not only a visionary approach of the leadership, but the industry matches that vision. I would like to welcome all of you to the next decade that drives this change, and Government of India and the Ministry of External Affairs will be with you. Thank you for this incredible opportunity to speak to you.
Thank you very much, Sri Ravi, for your pioneering presence and your thoughts on India's fintech trajectory, and also sharing across very important and pertinent initiatives on taking this growth story forward. With that, ladies and gentlemen, it's an opportune time to have our dignitaries come together for the launch of the report titled Building Bridges for the Next Decade of Finance. So I'd like to request my team to please come on stage to distribute the reports. We'll have the reports distributed across to all of our dignitaries. Well, ladies and gentlemen, let's have a round of applause as we launch the report titled Building Bridges for the Next Decade of Finance. While I request our dignitaries to take their seats, I'm sure you and we are very curious to gather some insights from the report, for which I'd like to please request Mr. Yash Rajarande, Global Head of FinTech and India Head of Financial Services, BCG, to please address the gathering. Over to you.
Thank you. Can we have the slides up? Okay. Just making sure the click works. If you can get the clicker working. Yeah. Okay, maybe we get going. Respected chief guest, respected chair, respected fellow members on the dais, ladies and gentlemen in the audience. As we stand before you today, I am filled with a sense of privilege, but also with a deep sense of responsibility. Padmanabhan sir spoke about the bold vision which was conceived a few years ago of Global FinTech Fest to really provide a platform for pushing the frontiers of finance and what can be accomplished if you start with a bold vision and if you have people supporting it. Chris spoke about winning the next decade by bringing together technology, people, ideas, and really the emerging technologies and leveraging and harnessing their power. And Sri Damu Ravi, I think, really touched a chord by reminding us of the responsibility that comes with this opportunity, which is to be inclusive, to lift the world forward, to take the people who don't have the privilege of participating in the growth, but allow them access to all of this. And therefore, I'm really filled with the sense of privilege that we are having this August gathering and 3 days of fantastic deliberations with the Prime Minister also being present. But at the same time, I also feel a sense of responsibility that we have to really cover a lot of ground if we have to meet the 10x ambition. If our GDP is going to go 10x, if the world GDP is going to go 10x or even beyond, there are a lot of bridges to be built, and we are going to talk about that today. So diamonds are really created under pressure, and last 2 years it has been no secret that the fintechs have gone through both an intense cold and felt intense heat. The cold was because of funding winter, and the heat was because all eyes were on them to really check whether they are up to the mark in terms of governance, standards of ethics, in the way they are managing capital, in the way they are growing business. And I must say that as we come out of the last 2 years, there is greater sense of stability and there is a greater sense of determination and clarity on the road ahead. As you can see that the funding over the last few quarters globally has stabilized, and it's now clocking at around 7 to 10 billion. It's not at where it was at the peak of 2021, but certainly this is a new regime, and in this regime there is clarity on a steady state of funding which is being provided to this economy, to this sector. The period of burn and grow, which was again a global mindset that we had seen in the past, is, I can say, safely behind us. It is quite clear that the era now that founders, investors, and business models are focused on is earn and grow. And this is a survey that we had conducted that clearly reveals that while there is priority to drive innovation, but really profitability and governance is right up there in terms of priorities for the fintechs of today's era. If you look at the global fintech revenues, I am happy to report that the predictions that we had made, or the projections rather, that we had made a few years ago, despite the shock, actually hold water. We expect that we are well as a global industry on our way to hit $1.5 trillion by 2030. And I am also happy to say that this growth is not lopsided. The incremental capital allocation, if you look at different parts of the world, whether you look at North America, Europe, Asia Pacific, Africa, LATAM, there is greater balancing of incremental flows of capital. There was an era where there was significant amount of capital being spent in India on payments, but we can see that there is more capital being now allocated towards lending and B2B businesses. On the other hand, in US, there is greater capital getting allocated to payments, which kind of makes up for the fact that the strength of a UPI equivalent architecture was missing. So as we take the global landscape, and this is really a global fintech fest, so we need to take a view on that,
there is convergence on making sure that different segments of fintechs are getting the right amount of investments to strengthen their business and growth. Now, this event, while it is about the global fintech, it is also happening in an area which I'm happy to report is one of the hotbeds of fintech activities. India is right now the third most attractive destination in terms of the number of unicorns, the number of soonicorns, the amount of capital that is attracting. And actually, that's not about it. What I'm really heartened by is that data is clearly showing that the fintechs which are getting founded in India are not just concentrated in 1 or 2 regions. They are, sir, spread across different parts of the country. And I think this is an opportunity for us to create more beds of innovation and really reach the heart of India to lift India forward. And I think some of our businesses and founders are doing that. And with the right support in terms of policy and business models, I hope this will go even further. So diversity is really important. The other thing which is quite phenomenal is that in terms of revenue growth of Indian fintech, sir, we have clocked 50% annualized growth in the last 2 years. Globally, by comparison, this number is 13%. So it's a large base which is growing at a very fast rate, and it is growing in different states, and it's not just concentrated in 1 or 2 cities. So this to me is a combination of some really interesting findings. The one thing which I must admit, which is I must say a pause, is that while all of this is happening, there are very few fintechs in India which have reached full scale. And for us to become a $10 trillion economy, $30 trillion economy, our survey also reveals that most of the fintechs, really 86% of them believe that scale is going to be critical to drive profitability and serve the nation and serve the world. And for that to happen, we need capital, we need talent, we need business models, but we also need policy to come together and make it enabling. I think the other big shift that has happened in the last few years is that early on there was disproportionate focus on direct-to-customer fintechs, where there was huge investments in acquiring new customers, retail customers, last-mile customers. There is clearly, you can see that that has shifted towards going towards a B2B business. As we come towards looking at the blueprint for the next decade, I just want to call out that there are 6 extremely critical bridges which need to be built. These are the 6 bridges which have been created, I must admit, out of a series of deliberations that have happened through the global network. We have gone deep in India, and the advisory board and Indian leaders have also spent a lot of time in providing feedback. I will take 2 minutes to just walk you through these 6 bridges and leave you with this thought. The first and the most crucial one is the bridge on building future-ready technology. Indian technology stacks are between 1 to 2 decades old. We have the glow of youth. That glow of youth is not going to sustain over the next 10 years unless we double down on reinvesting in these. And there is a significant gap, and the numbers are in the report, and I'll encourage you to look at it, in terms of how much we need to invest in our technology, in our core infrastructure to support the future. So that's the first and the most pertinent bridge. Without this, we will crumble. And I want to say, I don't know how many of us realize that India is the second most cyber-attacked nation in Asia. And without investing in tech, we are not going to be able to survive. The second one is the bridge between incumbents and fintechs. We are not in a place where fintechs are trying to take business away from incumbents. We are in a space where we want them to grow together, and that is really what is flourishing. And a lot of policy intervention in providing clarity on business models of working together can help. The third is bridge to internationalization. DPI is already growing to global south. I think this is a $500 billion opportunity globally, and there's no reason why Indian revenues can't be 50 billion of that. Indian IT sector, sir, is $250 billion of revenue. The fintech sector, if we go internationally, should be $50-60 billion of revenue in the next 5 years. So we believe that's a big focus for us. There is 30 to 60% of capital sitting on Indian cap tables, which is reaching its maturity. We are running into a wall of maturity in the next 12 to 18 months. That means huge amount of access to capital is required. There are 20 plus unicorns, multiple soonicorns. If they need to access liquidity, the current pools of capital is not enough. Finally, regulation and compliance and the bridge to a greener future. I think compliance is well understood. We can't build scale without being compliant and trustworthy. And the greener future point is that it is remarkable the amount of green innovation that is happening in the retail and MSME sector. There is a groundswell of activity, but there are very few fintechs which are focusing on it. It's a call for action. It's a huge opportunity. It is a commercially relevant opportunity, and there is clear evidence in the report that there is an opportunity for fintechs to go after this as well. So with that, I will thank you for the opportunity and wish you all the best for the next 3 days. Thank you, sir.
Thank you very much, Mr. Arande, for sharing some pertinent data points that are truly defining the scale and profitability of Indian fintech. On that note, ladies and gentlemen, I now please invite Mr. Vishwas Patel, the Chairman of Payments Council of India, to please share the concluding thoughts for the opening session. Can we have a huge round of applause? Please help me welcome Mr. Vishwas Patel.
Okay, good morning. So I would like to propose a vote of thanks first to Sri Damu Ravi ji, Sri Chris Gopalan ji, Gopal Krishnan ji, Padmanaban ji, also to BC ji for their kind words. To all of you present here, a big thank you and a very warm welcome to the Global FinTech Festival 2024. This event is an extraordinary gathering of visionaries and leaders who are shaping a future for financial technology. GFF today has grown to be the largest fintech conference in the world, a testament to the vibrant community that drives motivation, transformation in this sector. With over 80,000 delegates representing 40 countries, the scale of this event is both unprecedented and unparalleled. The conference is also hosting 300 plus exhibitors, making it a major hub for networking, knowledge exchange, product launches, and innovation in the fintech space. I thank you all for attending the event. Your support means a lot to us, and we are looking forward to seeing you in GFF in the coming years also. Thank you all.
Well, thank you very much. I'd like to thank all our dignitaries. I'm going to request you all to please come together for a group photograph. With that, ladies and gentlemen, while we call it a wrap to the opening session, let me also inform you all that we also have the parallel tracks. We've got some very important topics that are being discussed across different halls, so please do be sure you're taking a look at the agenda. Meanwhile, to inform you all, we will be beginning in the next couple of minutes with our next session. That will be all about discovering the rise of AI-driven financial services. Let me inform you all, this is Jasmine Hall number 2, and the next session taking place here is all about the rise of AI-driven financial services. So I'm going to request all those who are part of the session to stay back. And as for the rest, please don't forget, we also have the Pavilion Expo taking place. We've got some interesting topics that are being addressed across different halls. So please do be sure you're at the right topic, at the right hall, at the right time. Meanwhile, ladies and gentlemen, let me inform you, the next session will begin in the next couple of minutes. So please be seated. Thank you. Meanwhile, ladies and gentlemen, I'd like to urge all of you to be seated so that we'll get our next session started. The next session is all about discussing the rise of AI-driven financial services and the necessity of responsible innovation. So we're going to get the next session started within the next couple of minutes. Please be seated. Now, ladies and gentlemen, in order to ensure technologies contribute positively to the economy without compromising customer trust or financial stability, this is where we do realize the need for the rise of AI-driven financial services. That being said, Both of our speakers are right here inside the hall, so without any further delay, we're about to get our next session started. I'd like to also invite our next set of speakers. Before I invite them on stage, ladies and gentlemen, our global payments partner, we'd like to thank Discover, banking partner Standard Chartered, platinum partner Pismo, gold partner Axel, O3 Capital, silver partners JP Morgan and Zoho, and our core banking partner iDigi Cloud. With that, our next session is about to begin, and if I could please request our members of the audience, please be seated, those who are inside the hall for the next session. As for the others, I'm going to request you to kindly proceed to the respective halls. I've also been given a cue that we are ready to start our next session, so I'll go ahead and invite our next set of speakers on stage. We're good to invite our next set of speakers? Yes? All right. So with that, let me please invite Shri P. Vasudevan, Executive Director, Reserve Bank of India, and Mr. Christopher Waller, Member, Federal Reserve Board of Governors of the United States. I request both of our speakers as well to please come on stage. I know there's a massive crowd right out there, but I'm going to request all the members of the audience to also please be seated really quick. We're trying to be sure that all the proceedings of the programs, everything that we do is on time. So without any delay, we are getting our next session started right away. I'd like to request the members of the audience to please clear the aisle area. We're about to get our next session started. Please note, we also have the parallel tracks taking place. We've got a lot of sessions taking place across the next set of halls as well. So I'm going to request you to please clear the aisle area so that I can invite my next set of speakers on stage. Well, as we all know that the financial landscape is evolving rapidly, and that's why we also see that there's a need for adaptable regulations that can truly keep pace with technological advancements. And that's why we have seen that there's been massive accentuation on collaborations as well. That being said, let me remind our members of the audience one more time that our next session is about to begin, and this is where we'll get to discuss the rise of AI-driven financial services. That being said, I've also been informed that our speakers are right here, so I'm just going to hold on for a minute before I am told that we can get our next session started. I'd like to request our members of the audience to please very quickly take your seats. Our next set of speakers are ready to deep dive into some more insights flowing in. So I'm going to request all the others to please clear the aisle area. Very quickly take your seats. I can see all of you already geared up for our next session. All right, so with that, ladies and gentlemen, we are finally ready. We are all set for our next session, and for which, if I may please invite two of our esteemed speakers on stage. May I please invite Shri P. Vasudevan, Executive Director, Reserve Bank of India, and Mr. Christopher Waller, Member, Federal Reserve Board of Governors of the United States. Can we have a thundering round of applause, ladies and gentlemen? Let's bring the energy back in the air, and let's all gear up to hear from two of our esteemed leaders. Thank you very much, sir, for joining us. And on that note, let's deep dive into this very pertinent conversation coming your way. With that, over to you, sir.
Good morning, Mumbai. Good morning, GFF. Nice to be back here. Nice to be on stage as well. Just now we had a wonderful intro about what the GFF is all about and what are all the things that are online for the next couple of days. And to kickstart, I'll be part of this fireside chat. I was just wondering, early in the morning on a busy working day, we are talking about fireside. And of course, Mumbai is little cool, but not as cool as Bangalore, where we were a day before. So I was just wondering why. But then I realized that when the US President Roosevelt was giving an interview, it was by the side of a fireplace. So from then on, the fireside chat has started, and we are picking up the tradition. It's my pleasure to be part of this session with the big man, the governor and member of the Board of Governors of the Federal Reserve System, Mr. Christopher Waller. Governor Waller has been very gracious in accepting our invite and to be part of this. He is having multiple responsibilities on the board of the Fed Reserve System. He is the economist there. In addition to that, he also is in charge of the oversight function for the payments, clearing, and then the financial market infrastructures. It's a great honor, Governor Waller, to have you here. And we will have a couple of questions after the governor gives his address. So what I will do is, in the interest of time, I will request Governor to come and give his opening address and remarks, and thereafter we'll have a few questions to discuss. If that's fine, kindly come over to the podium, Governor. A big round of applause, please.
Well, good morning. That's what I like to hear, an interactive audience. So I want to thank the conference organizers for the opportunity to speak this year at the Global FinTech Fest, a place where there is so much payments innovation. The technology-driven payments revolution in India has been enabled by a public-private partnership to build the technology stack of digital platforms that has broadened financial inclusion and done so at low cost. Building on the foundation established by the public sector, innovators in the private sector seize the opportunity to enhance payments through the introduction of new capabilities that alleviate frictions while remaining within regulatory guardrails. In today's remarks, I'm going to touch on how the interplay between public and the private sector may be the key to advancing cross-border payments. Now that fast payment systems have been established around much of the globe in over 70 countries and counting, attention is turning to how these newer systems could potentially enhance global payments as opposed to just local. Specifically, interlinking fast payment systems has been identified as a possible means to deliver enhanced cross-border payments for consumers and businesses. Interlinking arrangements would allow banks in different countries who are users of domestic fast payment systems to send payments to each other through technical connections through their respective domestic payment systems. As you all know, interlinking is one of the areas outlined in the G20 roadmap for further exploration as part of a holistic effort to enhance cross-border payments. The overarching G20 goal is to mitigate challenges with cross-border payments in a coordinated way at a global level with input from key stakeholders, including the private sector. The G20 roadmap addresses a new topic that payments industry stakeholders have been circling around for years: more cost-effective and timely cross-border payments for consumers and businesses. This policy goal has been advanced by the Federal Reserve over time in various payment system improvement initiatives dating back to the late 1990s, when the Federal Reserve began adapting an automated clearinghouse, or ACH, service to support international payments. And more recently, in 2015, when we collaborated with industry to improve the U.S. payment system. Today's consumers and businesses can generally send a payment anywhere in the world, but they all seem to want faster and cheaper global payments, just like we always want faster flights, fewer connections, and cheaper airfares. However, I'm not entirely convinced that interlinking arrangements will necessarily deliver on those goals. So let me explain with some context. Now, first of all, not all frictions that slow payments down are bad. We have to get that straight. Certain frictions are purposefully built into the global payment system for compliance and risk management reasons. Slowing down the speed at which payments are cleared and settled helps banks prevent money laundering and counter the financing of terrorism, detect fraud, and recover fraudulent or misdirected cross-border payments. Now, granted, the practice today of sending payments through an often complex chain of correspondent banks contributes to slower payments that could benefit from efficiency enhancements. However, there is no silver bullet that increases speed and efficiency without trade-offs, what every economist always talks about. Unless new solutions are found, interlinking fast payment systems might increase the risk management burden for banks that participate in them. That is, legal, compliance, and operational considerations are critical to the discussion of the promise and challenges of interlinking. Governance, oversight, and settlement arrangements also need to be thought through, along with considerations for data privacy. Now, in addition, can we assume that all parties to a cross-border payment want faster payments? I've studied monetary theory for a long time, which is about the exchange and payments of money for goods and services. And what you've learned is that the fundamental friction or tension in any transaction is that the seller of an object, whether it's a can of soup, an hour of your labor, or a good manufactured for export, that seller wants to receive their money as fast as possible. However, the buyer of the object or the buyer's intermediary often has incentives to wait as long as possible to make that payment. Now, under this logic, if you think about wanting to have faster payments, what you have to do is incentivize the sender of the payments. You do not need to incentivize the receiver of the payment. We all want our money faster, but we need to get people to send it faster. So one of the exceptions where the sender does want to send things faster are person-to-person remittances, where workers from other countries want to send money home and recipients want access as fast as possible to those funds. But remittances are only a small percentage of the value of global cross-border payments. So we need to weigh the benefits against the cost of a potential public sector intervention to shift incentives. So I'm still left with the larger question of whether we should be incentivizing faster cross-border payments. But suppose we do want to incentivize senders by lowering costs of faster payments. Whose responsibility is it to do that? Should it be left to private sector competition to drive down costs, as is typically done with nearly every other product that we trade in our lives? Or is there something unique about payments that requires central banks or payment system operators to step in to interlink their networks with the goal of bringing costs down? We have already seen examples of the private sector leveraging technology to innovate in the market for cross-border instant payments, both at the wholesale and the retail level. For example, we have seen a real-time payment system built for wholesale clients that allows clearing and settlement between global clients in seconds, with necessary compliance performed up front in less than 24 hours. Another example is the SWIFT Global Payments innovation, which offers improved speed and transparency for the business customers of participating banks, and by their account has been adopted by 150 banks globally. In mentioning these examples, I'm not intending to adore certain private sector services. Rather, these newer services are illustrative of how market forces and competition can meet consumer and business demands for more efficient cross-border payments. In the United States, we have experience with offering low-cost international ACH payments. We provided direct ACH linkages from the United States to Europe and Canada, but after more than 20 years, the banks were simply not using it, and we stopped the service. It is possible that a fast payment interlinking arrangement adopted by the Federal Reserve could be more effective for our bank customers than the former ACH service. But we would proceed cautiously and carefully to consider the cost and the benefits. Economic viability needs to be a cornerstone for any economic action that we take. We need to ask ourselves whether banks would find a central banking interlinking service more effective than their existing arrangements for cross-border payments, and if they would actually use it. Now, we know from basic economic theory that payment systems are similar to other networks in that greater participation is necessary for the network to grow and increase value to its users. This is true on a global scale. Two, which in practical terms means that valuable global interlink networks would have to be founded on underlying domestic networks with a breadth of senders and receivers. Domestic networks must be developed first. If this condition is not in place, interlinked networks would end up being a road to nowhere. Building out domestic networks has been done in different ways. In some countries, the central bank has authority to mandate participation, notably in Brazil, with a successful PIX system. In other countries, notably India, united efforts by the government, the central bank, and the private sector established the digital public infrastructure that enabled broad adoption and the huge success of the UPI. In the United States, however, it's a different story. And the payments landscape for us is unique compared to other countries. We have over 9,000 depository institutions and different authorities than other countries. The Federal Reserve is determined that it was needed to build a fast payment system accessible to all depository, all 9,000, to achieve our policy goals. At the time of our decision, there was only one private sector instant payment system in the market, built by the largest banks. Based on our experience, we did not believe that this system would ultimately reach all depository institutions, nor would other private sector systems emerge to compete with it and extend the scope of that service. Yet we knew from industry engagement that smaller banks across the U.S. wanted a broadly accessible fast payment system. So we stepped in to address what was a clear coordination problem in the market. This action is very much consistent with the Federal Reserve's role in the U.S. payment system for the last 110 years. Now, we have seen widespread adoption of our fast payment system, the FedNow service, in just a little over a year since implementation, with close to 1,000 depository institutions on the network, including many of the largest banks that will drive origination volume. Yet we are still in the beginning of a multi-year journey of establishing a ubiquitous network covering the majority of institutions in our country. Variation around the globe in domestic fast payment network adoption means that the value of globally interlinked systems is not yet clear. From a technical perspective, the promise of interlinking, which is essentially interoperability between or among domestic fast payment systems, is that fast payment networks can just connect. You just get the right adapter, you plug them together, you put some tape around them and turn it on. Okay, this sounds simple, but in practice, however, achieving interoperability is not simple. Technology is probably the easiest part of setting up a globally interconnected payment system. The legal, compliance, settlement, and governance challenges I mentioned earlier are far more substantial. In addition, even when technological connections are in place, payments may not actually be instant as they traverse across systems because of domestic variations in ISO 20022 implementation, which is the global standard used by most fast payment systems. To send an ISO message seamlessly from one country to the other, operators need to coordinate and align on common messaging standards. We should consider that new multilateral arrangements for interlinking could potentially address some of the challenges I have outlined. Today, certain countries have established bilateral links between domestic fast payment systems, primarily to support remittances payments. These arrangements demonstrate that linkages are technically possible and that legal and compliance issues can be addressed. Yet each link is unique and requires resource-intensive negotiation and alignment between parties. Establishing bilateral linkages, where each arrangement required bespoke agreements with correspondent banks and service providers. Multilateral arrangements might bring some efficiencies, yet they are no small undertaking. So to sum up, overall, I do see the value of a coordination role for the public sector to improve cross-border payments, an effort in which the Federal Reserve has been and will continue to be heavily engaged. We will continue our engagement with international fora to improve the speed and efficiency of cross-border payments and to investigate the issues critical to interlinking payment systems. Our chief focus in the near to midterm, however, is continuing to build our FedNow network domestically and increasing participation in that service. We are also improving cross-border rails by considering expanding operating hours for our large value real-time gross settlement system, the FedWire Funds service, and by adopting ISO 20022, a globally accepted messaging standard. Looking out over the longer term, we will continue to conduct research and experimentation on emerging technologies to better understand the role these innovations could play in the payments landscape of the future. I expect the technical capabilities, legal infrastructure, and use cases for faster cross-border payments will evolve, and I look forward to following the private sector innovation that will emerge from stakeholders represented at this event. Thank you very much.
Well, that was indeed insightful. In a short time of 10 to 12 minutes, Governor Waller has been able to present the entire payments landscape in the US, as also the the pillars on which the interlinking of payment systems, especially the fast payment systems in various domestic countries like Brazil, India, etc., they need to be focusing on. Very important aspects about the legal compliance and the governance risks that need to be addressed. And Governor Waller, you also mentioned about what are all the things that you are planning building on the FedNow rails as well. So it's very interesting. But I want to actually ask you about the audience here and your presence in Mumbai and of course in India. How does it feel to be in India for the first time? And of course in this GFF at Mumbai, I will take it as your maiden exposure or experience. Can you just share your thoughts, please?
Yeah, it's a pleasure to come to India, of course, having oversight of the Federal Reserve payment system. I've learned a lot about various payment systems around the world, particularly UPI here in India. So it was a pleasure yesterday to spend 3 to 4 hours in the NPCI and learn a lot about UPI, how it was built, how it was done, what are the objectives, and the success that it's had, particularly in bringing more formalization to the business sector by having lots of small merchants suddenly connected to this larger payment system. So it's been a pleasure, and then I love hearing how fintechs are going to improve, expand, and deliver greater service to everybody. So it was a great pleasure, and I look forward to my conversations the next 2 days.
Thank you. Governor Waller, you have been a student of economics. You have been teaching economics. Now, I also know that you have done extensive research on different theories in economics as well. And now you are a practicing economist. And you did mention about your responsibility for oversight over payments and financial market infrastructures at the Fed. And you also chair the Fed's Payments Clearing and Settlements Committee. I just thought I will ask you about what's your general view on the payment system developments and the role of the Fed. I know, Governor, you mentioned about the 110-year history and your thoughts about how the costs and other expectations of the private and the public sector should be met. But that was, I thought, a short time window which you had there. Maybe if you could dwell deeper about what's the role of the Fed and your particular interest in payment system developments.
Yeah, so the Federal Reserve, when it was created in 1913, one of its roles was to improve the speed and efficiency and safety of the U.S. payment systems in 1913. So from our founding, Congress in the United States recognized it was important for the Federal Reserve to make the payment system in the United States better, faster, safer. And we have done that for 100 years. And as technology has evolved, those payment systems have developed, and the Federal Reserve has always been there to help work to improve the safety and efficiency of the U.S. payment systems, along with the private sector. That's really critical for us, is to work with the private sector to make sure, because it is a network and they have to participate in that network for it to be a success. So that is one of the things that has always been part of the Federal Reserve's history. And we'll continue doing that forward now with our FedNow, improving our Fed wire services. My own interest has just been the fact that I did monetary theory all my life, which is I go buy something from somebody, I give them currency. Why do I have to give them currency? Why can't I simply buy it on credit? Just give it to me, I'll pay you back later. There's always some problems with that. So a lot of what I did for 25 years was simply study what are the frictions in payments that require certain instruments or certain payment mechanisms to successfully trade and then also transfer the goods from the seller to the buyer. So when I took over the payment system, this was something I'd been thinking about studying for 25 years. So it came very naturally to me, and I actually have great interest in actually the topics. I often laugh when I think about payments today and the fintechs that are all here. 25 years ago, if you'd have told me that payments would be the coolest tech job in the planet, nobody would have believed you. But it is. I mean, there's something like 50 to 100,000 people here today, all basically dealing with payments. And it's cool and young and exciting to young people. No one would have ever thought that 25 years ago. So that's why I actually find it a fascinating industry to be working in and studying right now.
Thank you. Very, very interesting perspectives, Governor. We did hear about the FedNow launch. I know it was in July 2023 and it was launched. And you have almost 9,000 depository institutions that need to come on board. Probably 1,000 of them are already on board. I know it must have been very difficult to motivate them to come on board the FedNow. I just want to hear your thoughts about what went into when the FedNow was being conceptualized and now launched, and what are the plans you have in the next couple of years? Can you just tell us in a little more detail, please?
Yeah, so in 2015, there was an initiative to improve the payment system in the U.S. with faster, certainly retail payments. And the Federal Reserve acted as the kind of coordinator of industry discussions of how to do that. And we were really encouraging the private sector to take this on and do it. And the largest banks did take up that challenge, and they built what's called the Real-Time Payments Network from the largest banks in the U.S. The problem we heard was a lot of the smaller banks were kind of worried about belonging to this network run by the largest banks. And so they wanted another network. Now, my response typically would be, well, then you go build one. The big banks built theirs, you go build yours. But when you're sitting there with, say, 8,900 banks who all now have to coordinate and somehow figure out how to build their own real-time payment or fast payment network, it's a massive coordination problem. And they all looked at us and said, well, we're already connected to you for payments. Why don't you just build it for the rest of us? So I often view creating FedNow as a solution to a large market failure in the sense that we could not get 8,900 banks to coordinate and build their own system. It's just a market failure problem. So we started building the FedNow system, and we finally launched it last year, and we have about 1,000 banks that have now signed up. But as I said, there's roughly 9,000 banks. This is a long process to get all of these banks hooked up. So if UPI would somehow connect to FedNow and you want to send a payment from the US to India or vice versa, most of the banks in the US are not connected. The payment's going to go nowhere. So that's what I mean. We have to take time to build out our network before we seriously think that it's going to be of value to every other fast payment network in the US. And that'll just take some time. But we're hoping to get there in the next few years.
Thank you, Governor. You did mention about the poster payment system of India, that's the UPI. And let me just tell you a few numbers, like for the last month, UPI cleared 14.4 billion in number of transactions, and it was for the value of US dollar 245 billion. It's really an inclusive system with more and more features being added, more and more user base getting on it. You also did mention about the interlinking expectations and the possibilities as well. Just was curious, could there be any timeline where we can see UPI and FedNow getting linked, and what could be the motives that we can, or motivations that we can look at for such a linkage?
Yeah, so that's what I was saying. Right now, we just don't have enough banks connected to make it a full service product. Now, we do have a private sector real-time payments, which is another thing that UPI should be looking to connect to, not just FedNow. That's up and running, but it doesn't have quite the same number of banks, but it has all the largest banks. We have a lot of the large banks, but not necessarily all of them on the FedNow network. So the whole value chain is when like with UPI, all the banks are connected. And when they're all connected, you can move a payment from one bank or another person easy. But if those banks aren't connected, the payment goes nowhere. And so the value proposition just isn't quite there yet. So that's why what I try to convey to everybody is the Federal Reserve is fully behind the global, faster, cheaper payments and connecting these things. But until you have a functioning domestic payment network, there's no value proposition in connecting. It's just not going to do anything. So that's the critical thing I try to stress. You just have to give us time to get ours up and running. There is the real-time payment system in the private sector in the U.S., but again, you're not going to get the ubiquitous reach because they only have about 600 banks attached to that one. So it's just going to take time because of our unique situation with 9,000 depository institutions.
Thank you. Indeed, sounds very much a future we can look forward to when the two systems can talk to each other and more banks will be on board on both sides as well. You know, Governor, in the Indian context, we have many fintechs, and many of them are present here as well. And we have many of the startups who are getting into the financial services space. And they are always a little uncomfortable when it comes to the regulatory and the supervisory expectations of central bankers. I am from the Reserve Bank of India, so sometimes they do have a little bit of hesitation to come close to me as well. So that's a concern and fear they have. But no, the banks and the well-established traditional lenders, in the Indian context, the non-banking financial companies, they are used to the central banker being there, regulations being there. And they feel that to have a level playing field, even the fintechs could probably have to be regulated more closely. One of the things we have been looking at is to have some sort of a self-regulation. So by setting up a self-regulatory organization, it should be set up by the fintechs as well. Now, Governor, you were mentioning about the huge presence of depository institutions. Many of them are massive in terms of size and operations. What do you have in terms of guidance and suggestion for the fintech sector? How do you think we should approach them? What do you have as a guidance to them, if you could just mention?
Yeah, so typically banks do a wide range of financial services and activities. And when you regulate banks, you have to kind of take the whole package into account. Fintechs often will take one slice of an activity that a bank does. It's not really a bank because it only does this one piece. Now, one of the principles in bank regulation is typically the idea is same activity, same risk, same regulation. Whether it's a fintech or a bank, if you're doing this activity, you should be facing the same kind of demands from regulatory and supervisory structure. So I think that's the first thing you have to remember. If you're doing something that a bank does and you're doing it with the same risk, don't be surprised if you're expected to have the same regulatory structure and compliance. But there is that difference I just mentioned where banks are a bundle of activities, and you often have to take into account how those different those variety of activities are interlinked in terms of the way it affects the safety and soundness of a bank that you don't necessarily have to worry about with fintechs. So there is some scope to have some slightly different approaches to the banks versus the fintechs, but I think this general principle of same activities, same risk, same regulation kind of applies around the world.
It's really wonderful to hear these views, Governor. You know, the Global FinTech Festival is in its 5th edition and it has been in Mumbai so far. And going by the word global as part of the name, probably very soon we will be short of space here as well, and we might look at coming to Las Vegas or somewhere for the next edition of the Global FinTech Fest. That will be truly global, and will also definitely add the vibrancy and the mischievousness that is there attached to the GFF. So that's what we are looking forward to. In a short time, Governor, you have really taken us through the landscape of payments in the US. You have put all your knowledge and wealth behind telling us your perspectives. And you have also given a positive hope to all of us present here that we will see the linkage happen between FedNow and UPI. Maybe it may take a little while, but we will hope it happens faster, especially for many of the Indians there and the monies that are going to come in from there. It will become faster, cheaper, and quickly as well. Many thanks for your presence here. And ladies and gentlemen, let us give a big round of applause to Governor Waller. We wish you many more visits to India and to GFF going forward, Governor. Thank you very much.
Thank you very much for listening. Take care.
Check. Thank you very much indeed, Mr. Vasudevan, and thank you very much, Mr. Waller. A very, very insightful discussion. We're going to request you to come together for a quick photo op. I believe the discussion also set the tone for our next edition, a very next exciting edition for the GFF as well. But that being said, ladies and gentlemen, let me also inform you all that our next session will begin after 15 minutes. Let me remind you once again, in fact, the next session will feature another celebrated leader. We'll be having Ms. Tan Su Shan, who will be joining us. She's the Global Head of Corporate and Commercial Banking, DBS Bank. She's our next speaker right here. So we're going to get our next session started only after 15 minutes. Meanwhile, I'm going to share a couple of important announcements for all of you about all that's taking place at the Global FinTech Fest. But for those who are keen to also participate in other sessions, please do take a look at the agenda. We've got parallel tracks, we've got parallel sessions running across different halls as well. So please do be sure you're taking a look. If you haven't, then go ahead and download the Global FinTech Fest app. The app has all the details, right from the delegates to the speakers. You can get to connect with the fellow peer members. You'll get to also understand all the relevant sessions that are starting on time. So please do be sure you've downloaded the app. Meanwhile, our next session will only begin after 10 minutes. Thank you.
sunshine and rain. Some things don't change. Thinking about the days we were younger. Innocent in our ways, we were dumb, girl. Nothing really mattered. I could always count on you. We were young, girl. The touch will leave me breathless, so let me give it back to you. And maybe I want love, and maybe I want
the devil's in your mind. Regrets, you cannot just the past, it's gone, now don't. Living with an angel in your heart, angel in your heart. It's hard with an angel in your heart. It's hard, angel in your heart. It's hard with an angel in your heart. It's hard, angel in your heart. It's hard with an angel in your heart. It's hard, angel in your heart. It's hard with an angel in your heart. It's hard living with an angel in your heart. It's hard when the devil's in your mind. Regrets, you cannot just the past, it's gone, now don't. Living with an angel in your heart. Angel in your heart. It's hard with an angel in your heart. It's hard, angel in your heart. It's hard with an angel in your heart. It's hard, angel in your heart. It's hard with an angel in your heart. It's hard, angel in your heart. It's hard with an angel in your heart. It's hard. With an angel in your heart. It's hard with an angel in your heart. It's hard, angel in your heart. It's hard with an angel in your heart. It's hard. It's hard with an angel in your heart. It's hard.
Check. All right, ladies and gentlemen, I'd like to also inform you that our next session is all about driving a culture of innovation and digitalization by leveraging new tech such as Gen AI and DLT. And we'll be having the presence of our very esteemed speaker, none other than Tan Su Shan, Global Head of Corporate and Commercial Banking, DBS Bank. Well, let me inform you that this session is about to begin in the next couple of minutes. But before that, I'd also like to inform you about certain other activities that are also taking place at the Global FinTech Fest, which is why I'm going to urge all of you to go ahead and download the app. Please do so that one, you can get access to all the master classes that are taking place. In fact, these master classes featuring some very important topics and leaders is actually open to all. So you can go ahead and be part of these master classes during the next 3 days. That being said, we also have the Night Fest. This edition, we decided that the networking shall be open for all. So what we've done is we've curated something called as the Night Fest, and we have 4 amazing partners who are doing this Night Fest across 4 different venues. Let me again remind you that the Night Fest begins at 7 p.m. And please do take a look at the app because we have some interesting venues such as Social, Soda Bottle Opener Wala, Toast and Tonic, and Taftoon. So these four amazing venues or restaurants will be hosting the Night Fest, the networking. Let me tell you, it's a first come, first serve basis. So 7 p.m. onwards it is, which is why I'm going to urge all of you to ensure that you are part of the Night Fest. It's open for all. At the same time, we also have a lot of round tables taking place. So along with the master classes, there are also round tables taking place. All the details are available in your app. So if you've not downloaded the app yet, go ahead, download them so that you'll get an access to the topics, and accordingly you can choose the venue and be part of these relevant master classes. At the same time, we also have the CEO's dinner today, which is by invite only, but tomorrow we have the Global FinTech Awards. That's something I'm really excited about as well, because this time the awards is about to get bigger and better. And of course, we will be inviting all of you to be part of the Global FinTech Awards that will take place tomorrow evening. All these details and more, I'll keep coming back with all these nudges, of course, for all of you, but please do be sure you are able to access all the details on the app. That's where you'll get the access to all the speakers who are on board, or for that matter, all the peer members who have registered. You'll get to also network with them. And you'll also get to access a lot more initiatives across the expo. Please note that the expo is taking place in the two halls. One is the pavilion, which is on the ground floor, and the other, of course, is right across in between Jasmine 1 and 2. So please do be sure you're able to access all these initiatives, all these amazing features at the Global FinTech Fest 2024. That being said, we're awaiting the presence of our next speaker, so I'm going to request you to please oblige with us. Please be seated, be inside the hall. We'll get our next session started within the next couple of minutes.
see me again. Said you got a new lover. And here's where it is. But I'll be singing.
All right, ladies and gentlemen, we're about to get started with our next session. So first up, I'm going to thank you all for your patience. Thank you for staying seated and staying inside the hall. As for those who have just entered inside the hall, I'm going to request you all to please very quickly take your seats. Now, before we march ahead, I'd also like to thank our registration partner for GFF 2024, M2P. We'd like to thank the FinTech VCP partner, Westbridge Capital, our platinum partner, Financial Times, gold partners, MobiQuick, MongoDB, Aditya Birla Capital, being our silver partner, and we'd also like to thank Pure Storage for being our silver partner, and our credit innovation partner, Experian. That being said, we're about to deep dive into our next session. As I mentioned earlier, our next topic of presentation is all about driving a culture of innovation and digitalization by leveraging new tech such as Gen AI and DLT. Again, a very pertinent topic that's being addressed at the GFF 2024. And joining us this morning, we have another prolific leader who comes with a prolific experience in consumer banking, or for that matter, wealth management, as well as institutional banking. And she's currently enhancing the bank's tech capabilities. And in a short while, we're about to have the presence of none other than Tan Su Shan, who's the Deputy CEO and Head of Institutional Banking, DBS Group. So in the next couple of minutes, my team is going to give me a quick heads up. Meanwhile, let me give you all a heads up that the next session is about to begin. All those who have just entered inside the hall, very quickly, please take your seats. All right, ladies and gentlemen, on that note, we're about to get our next session started. Yes, this is going to be my final announcement because, ladies and gentlemen, up next, may I please invite on stage Tan Su Shan, Deputy CEO and Head of Institutional Banking, DBS Group. Well, let's welcome her with a huge round of applause, ladies and gentlemen, Ms. Tan Su Shan. Thank you so much.
Thank you. I just arrived this morning from Singapore, and just this week, a lot of Singaporean ministers and Indian ministers were talking. A big topic was digital payments. A big topic was how the two countries can work together better. So, today, I'm here to share with you DBS. For those of you who don't know, DBS is the Development Bank of Singapore. We call ourselves DBS now because we're now a commercial bank, a big Asian commercial bank, the biggest in Southeast Asia. But I'm here to share with you our digital journey, how it began, what we had to do. After all, banks, are not like fintechs. Banks are big. We're very heavily regulated. We serve millions of people, and it's not easy to move. So today, speaking at the Global FinTech Festival, thank you to NPC and the sponsors. I'm here to share with you how we did this transformation inside out. So, firstly, it begins with the body. And what is the body? The body is the technological framework. Second, it's the mind. What is the mind? It's basically the people in the organization and how we've changed as an organization in the way we treat our customers, putting the customer bang in the center of how we look after them. And thirdly, the soul. And what is the soul? The soul of a company is essentially its culture. It's the business practices, it's the habits, it's what binds the employees together as a company with a common purpose, a common vision, and a common behavior. So let's unpeel this. So being technological driven, what does that mean for an organization? Most banks used to have big monolithic systems, right? And a lot of them used to outsource it to big tech companies. We were no different. And what we did very early on was we looked at all the various systems we had, and we realized, what is banking? Banking is actually people and technology, right? It's HR and tech. My CEO, Piyush, likes to call it HIT, HRIT. And that's what it is. It's bringing the best of the people, combining it with the best of your technology, and giving your customer the best experience. But if you outsource all of it, how do you control it? So we decided we should really insource a lot of our tech. We used to be 85% outsourced. We're now more than 85% insourced. And then we looked at our tech stack. From monolithic, we went to microservices, like all good tech startups, like all good fintech companies, going straight to the cloud, but also understanding a balance between going to the public cloud, being agile and quick, and balancing that with the resiliency that comes from being a big bank, and also the resiliency of, frankly, the big monolithic systems. And so having that hybrid, we came up with a hybrid cloud solution. We call it our hybrid private cloud, where we still use the best of the compute of the public cloud, but we have a paved gateway to make it secure for the bank. And then, of course, API everything. In this respect, we were lucky. We came up with our API suite and our API protocol. We've got several thousand APIs. And we came up with it very early in 2016. So that by the time COVID hit, guess what? We were ready. Because in 2019, I told my team, hey, let's have this API war cry. Let's get as many of our clients as possible, as many of our corporate clients, big and small, onto our APIs our APIs to look at balance, to look at transactions, to make transactions, to make trade, inter-country trade, and to do any kind of transactions. So when we came out with our API suite, we called it Real-Time API by DBS, Rapid for short, and really getting our CTO to talk to the client's CTO and getting our API suite to customers and enabling them. So for example, insurance companies, right? When you miss your flight, normally, well, if your flight is delayed, normally it's a slow form filling exercise to show your ticket, show that the flight was delayed. But if you've got a real-time connection, then if the flight's delayed more than 4 hours, basically the customer of the insurance company can immediately send through an API call a claim. And we can verify all the information and send the claim back immediately, instant claims. In India, for example, we've enabled logistics company, truck drivers, etc., to track the truck drivers, where they're going, help them to pay for the petrol, get them paid per trip, cashless, data-driven. And I think this has been a big game changer for us. And then getting tech talent. We have 12,000 engineers working at DBS, and we have less bankers. We have probably like 8,000 bankers. So we like to say that we're a bank, but we are really a tech-enabled bank. We've got more engineers than we do bankers. And frankly, that's the way the business is going. And to be honest, a bit of gender imbalance in the past, especially in the STEM front. And so we started to have hackathons for women only, women engineers, so women in tech, hackathons for women, and a lot of dedicated campaigns to try and hire through AI, Gen AI, and crowdsourcing great ideas from the front. Looking forward, what are the few things that we're looking at to get still in the forefront of technology? And here, there are two buckets. One, the hot topic, generative AI. And the second is the blockchain. So let me unpeel this. I don't know if any of you read the FT yesterday, but the head of Microsoft, the CTO of Microsoft, said they would stop hiring engineers that don't compute with AI by the end of this year. I thought that was quite a seminal statement to make. And I wanted to unpeel this generative AI. Frankly, AI is not new to any of us. Right? Everyone's been using AI for years. At DBS, we started this AI movement probably 2016, 17. Actually, no. We started this in 2014. I was running wealth management. My team came up to me and said, let's use AI to help our wealth bankers be more contextual in their advice to clients. And I said, okay. But it's 2014. Large language models were not as developed. And so there was a lot of false positives. And frankly, we had to do too much work to teach the machine, how to read, how to write, what to read, what was more important. Was it time? Was it what the Fed said, what the BOJ said? It was very difficult. So that was our first experiment, and frankly, it failed. But fast forward now, with LLMs where they are, and with generative AI, which I think is incredible because the generative AI takes a lot of toil out of the system, right? It reads stuff, it synthesizes, it summarizes, and then it generates it in a way that you want it to generate. You can, make it shorter, make it longer, give me a photo, get it to illustrate. I tell you, my RMs are saying to me, my bankers are saying to me, wow, the pitch book it generates, excellent. The call reports that it does, excellent. The way it screens for adverse news or updated corporate news, fabulous. So at DBS, we've come up with a way to look at generative AI both vertically and horizontally. So vertically, we said, what are the vertical use cases, right? And this is role-based. So if I'm a banker, a relationship manager, what can I use generative AI for? Pitch books, client screening, ideation, right? And if I'm a call center employee, what can I use it for? Copilot. When the client calls, hey, my card is missing, immediately it searches for the client information, the transactions, and you can answer everything. The first call resolution with this Copilot went up very sharply. And in fact, now most of our calls are resolved in the first call. So when that happened, I said to my team, hey, can you even have no calls? Because if your generative AI is so good, then frankly, it should go to the client automatically in their post-login to tell them, oh, I can see you lost your card, or I can see your transaction got stopped. How can I help? Right? And for software developers, whether it's GitHub Copilot, a lot of the code now, testing, product acceptance testing, UAT, SIT, can be done by generative AI. And in fact, people say the quality of the code is pretty darn good. And especially if you're trying to move from the mainframe to micro to new stack, how many young engineers know how to do COBOL? Very few. But the generative AI can help. So many, many use cases on the vertical side. And then the horizontal, what we call mile wide, inch deep, is basically what everybody in the organization can use. And so we call this some sort of enterprise knowledge base, right? If you think about it, we have 40,000 people working for us globally. Some are new, some are old, some know this, some don't know this. Everyone's knowledge is different. But when you have a safe place for them to go in and question, and they can get exactly the precise answer that you need, gosh, that saves you a lot of time. And so in terms of building use cases, in terms of getting the right guardrails out, this is important. Because with the use of generative AI comes a lot of questions around, is it dangerous? Does it hallucinate? Is it poisonous data? And how would it make us, give the wrong advice? Or worse still, are we using data against the customer? And here, we have come up with something called a pure framework, P-U-R-E. That means whatever data we use, it has to be pure. And what is pure? Pure means P, there's a purpose to it. U, it's unsurprising. Or rather, I say unembarrassing to the customer. And R, it's respectful to the customer. And E, it's explainable. So with this pure framework, our governance, our data stewards, we've got a whole team who do this, right? We'll make sure that the models that we use, the data input, is it correct? Is it pure? Is it explainable? Is it embarrassing? It's not embarrassing. We make sure we've got these guardrails in place. And one of the things that we still do is we have the human in the loop, right? So don't worry, whilst jobs are going to change, humans ain't going to go anywhere. Humans will still have a role to play, right? And so having that human in the loop is important. The other sort of forward-thinking tech I wanted to talk about is the blockchain. Just a quick show of hands here, I don't know. We've come through a crypto winter, right? Everybody who, the crypto market sizing was 3 trillion at the peak, went down to 1 trillion in the crypto winter, and now back up to about 2.8 or so trillion. And crypto might be very volatile, but for DBS, the real value comes from the blockchain, the DLT. The DLT technology, we believe, has a real use case. And so crypto, winter or not, we want to be at the forefront of using the blockchain for financial services. So we started this, actually we started doing this because we saw a lot of our consumers, especially our younger clients, buying Bitcoin and Ethereum using their credit card. And then we thought, oh, do they know who they're transacting with? Do they know whether it's a safe exchange? What if they've been scammed? What if, they lose their money? And where do they custodize their coins? So we thought, hey, DBS being one of the world's safest banks, we should offer them this custody service. So we started with the custody service in mind. And then when that happened, we said, oh, maybe they want to trade digital tokens with us. Maybe they want to go on-ramp, off-ramp. Maybe they want to have fiat. So we said, okay, we'll build an exchange. And then we realized, if we're going to go and do blockchain, we better know how to originate, which means if in future financial assets are going to get tokenized, then we better know how to tokenize them, right? And that means having this origination and issuance capabilities. So that's where we started. We did the whole suite from origination and issuance to trading and execution and custody, as well as settlements and clearing. So we've got the whole suite. Honestly, the issuance and origination part has been very slow. We did our first bond, we tried to do real estate. It's been very slow because of the lack of market makers, but it's there. And for trading and execution, we've gone up and down with the market, but what has been interesting for us is really the use cases for the DLT technology in areas of purpose-bound money, cross-border payments, and tokenization of treasury functions. So let me unpeel that. So we started a joint venture with JP Morgan, Temasek, Stanchart, and other banks. It's called Patio. And this is a blockchain-based cross-border payments platform. Why is it useful? Well, number one, it's 24/7. Now with platforms, everyone's 24/7. You want to pay cross-border and not wait for banks to open on Mondays, right? So 24/7. It's atomic, which means it's atomic settlement, it's instant. And it's pre-validated. That means both sides can say, this is compliant, it's AML, KYC checked, we can go ahead and pay, go ahead and receive. So that's efficient. So we see that as a great use case. And the other is tokenized treasury. So 2 weeks ago, my colleagues, seated right here, announced that we tied up with Ant Financial to help them to tokenize their treasury tokens in order that they can combine both their treasury tokens for 24/7 settlements. It enables them also to do liquidity management, virtual accounts with all their different merchants, and 24/7 settlements. So I see this as a great use case as the world gets more digitized, as platform companies get bigger, as more and more trade gets done digitally. This will be a great use case. Another, purpose-bound money. Governments, when they give out vouchers or when they give out aid packages, they want to make sure that the money is being put to good use. So Singapore government, for example, gives out a lot of help to students. You don't want the students to start using that money to buy beer. But you can make the purpose-bound money be specific for specific use cases. You can only buy books or technology or education stuff. So I think the blockchain use case is exciting, it's growing, and we want to be at the forefront. And you have to work with governments, CBDCs as well, stable coins now. There's more and more of a growing interest in this whole blockchain ecosystem. And now with regulators on board, central banks on board, I think this use case could start to grow. Okay, let me get to the middle of the middle segment, which is putting the customer first. Everyone says this, right? We learned from all the best tech companies. They're all seeing things from the customer lens. But let me tell you, for banks, we're not a pure digital business. We're a phygital business. We've got humans, we've got branches, and we've got digital offerings as well. But guess what? The digital branch is the biggest channel. right? For everyone. And for us, being an Asian bank, we wanted to figure out how do we bring an Asian level of service standards to our customers. When I first joined DBS in 2010, we were rated the worst bank for service in Singapore. And as Singapore's biggest bank, that was not good. So I remember we were hauled to a place in Changi, which is near the airport, called SQ, Service Quality, run by our friends from Singapore Airlines. And they are well known for giving the best service in the world. And this is where we learned what it means to give Asian level of service and hospitality to our customers, whether physically or digitally. So we came up with this thing called RED. I'm wearing red. Red is our DBS corporate colors. But RED stands for respectful, easy to deal with, and dependable. That's all you need. You need to be RED to your customers. You need to be respectful, easy to deal with, dependable. So we don't do anything today without putting the customer in the center. That means in our meeting rooms, we've got a chair that's just in red. And that chair is the customer advocate. And we don't do any new products without what we call the 4D framework. And what is the 4D framework? It's putting the customer in the discovery mode. Right? What does customer want? Does he want a mortgage? He may not even know what a mortgage is, but he wants to buy a house. So start with the journey of buying a house, right? Does the customer want insurance? He may not want insurance, but he wants to protect his loved ones. Start with that journey of protecting his loved ones. So doing the customer discovery is important. In fact, sacrosanct. Then you code and you deliver. You code and you develop, and that's the second D. And then you deliver. Then you define, and then you deliver. So this is the 4D framework. Sorry, I should have been discover, define, develop, and deliver in that order. And very often, we all have unconscious bias, don't we? We will all say, I know what the customer wants. But very often, the data might tell you otherwise. Let me share a story. When it comes to foreign exchange, we all thought the client just wants a cheap rate, right? Just give them a good offer online, they'll take it, right? No. In fact, we did a lot of A/B testing, always be guided by the data. And we realized that the data was telling us it wasn't just the price, it wasn't the what or the how much or the who, it was the how. It was how you communicate to the clients. If we just flash, hey, cheap FX rate, we had so-so response. But if we flashed, hey, we missed you. Come back. We haven't seen you in a while. Here's a great rate to get you back. That worked best. So another way that we've changed our body was we've come up with something called managing through journeys. This was a lot harder to do. Here, we manage through horizontals, not verticals. And what does that mean? It means having different parts of the bank, be it product, be it the relationship manager, be it tech, be it ops, be it compliance, whatever, come together in a horizontal organization, and everyone is united by a common goal. And so if you manage through journeys, then a journey could be account opening, it could be customer transaction, it could be retail services, it could be documentary trade, whatever the journey is. Come up with the journey, and then we manage through dashboards. We have drivers, levers, and outcomes. And if your driver and your lever and your outcomes are not working, we keep changing. But everyone in that horizontal group is driven by the same outcomes. We want the customer turnaround to be lower. We want the customer satisfaction to be higher. We want more new clients to come onto the product. We want more new clients to come to the bank, etc., etc. So when I go for these MTJ meetings with my group, we use dashboards. And they use the dashboards to tell me, this is the outcome, good, bad, what's the lever, what's the driver, is it working, not working? So completely different way of managing, completely different way of evaluating our staff. And you know what? It's really broken the vertical silos between businesses and tech and ops. It's made everyone just focus full-heartedly on customer outcomes, and everyone aligned. It's been very difficult, but I think it's gone a long way in helping us reimagine the customer journey and using data and dashboards and control towers and using innovation and constantly reiterating, experimenting, and getting better. Last but not least is the culture. So, what is culture? Culture is a common behavior, of your organization. It's what binds the teams together. It's a common purpose. But creating the right culture is so important. And it's harder when you have 38 to 40,000 people. And we wanted to create a startup culture in a 38 to 40,000 strong organization. How do you do that? It's so hard. And so we said, well, I remember my first meeting with the design team. And they said, Sushan, you're such a hippo. And I said, what? I'm fat, what? And they said, no, a hippo, H-I-P-O, is the highest paid person in the room, or highest paid person in the office. And you're behaving like one. Because I said, my UX has to be red and black. That's the DBS colors. And they were upset with me because the human-centered laboratory was saying the customers didn't like red and black on their screens. They liked yellow and green. And so they went to great lengths to show me what the human-centered design lab data was telling them. And I said, by all means, kill red and black. Go with what the customer wants, right? And so this is where we came up with something called the raccoon. See the picture on the right? Looks like a raccoon, but we spelled it with a rack, as in wrecking ball. Because we wanted our teams, the young people in the room, the people who face the customers every day, the young technology guy, right, the analysts, the smart engineer, whoever, to have a voice in the room and not be dominated by the hippo or by the boss. And so if a young person were to come up to me at the middle of a meeting and say, I want to raccoon your idea, it is the safe space to say, go ahead, wreck my idea, raccoon me. And we found that it was so effective because when everyone said, hey, I have a raccoon moment, we give them a voice. And if there are no raccoons, we insist, come on, guys, raccoon us. And with every meeting, we have a meeting mojo. A mo is the MO, meeting owner. A Jo is a joyful observer. Normally, the Jo is a virtual participant. The Mo is the person that calls the meeting. And this is where we try to make the meeting more inclusive. The joyful observer could say, nah, too much dominance from one person, the boss, tone down, more voices in the room. And he or she will have every power to do so. And the Mo has to stick to an agenda and a timeline and be inclusive and encourage dissent. Creating a learning organization. We've got a lot of different ways of learning, different campuses, and frankly, very unconventional ways of learning. When we tried to get everyone to learn about AI and machine learning, it was during COVID. You know what we did? We did this thing. I can't code. So every one of us, we took part in something called the Deep Racer, AWS Deep Racer game. And we were taught how to cut and paste code, stick it into your car, and after the races you go. And that's when we learned that you could use code and get the machine to learn, there's a left turn there, there's a right turn there, and get your car to go faster. And we encourage failure, we encourage innovation, we encourage to crowdsource ideas. We've got failure awards, Daredevil awards, etc. And it's this culture of innovation and ground-up innovation that really, puts us ahead. Finally, It's what we call our pride culture. Actually, this is a common thing. This is something that hasn't changed. This we've had for years. And being a purpose-driven organization, pride, right? Purpose, relationship-led, innovative, decisive, and E, everything fun. We couldn't find something that began with E, maybe enjoyment, but not many organizations put fun as something in their culture, but we do. Because you want people to have fun. We spend so much time at work. We want them to be able to create memories that last a lifetime. So this is important. So I will end with a slide that I love, which is a quote from Peter Drucker, which is, culture eats strategy for breakfast. You can have the best strategy and the best team, but if you don't have the right culture, you're not going to make it. So at the end of the day, create the right culture, create the right purpose and vision for your team, and you'll do really well. So with that, thank you very much.
Thank you very much, ladies and gentlemen, Ms. Tan Su Shan. And I'm sure many of us also will reckon with the raccoon movement. And most importantly, I'd like to thank her for sharing her passionate thoughts to all of us. With that, ladies and gentlemen, what we're going to do is take a break because our next session inside the hall will only begin at 1:30 p.m. Our next session features Mr. Kunal Shah, founder CRED, and Mr. Shailendra Singh, managing director, Peak XV. So they both will be here together, deep diving into a conversation. Please note, the next session will take place here exactly at 1:30 p.m. Please do be sure you're taking a look at the expo area. Please do be part of the sessions taking place in the adjacent halls as well. Also, we've got 19 reports that are being launched. Some of the reports can be accessed on the screens outside. Please go ahead, do that. Take that little break as well. Connect with your peer members. See you all exactly at 1:30 p.m. Thank you. Check. All right, ladies and gentlemen, I believe there's a slight doubt in the air. Let me just clarify for the benefit of the audience members here. The next session directly we're starting is at 1:30 p.m. featuring Mr. Kunal Shah and Mr. Shailendra Singh. So the 12:45 p.m. session that is probably featuring in the agenda, please note, right now that session is not happening. We will directly begin with the 1:30 p.m. session. In case if it's still featuring in the app, we'll ensure we at the back end make the amends. But please note, 1:30 p.m. That's the next session. Thank you so much. Growth, or for that matter, profitability, strategic international expansion, and key challenges that they face. Now, earlier, I had mentioned that we've got 2 speakers, but let me tell you, as you see, there are 4 seats. We will be having 4 speakers coming together to deep dive into the session. Let me remind you once again that our next session on the future of fintechs will commence within the next few minutes. I'm going to once again request all of you to continue being seated inside the hall. Thank you. Now, before we march ahead, we'd also like to take the opportunity to thank our partners, our FinTech Breakthrough partner, Paytm, Diamond partner, PayU, Beer Booth partner, Cred, Gold partners, Appreciate Wealth and Grameen Foundation, Silver partners, Finerkane and True Balance, and Spend management partner, Zaggle. That being said, once again, let me remind you all that throughout the 3 days of GFF 2024, we'll have close to 19 reports that are being launched. For those who wish to access all the details, we have a screen just outside, and you can also get to access these reports under the Thought Leadership Reports section on the app, or for that matter, on website. So please go ahead and also download them. And at the same time, we'll have the Night Fest. That's the networking arena that we've curated for our members of the audience. So that'll begin at 7 p.m. this evening. We have 4 interesting and 4 amazing partners, and which is why we've got 4 amazing venues for networking that's starting at 7 p.m. Let me remind you, it's first come, first served basis, which is why it's crucial that you're there at the right time, at the right venue. We've got venues such as Social, Soda Bottle Opener Wala, Toast and Tonic, and Taftoon, that is hosting the networking this evening as part of the Night Fest. At the same time, we also have some very interesting master classes, so please do take a look at the app. We've got interesting topics for the master classes, so that while it's open for all, you can accordingly access these master classes and the roundtables as well during the 3 days of the conference. But that being said, please continue being seated here, because we've got an action-packed conversation coming your way, featuring 4 amazing leaders as well, and it's all to do with the future of fintech. So that session will commence within the next few minutes. Thank you. All right, ladies and gentlemen, with that, we're about to get started with a very engaging discussion on the future of fintechs. Once again, I'm going to request all the ones who are still standing in the aisle area, all the ones who are standing behind, please come forward, take your seats. We'll also move forward and deep dive into our next session. We'll get to learn from the industry leaders about navigating regulatory frameworks, or for that matter, leveraging emerging technologies and the importance of building robust governance structures. So with that, let me go ahead and invite our speakers on stage who will be part of this amazing session. First up, we have with us Mr. Kunal Shah, founder Cred. So I'm going to invite Kunal on stage. Up next, let me please invite Mr. Shailendra Singh, Managing Director, Peak X3. I'd like to also further invite Mr. Dilip Asbe, Managing Director and CEO, NPCI, and Mr. Amrish Rao, CEO, Pine Labs. I know we're talking about future of fintech, but in present tense, can we have a round of applause as well? Ladies and gentlemen, let's welcome our behemoths and amazing leaders of the industry as they come together. Thank you so much for joining us. And with that, over to you, gentlemen.
Thank you. Welcome, everybody. I'm hearing that there is a massive queue downstairs for registration, and all of you have managed to come in early, so thank you for that. We have an interesting panel over here. Each of these guys are older than the word fintech exists. And they have been around constantly calling it new category every now and then. But welcome to the panel. I'm going to be the host, so no questions can be asked to me. Let's start with...
That depends on a panel. Do we behave as good boys or...
We'll see. We'll see. We'll start with you, Shailendra. Can you please demystify what, according to Peak 15 or according to you, is the word fintech? And how do you classify this industry in the way you'll see it?
Kunal, thanks. Hi, everyone. I'm Shailendra Singh. I'm a partner at Peak 15. I started at the firm, earlier called Sequoia India. I started at the firm in Jan 2006, so it's now 18 plus years of doing this. I've known both these gentlemen on my right and left for over a decade, and I'm very privileged to be shareholder in both companies, just sharing a bit of context. Kunal, that's a very loaded question, so thank you, everyone. Privileged to be here. Very loaded question. How do we think of fintech? Look, there's two big founders sitting on my either side, and the head of our very esteemed regulatory of NPCI. So I feel we should ask this question of other people. I'll just give my quick context of how I think about it as an investor. I think fintechs try to offer 4 key propositions, and all companies fall in somewhere in this bucket. And at least that's how we think of it. We think of flow-based businesses, which are payments businesses, which provide the proposition of moving money or the transfer of value. We think of stock-based businesses, which have balance sheets. They may involve lending, NBFCs, banks, and so on. We think of software-based businesses, which provide infrastructure for everything else to happen. And we think of workflows as a key enabler. So workflows might be enabled by software. Workflows may involve the flow of money, or workflows may involve the creation of a balance sheet, etc. But all the propositions eventually boil down to these 4 areas. And we constantly look for new ways that companies can address the needs of their target customer. It could be consumers or merchants that will try to build around these 4 vectors. And India is a very special country because of all the innovation that happened with NPCI. If you haven't seen Amrish's tweet from this morning, I think it's become the viral tweet of the day. So I think India is a very unique country where our regulators sort of provide a pretty insane product roadmap themselves with everything that's possible in India. And then I think the fintech ecosystem or the startup ecosystem can build on top of that. So that's my quick thoughts, Kunal.
Perfect. Amrish, I'm going to come to you last. I'm going to ask Dilip this question. Dilip, you've been now in NPCI for 15 plus years. You've seen this ecosystem develop right literally on the front row. And I'm curious to get your perspective that like we are at 2024, 10 years from now, what all possibilities we can imagine in a metaphorical way. You had spoken to me about tokens, you have spoken to me about how we can do many things significantly more efficiently than they are done today. But can you just give a vision, and it doesn't have to be all from NPCI, like if you say India FinTech, we are in Global FinTech Festival 10 years from now, what all is possible?
So 10 years is fairly long, but I think that, when you look at the current, and thanks to RBI has been working very hard to see how do we increase the speed of money, right? And I believe the similar principle what happened with money will happen with the other assets. That's given, right? Now the question is whether tokenization is the way out or there is some other technology. I don't know at this stage. But I believe as of now that looking at the way things are happening in the Western world, it might take that route, and the time, effort, and the cost would actually dramatically change to move the other assets like money in due course. RBI has started the CBDC pilot. That's the first tokenization effort of money. And I believe that, unlike the Western world, where crypto powers the decentralized finance, India has an opportunity to create a CBDC-powered decentralized finance system.
And just to double click on that, what does that mean? Do you think that we could potentially tokenize land records, fixed deposits, or do smart contracts?
Yeah. I think when I said that everything can be movable and everything can be digitized, it can be everything, virtually everything.
It's very powerful. Amrish, I'm going to refer to your tweet for a second. You talked about the thing that NPCI's innovation roadmap, but can you talk about the impact? Pine Labs has been working on payments for a very long period of time and has done not just innovation in terminals, but Pine Labs is like maybe 20 other businesses within the same thing. Can you talk about what is the impact of these roadmaps on the business, and how do you see the entire merchant ecosystem completely change because of that?
I think that tweet, when I had sent it out, I'm obviously sending it out just praising what NPCI has done for the country. I mean, just look at what's happening.
I hope everybody understood it.
If you look at what's happening just outside of where we are and getting out here, took me an hour and a half from Bandra West to come here. At the same time, when my mum wanted to get her car be ready for FASTag, I actually was out of the country and I could finish that transaction less than 1 minute. And that was really on the backs on the DPI infrastructure, what NPCI has set up, what the BBPS environment has created. We at the end of the day have the responsibility to build on top of that. Nowhere around the world does a not-for-profit body or a government institution create the highways so that you can run businesses on top of that. In most cases, a founder has to go ahead and build the highway and then run the car out here. We've been given a gift in our country where the highways have been created for digital payments, and we as founders really need to run businesses on top of that. Look, I'm actually very proud to see the recent result which PhonePe talked about. And PhonePe talked about an astounding result where this was a company which has only been focused on DPI, build businesses around DPI, and have been able to create a business of scale and size. Honestly, we at Pine Labs, we take that approach into everything that we do. We want to follow the trend, follow the consumer, and follow the merchant. And if we can build value-added services using the existing infrastructure which has been created, I think we'll come out good. So that's the approach which we are building it. So Dilip, all praise to what you guys have been doing.
Dilip, just to be supportive of him, we are all fans of everything that NPCI does. It just keeps us busy all the time. And we are. I tell my team that our 2 years roadmap is defined by Dilip. They can talk to me for the year 3. Shailendra, I'm going to come back to you. You've been investing in India for 18, 19 years now. Can you just give us a perspective of what have you seen change? And can you also give us from your vantage point, a decade from now, what does India look like? And it's very hard for a lot of founders who are building to just have this macroeconomic perspective of what you have managed to see from the front row and also kind of imagine for going forward.
Yeah, first, thank you, Kunal. Look, folks, it's been a total privilege to get a chance to partner with hundreds of companies in India over these last 18, 19 years. My favorite anecdote is the year I started investing in India, India's GDP was 850 billion. This year it's going to be 4 trillion. This is GDP, all of India's GDP, 4 trillion. And we are not yet on 2 decades, just shy of 2 decades, almost 4.5 times, 5 times. Digital advertising in India that year was 39 million M. All of India's digital advertising. iPhone wasn't yet launched. I led a small seed investment in Pine Labs in early 2009. I joke with Amrish all the time that my daughter, who's now 170 centimeters tall, was not born then. She's now taller than my wife is. So, basically, our big learning is while things can look a little bit slow, frustrating, sometimes it can be challenging to build a business, a founder's journey is incredibly hard. It is like the toughest job in the world. My favorite phrase to founders is, you chose the toughest path possible in life. So deal with the pain. Sadly, that's part of the territory, and then you got to keep building. But when you take a very long-term, multi-decade view, most people are surprised how big companies can become. I remember in one of our early investment committees on Pine Labs, somebody in the investment committee had said, it would be amazing if the company can get to 10 million in revenues. Okay. only later on to figure out many years later that it would be orders of magnitude bigger than that, right? So I think what happens is when you wear the lens of today, it's hard to imagine what might happen in the future. I think something similar is likely going to happen in India in the next 10 to 20 years. It's very hard to fathom today how big companies can become, but I can give you a very simple mental exercise, very super simple. Let's assume that both these companies here on my right and left can grow 20% a year for 15 years. That's not a lot, 20%, both are growing faster. 20% a year for 15 years is 15 times. 20% a year for 20 years is roughly 38 times. So let's say 15 to 20 years, you could compound that. Each of these businesses would basically be north of $5 billion in revenues in 15 years, approximately, order of magnitude. And a $5 billion revenue company today is hard to imagine, in India. But I think just like we have seen in the last, like I said, 18 years of my time here, I think we are going to be pretty positively surprised. And what Amrish just said about India having the digital public infrastructure and the rails is pretty dramatic. We now invest all over the world, in many parts of the world. We don't see this level of high caliber API infrastructure to do identity or moving money or so many other things like account aggregator and whatnot. I think all the people here are better equipped to talk about them. But these are very profound innovations, and these are only going to make sure that 20% a year can be much faster and likely can keep going for a lot longer. So that's my quick view, Kunal. Sorry for the long one.
But Chandra, I remember I was briefly in Sequoia for 2017, and we had talked about one interesting thing, that there are literally no company with $100 million of revenue.
Yeah.
What do you think is the scale of Indian tech ecosystem? How many companies would be $100 million revenue or $200 million revenue plus in India now?
Yeah, so in 2017, we had only 3-4 in our portfolio that had crossed triple-digit million revenues. I think we are at 45 now. I can only talk about, I think we have better information in our own portfolio. But more importantly, I think about 24 companies have over $250 million of revenue. Now remember, the kinds of companies we back are tech-enabled, so they grow much faster than market. But we are beginning to see really scale companies get built in our region, and then especially here in India. They're not big by India standards anymore. Earlier, our big company was still small by global standards. I think we're now beginning to have companies that are relevant, and the quality of product and innovation is relevant globally. Kunal, you and I keep talking about the fact that a cred-like product doesn't exist in other markets yet. Yep. Amrish, we keep talking about the fact that so many of our products and services are relevant to other markets. And when Pine Labs tries selling in many other countries, they are seen as a product leader, bringing innovation. I think NPCI is now exporting, its software stack to many other countries. And I think it's a matter of great pride that we have this position of product leadership, product relevance, and scale relevance relative to global markets.
Perfect. How many of you over here are founders? Please raise your hand. Okay, quite a few of you. And how many of you are in businesses that has to do with credit? Please raise your hand. Okay, that's quite a lot. Amrish, question for you. Can you give your views on credit and fintech? What do you like and what do you dislike?
Look, I think, one very interesting way to look at that whole opportunity is if you look at what's happening with Nubank, Monzo, and then also with Revolut, right? What each of these organizations have done is started off as fintech, build very strong tech services which can disrupt pockets of the fintech space. And obviously one of the largest revenue pools comes around credit. I really think that that's the formula to build a company which can scale and become huge. One of the other underlying factors which is very interesting in each of the markets that they are operating is the regulator and the government have embraced the concept around digital banks and have actually accepted digital banks quite early. Reserve Bank of India is right now evaluating that space, but as and when that space gets opened up for digital banks to start coming into India, there's going to be a natural progression for Indian fintechs to go into banking-like services and then go into credit-like plays. And then I think the opportunity is just going to be humongous for all founders building in that area. I really expect that over the next few years, there's going to be a new class of banks and financial institutions coming out of India, which will be fintech first. And that's going to open up completely new sets of opportunities for all of us.
Perfect. Dilip, can you talk about the next 5 years of UPI? We have already gotten to 15 billion transactions a month. But we still have a lot of Indians that have still to come on to UPI. We still have credit to take off on UPI as well. And we have all these new services that are getting different cohorts like kids coming in and other things kind of coming in. So how do you envision UPI 5 years from now that we have kind of gotten to this scale? It probably does more transactions than most networks in the world already. How do we see this from here to next 5 years?
So while lot has been done, lot more has to be done, needs to be done, right? That's the way NPCI at least looks at it. And I've spoken about it before as well. We are looking at 100 billion is a possible number that India should look at, right? And I don't know, it takes 10 years, 15 years. But 100 billion is a number, it's a potential for India. And I've done this math before as well, right? The 3x increase in the merchant side, 3x increase in the consumer side, today gives a 9x multiplied effect, right? If you look at the velocity and other aspects. So I think it's a fairly achievable number, but lot more required to be done on that. The credit is absolutely going to be the backbone of this growth. We have launched now Credit Line. Just a couple of weeks back, we released the commercials. And I think the small ticket credit, high frequency credit is going to be really important for us to reach to that particular goal. The second is, I think we are fairly convinced that this recurring payments, the mandate QRs, the EMI QRs, those are the stories which will drive that usage, because today it's fairly tedious and physical process to adopt anything on the outlets, organized retail, unorganized retail. And I think that is the area where companies like Pine Labs have a huge scope to drive a software-driven innovation instead of looking at a fixed infrastructure and those kind of things. I think we keep talking about it a lot, and I hope Pine Labs will drive more than physical to a software-driven approach where it can be contextual, where it can be demand-driven, where it can be real-time, right? I think that's the way I look at it. The third thing, what I look at it is, obviously, while we talk about, today we do about 1 billion consumer-driven transactions, right? And which is 500 million financial, 500 million non-financial. And it keeps running in RBI discussion as well, that how do we actually scale up the capability to process this large amount of transactions. So I think there has to be more efficient way to deal with that. So we have done something called offline transactions and those kind of things. So I think, but we still have to really get it to the scale to drive, the truly decentralized, distributed way. The transactions are happening and we only get to know in a near real-time basis instead of real-time basis. So I think now there has to be a journey from a real-time to near real-time in my assessment, because otherwise the scale what we are staring at, it unimaginable.
Perfect. Shailendra, you talked about earlier when we were chatting about what is the difference between tech, fin, and fintech. Can you just double click on that, and what did you mean by that?
Yeah, so folks, many of you are fintech founders. Look, in our view, fintech is a precision business. Okay, it is not a speed business that you try to blitz scale. So, and in our opinion, what happens is when financial services or fin meets tech, a lot of tech founders build these fintech companies. They try to build them the way of tech, which is grow very fast and raise a lot of money and so on. But actually, those are not the principles of financial services. The principles of financial services are much more precision-centered. And so our view is, fintech should be built with a multi-decade horizon. Fintechs are not normally winner-take-all. All regulators want multiple market participants. They want a healthy, competing set, and they want consumers or merchant stakeholders to be served well by competition. So these businesses have to be built thoughtfully, in our view, Kunal, and not be try to build with blitz scaling or tech-type DNA, but with a balanced DNA. Like I said, we always look for precision in fintech. Sharp proposition. If it's underwriting, very sharp underwriting, disciplined execution, and so on. And we don't look for speed and velocity and that type of mindset in the founders we try to back. So I hope that's helpful.
Makes sense. Amrish, you've seen credit, at least when it comes to merchants, products, services, kind of take off right in front of you, and you see that's kind of multiple participants from banks to now NBFCs and fintechs participating in that. In the ecosystem perspective, like where do you see the largest opportunities still not captured? And when it comes to, let's say, merchants and consumer worlds are still not fully integrated in some ways. So what are the pending opportunities that you see that are still big to be captured?
See, I think, again, if you actually look back into history and see how credit has grown, there are two main, maybe three factors which have the maximum impact on credit. One, speed of credit delivery. Second is cost of credit delivery. And third is the trust in credit delivery. So if you don't know enough about the consumer and if you can't lend to the consumer, there's a problem. If it's taking you too much time and cost to get the money back, credit will not flow. And the similar thing is that if disbursal takes time. Look, it took HDFC Bank 25 years to build a book of the size and scale that they have built. It has taken about 12 to 15 years for Bajaj Finance to build a business of that kind. I think a fintech which can deliver to all of these three areas, which is deliver credit quickly, collections is becoming seamless, and at the same time has a very high trust score when it comes to delivery of credit, I think we would have solved for all of these things. And we are getting to see that in businesses, for example, yours also, where, credit is being delivered at a very low cost, but at the same time, it's a high quality credit. So first of all, I think we are started on that journey. I still believe that Indian consumer hasn't really adopted to credit and hasn't adopted to credit to help personal growth, personal growth, consumption growth, and economic growth. As we start to see Indian consumer use credit to better their own lives and the ecosystem around them, I think the Indian economy will benefit. It's a classic question around capitalism and socialism, which says, if the consumption cycle increases, we as a company are going to go and we as a country are going to go and do well. I don't think so that has taken off enough right now. I think there's a lot more to be done to deliver credit to drive consumption in our economy today.
Dilip,
By the way, I think that has to be done with great deal of moderation. You know, whenever people are too bullish on credit growth, you know, credit growth is, you know, there is a very strong balancing force of doing it super responsibly, doing it very carefully, and so on and so forth. I think, like, at least I feel worried, you know, people take credit in some countries, not in India. We have seen recently people take credit and then do real money gaming online. You know, that's pretty scary. You know, people are using credit to do futures and options online. That's pretty scary. You know, and then you don't want people falling into a consumption trap. Like in certain parts of the world, credit has reached the point where it is used, but it is also abused. So I think, look, in India, the good news is the economy has had a healthy savings rate for the most part. People have been, you know, fiscal prudence is very cultural to us. And I hope it doesn't get into a zone of overconsumption or a zone where, you know, lots of people and households and so on. So I would just say that, you know, yeah.
So I just want to add one point there. I think, and I fully agree with the views that it has to be a responsible way to drive the penetration, because it's a very risky business. But I think the biggest hurdle in my assessment is the collections, right? You know, how do you really get these collections done? And with this UPI AutoPay, right? You know, the credit line on UPI, it's like a fully end-to-end life cycle product, right? Once you allot a credit and once the fellow is connected back to you, it's real time and connected, right? So the banks have the ability to do the step up, right, based on the repayment facilities, derive the newer business models like credit as a service, you know, charge a small fee to give that credit line back to the customer. So I think this is the only way, in my assessment, it'll go to the hundreds of millions of the Indians, right? The traditional way of, you know, underwriting, you know, giving money back to the consumer, collecting is not going to work, right? So there has to be the way payments have transformed, I think the credit has to transform all by itself, right? Using the DPIs. Unless that happens, I don't see it's going to scale up dramatically.
I think, Dilip, what you're saying is true, that anything that is done inefficiently, as a country, we cannot afford it, because the cost of doing business dramatically goes up, and we need to be operating at literally in pesos to do a lot of the things that are done in probably dollars right now, right? So I agree with that. But I think Shailendra's point is an important one to kind of talk about. We have 100 million customers plus who are getting exposed to credit for the first time, technically, probably in their family. And I think the need to get successful fast, get rich fast, are balancing forces that we always need, because what we don't want is that this hyper-efficient system delivers a hyper-efficient result. And we are kind of, because what we don't know how the human behavior works, we are just making the systems dramatically more efficient, right? So that's
But today also, I'm saying, if you look at credit cards, right, there are cash out, which happens, right? And it will happen. But I'm just saying that what segment and how much value is into that. I'm just saying, till the time, in my own assessment, I'm not an expert in this area, but 5 to 10% will happen, right? Such a large country, it'll happen. But I think the remaining 90%, we know exactly where the funds are going on. It's valid P2M categories, the spends are happening. It's a healthy picture on overall, or a dashboard on overall where the spends are going. And I'm again telling you, start small. Start small and step up. I think that's the only way to expand the market.
That's perfect. I'm going to switch out of payments and credit. Yeah, go ahead.
And Kunal, look, I think the audience here definitely wants to hear from you, because you're one of the most insightful and constantly, right? Does everybody want to hear from Kunal? So can I take the liberty to ask one or two questions back to you?
Please go ahead.
And you guys should jump in. By the way, folks, for those who don't know, Kunal and I are supposed to do this talk. Then Amrish got FOMO because he had a talk at the same time, and he thought he would lose market share to the two of us, so he decided to join. Okay? And we were thrilled to have them join, of course, and honored to have Amrish and Dilip here. So
I have a question lined up already, okay? You get your question out of the way.
Okay.
This was not part of the agenda, but sure.
It's okay. So, Kunal, for everybody's benefit, Cred is a very unique business. You had a bunch of unique insights with which you built Cred. Help unpack Cred for the users and also share what do you think Cred becomes in 10, 15 years. I think people will be pretty interested to know what you're thinking about that.
Yeah,
so
perfect.
sorry for disrupting some of your flow,
yeah.
but I think we need to hear from you.
Perfect. How many of you over here use Cred? Thank you. Close to 70% market share. Not bad. The rest of you, please talk to the people around you and get on.
How many of you use Cred for UPI? This is the market share.
Okay.
I'm sorry. I want you to grow. I'm just saying. It's just
He's
a
touched a very
reiteration.
sensitive topic.
There is always room for improvement.
We were late to the UPI journey, but some interesting stats for you guys. When we started Cred, we're going to be completing 6 years in November. We had less than 2 transactions per credit card customer in India on UPI when we started in 2018. Now, credit card customers who do a lot of transactions on credit card do close to 27 transactions on UPI every month. So that tells you that it's a very unique customer base that seems to also be on credit card and UPI as well. But just to explain Cred, I had built FreeCharge before, and all of you were part of the journey in some ways. You from Euronet, you were an investor in some capacity, and you were the key investor in the company. We realized that India's credit relationship was somewhat messed up. We were heavily penalizing customers for missing a bill or missing a due date or over-leveraging themselves, but nobody was rewarding them for good financial behavior. We realized that if we create a platform that reminds people to be responsible with credit and ensure that they're paying their bills on time and create some kind of a recognition or reward mechanism for that, it should create a good thing. Fast forward into the journey, we are a dominant player in this category where most customers use Cred to rely on Cred to remind them for paying the bills on time and on top of that. So that's a way for us to acquire customers, but we actually wanted to build a unique ecosystem for the credit-worthy customers and kind of build multiple things on top of that. We never thought of ourselves limited to being a fintech. We see ourselves as an audience play. So we are focusing on the top 25 million families of India and building many services for them. We recently launched a product called as Garage, where we allowed consumers to manage their cars on our platform, and we managed to cross close to 5-6 million vehicles in less than a year on the platform, and it makes managing cars better. And one of the most useful features that people find on our platform is challans. A lot of us drive and not know that we've got challans, and a lot of people use that. We've not figured out how to do BBPS on top of that and get the challan paid on our platform yet. Dilip, that's a task for you. Yeah, please note down. Yeah. We need that done. But the idea was that can we focus on a customer segment? They have unique problems for themselves. Their problems are not India problems, right? And can we solve for their cohorts in a better way? We hope to be partnering with all the players from the ecosystem. We do some work with Pine, we do some work with e-commerce companies, we do some work with banks, and make it easy. And we believe that consumer products can be built with a lot more finesse and a lot more attention to detail. We are used to these products that are built for mass customers, and we wanted to build something that is unique for them. And what we have managed to do is build a very large-scale business where we have a large merchant payments business. We have a large business where banks and NBFCs use to cross-sell their loan products on our thing. We are probably the largest in that category in terms of cross-selling. We are also a business where we have a small commerce business that we have built on top of that, a decent-sized insurance business, and a lot of merchants actually pay us to list themselves and which becomes a reward on our platform. So we are building a unique company. It's very hard to explain what CRED is, but Dilip and I were fortunate to have dinner with the governor from US, and it was fascinating. He's like, this product is not even there in the US and it should be there. I mean, just to compare, they have probably $1.5 trillion of credit card spends and no app to manage their credit cards. But that answers your question.
Yeah, no, thank you.
I'm going to switch back. Quick comments from each of you. We have last 5 minutes. What are you concerned about in the world that we are all extremely optimistic? What are the things that we should be careful about? And anyone go first?
I think the speed of the tech is concerning for sure, right? Because we are building stacks after stacks, and it is from all perspective, right? Not only the core tech changing, but the skill set of the people, the way the AI is moving forward, cyber risk, right? So I think it's a fairly cautious zone we are entering into while we speak about scale, and it's a great thing to have. But I think it has its associated risk, black swan events, right? And I think we'll have to start creating strong mitigations on those. But Kunal, I think if just look at it as when you look at a future of fintech, and I think we keep talking about this fintech dominates or banks dominates. I think this line is going to get blurred in my assessment, and I think this universal banking will get converted to universal banking access, right? And while only fintechs are thinking like that, from an access standpoint, irrespective of the bank which I bank with, but I'm sure there is a strong thinking within the banks as well now that, yes, I have created a great bank, but I must create a universal banking access as well, because he's not using all my products, right? It's impossible virtually, looking at the number of banks, number of competitive products in the market. So I think that layer which fintechs have been building, which will get created, and I'm sure that fintechs will also try to evolve with the number of licenses which RBI is giving, or IRDA or other regulators are giving. So I think this line is going to get blurred in the coming years. I don't know, 5 years, 10 years, but we are starting to see it.
Amrish, what are you concerned about and what do you see as the future?
I've been thinking, why are 80,000 people turned up for this event here in GFF? Kya rakha kya yahan pe? I honestly think it's about the ambition in each of the Indian in terms of what can be achieved. And that ambition today is getting to a level where it's going to become a massive force. And it's going to put so much pressure on the entire ecosystem around it, may that be on the regulator, on the government, onto banks and others, that one of my fears is, will the enabling ecosystem continue at the pace at which it has been doing till now to meet up to the ambitions that founders have and all of these people have out here to change the world? We've been very lucky, and as I said, I'm not joking about it, is that we've been very lucky that with an NPCI-like body, what Mr. Nilekani is doing with his organizations, we are today having a scenario where the enabling ecosystem is running almost as fast as the ambitions of the young Indian today. Can that continue for the next 10 years, 15 years is an area which completely concerns me. I totally believe that we can, but what that will mean is lot more will need to be done in terms of our public sector organizations, our regulators, government, to meet up to the ambitions of the young Indian today.
Great point.
Very good point.
Yeah, Kunal, I'm going to say something which actually I think it's not so much a concern, but an opportunity I see that is unexploited. And you could say it's a concern to the extent I think we should get on it quickly. I feel AI is going to have a transformational effect on fintech like in every other area. We are not yet seeing enough AI applications being used inside our fintechs, and I've said this at some board meetings as well, and to founders saying, look, when we meet companies in other regions, they are far further forward in like trying to like put AI into use, put machine learning into use, all the data that our UPI transactions are generating and all our merchant transactions and so on I feel like in the India ecosystem, basis what we have observed, we feel most founders are not thinking aggressively enough about leveraging AI, and we should be faster on that curve. And I'm worried we are behind on that curve, relative to what we see in the West and some other regions. So that would probably be but I think it's probably the most compelling area of opportunity near term.
Shailendra, is it a money issue, or is it an intent problem, or is it a skill set problem?
I think my genuine view is that I think it's just that people have not understood its power and have not seen the benefits. And when, as a few people start seeing it, it will become a no-brainer to transform. Look, why shouldn't a fintech, like for example, Kunal, in your business, you have 12 million monthly transacting users. You should have AI figuring out what your user wants next and nudging them to buy the next product. So your upsell, cross-sell should all be AI-driven, for instance. Or an agent should be there to credit assessment or risk assessment or so many other things. You could do data collection agents and so on. I just feel we are not having enough board conversations in our startups about how you're leveraging AI, and we are finding that companies in other regions are somehow they're just prioritizing it a lot higher. So if you ask me, I think that's an area that we should get on with quickly.
Yeah, one of the things that I believe that AI will not happen till the CEO or the founder of the company becomes the chief AI officer versus expecting somebody in the team to step up and do something. So it's one of those changes which can really accelerate you into the future, or you could be potentially impacted by it. I will just park one concern. I believe that as a country, one of the concerning factor remains is the female participation of labor. We have significantly lesser women working across all income segments, and that number is not increasing dramatically. We cannot become a prosperous country with just one gender contributing to the economy. We need to find a way to change this dynamic. No country has become prosperous with one gender working. We have to figure out a way to make that impact happen. Today, 90% of all financial products in India are only used by men. And this is something that unless we all collectively work to change, we are not going to get accelerated to Viksit Bharat. Cool. Thank you so much,
good.
everyone. Thank you for being on this panel.
Thank you very much.
Thank you. Kunal, if I could request you all to come together for a group photograph, a quick group photograph, please. And meanwhile, ladies and gentlemen, let me remind you, we're about to get started with our next session, a very special address coming around the emerging trends in sustainable finance. That's our next session coming up in the next few minutes. I'm going to request you all to please be seated. But on that note, thank you once again, Kunal, Shailendra, Dilip, and Amrish. And with that, we'll take those insights forward. In fact, this particular session turns out to be like a segue for our next as well. Let me remind you all, our next session is about to begin within the next few minutes. I know it's a tough ask, but I'm going to request our audience to please clear the aisle. where we will get to understand fintech's role in driving the shift towards a greener and more equitable future. We have with us Mr. Alan Folemu, Regional Industry Director, Financial Institutions Group, Asia and Pacific, International Finance Corporation. I'd like to please invite Mr. Alan Folemu to please come on stage. And ladies and gentlemen, if we have your attention, can we have an attentive round of applause as well, so that we know that we are good to get the session started. And thank you very much, Mr. Folemu, for joining us at GFF 2024. Over to you, sir.
Thank you. Ladies and gentlemen, good afternoon. It's truly an honor to be here at the Global FinTech Festival. Today we're discussing a topic that I believe is not just critical for the future of finance, but for the future of the entire world. The role of FinTech in driving the shift towards a greener and more equitable future. I know we've all heard the buzzwords: sustainable finance, green bonds, ESG reporting. But what do these terms really mean to us? More importantly, how does FinTech fit into this picture? Let's start with the basics. What exactly is sustainable finance? Sustainable finance refers to financial practices that integrate environmental, social, and governance, that is ESG, considerations to generate long-term benefits for both the economy and society. It involves directing investments towards solving global challenges like climate change, biodiversity loss, and social inequality. At its core, sustainable finance consists of two primary components: climate finance, which supports environmental sustainability, and social finance, which focuses on inclusivity and equality. Around the world, governments, institutions, and businesses are coming together to push forward sustainable finance, recognizing that finance is a powerful tool for creating change. Here in India, we've already seen major strides in this direction. India launched its first sovereign green bond, valued at nearly $1 billion, marking a significant national commitment to sustainability. The Reserve Bank of India has been pushing for greater transparency with new guidelines on climate risk disclosures. And in the capital markets, we've seen innovative frameworks for blue bonds, focusing on sustainable water economy, alongside critical efforts to prevent greenwashing. FinTech lies at the heart of this transformation, providing the tools and innovations to supercharge sustainable finance. But it's not just about innovation for its own sake. It's about building systems that protect privacy, enhance security, and most importantly, serve people equitably. Now let's take a closer look at three key trends shaping this future. The first trend I'd like to highlight is financial inclusion, a concept that's not just about providing access to banking services for all segments of society, but ensuring financial products and services are affordable, delivered in a timely manner, and offered in a responsible and sustainable way. Fintechs are playing a critical role here by breaking down barriers and extending financial services to those who were previously excluded, particularly in developing economies. Today, they are offering solutions that are not only more accessible, but also faster and easier. For instance, the International Finance Corporation, IFC, has been investing in early-stage fintechs like Mintify, reaching over 24,000 borrowers as of June 2024 in India, providing the unbanked and underserved with streamlined financing options that are more convenient and efficient. On a global scale, IFC has invested in hundreds of fintechs across Africa, Asia, and Latin America, driving financial inclusion at scale. The second trend is the rapid rise of green fintech products, that is, financial products specifically designed to address climate change. In Africa, for example, IFC works with M-Kopa, a fintech platform that combines embedded GSM technology with mobile payments to enable solar home system financing. This innovative pay-as-you-go model allows off-grid households to access renewable energy simply by using a mobile phone. It's a powerful solution that brings clean energy to homes, significantly reducing reliance on fossil fuels. Over 1 million solar home systems have been sold, avoiding 2 million tons of carbon dioxide emissions. Over 1 million individuals have gotten access to high-quality smartphones, enabling access to information and earning opportunities online. These fintech innovations bring strong climate impact into everyday life, encouraging people to adopt greener behaviors on a large scale. The third trend is the power of data, with fintechs harnessing this power in new and transformative ways. By disclosing their efforts and impact in areas such as reducing carbon emissions and promoting diversity and inclusion, firms can demonstrate their commitment to sustainability and social responsibility, which further attracts more conscious consumers and investors. And fintech is playing a key role in tracking and measuring the environmental and social impact of businesses and investments, thereby making sustainable finance more transparent and accountable. Take IFC's Malina tool, for example. It's an AI-driven platform that analyzes vast amounts of ESG data from emerging markets. This tool provides investors with deep insight into companies they're investing in, enabling them to direct capital towards those that are making real, measurable impacts. However, we also face challenges like greenwashing when companies misrepresent the environmental impact of their products and services. Regulators, including the Reserve Bank of India, are working alongside global counterparts to address this issue, ensuring that sustainability claims are credible and trustworthy. As we've seen, fintech is not just a tool for innovation. It's a driving force behind the sustainable finance movement. From promoting financial inclusion to developing innovative green products and using data to hold businesses accountable, fintech is playing a profound role in reshaping the future of finance. So where do we go from here? Looking ahead, it's clear that collaboration will be essential. Fintech companies, traditional financial institutions, governments, and regulators must work together to scale these solutions and amplify positive impact on sustainability. At IFC, we're optimistic.
we believe that by investing in innovation and fostering collaboration across sectors, we can build a financial system that is inclusive, resilient, and sustainable for everyone. Thank you for your time today, and I look forward to continuing these discussions throughout the forum. Together, we can lead the way towards a greener and more equitable future. Okay. Thank you.
Thank you. Thank you once again, Mr. Folemu, for joining us at GFF 24 and also for sharing those very pertinent and holistic thoughts, especially around the key trends with regard to financial inclusion and much more. Most importantly, I believe that's where we are headed to when we're talking about a sustainable finance. And I think this is where the leaders come together to share their pioneering thoughts. That being said, we also have some time left before we set the stage for our next session. In fact, our next session will be all about responsible AI and responsible quantum computing in digital banking. So that's the theme. I'll have my team set the stage, and before we invite our speakers, I'd also like to take the opportunity to thank our amazing set of partners for this edition of GFF. We'd like to thank our cloud communications partner, Root Mobile, Diamond partner, Nabard, charging station partner, Protein eGov Technologies, Gold partner, American Express, Global Growth partner, Lightspeed, Silver partners, Peg Local and Exotel, and country partner UK FCDO. We'd also like to thank our speaker launch partner OneCard, diamond partner Credit Saison, hydration partner Rupee Reddy, gold partner EaseBus, silver partners being Findi, Confluent and Beams VC, and bronze partner being Bakranji and Vampe. So while we thank all our partners, ladies and gentlemen, once again let me inform you all that we're about to get started with our next session shortly. And the theme for our next session is all about responsible AI and responsible quantum computing in digital banking. We'll be having a discussion. We'll have three of our speakers come together. The format will be a panel discussion, so please stay tuned. Thank you. Innovation and ethics. That will be the theme for our next discussion, which is why I request all the ones who have just entered inside the hall, please come forward, take your seats. We'll actually get our speakers to come together and examine the ethical considerations and transformative potential of AI and quantum computing in digital banking. This particular session will also get to explore responsible AI practices, data privacy concerns, and the implications of quantum computing on financial security and transaction processing. We'll get the experts to come together in order to discuss the regulatory frameworks, industry standards, and also the collaborative efforts in order to harness emerging technologies responsibly while fostering innovation in digital banking. So yes, plethora insights waiting for us, but that will only begin if I can request all the ones who have just entered inside the hall, please come forward, please take your seats. From the look of it, I've been informed that my speakers are all set. So that being said, you know, they say that to get the right answers, you need to ask the right questions. So to do so, to spearhead the session, we have with us Mr. Prabhu Rangarajan, co-founder M2P FinTech. And joining Mr. Prabhu on stage, may I also please invite both of our esteemed leaders as well. May I please invite Mr. Nitin Chugh, Deputy Managing Director and Head Digital Banking and Transformation, State Bank of India, and Mr. Ray Harishankar, IBM Fellow, IBM Quantum Safe and Vice President, IBM. Ladies and gentlemen, can we have a round of applause, an attentive round of applause from our members of the audience as we keep the energy and the momentum on for the rest of the sessions and for this session as well. Thank you so much for joining us. Thank you, sir. And with that, let me smoothly hand over the proceedings to Mr. Prabhu Rangarajan to take it over from here. Over to you, Prabhu.
Thank you. Good afternoon, gentlemen. Thanks for being here. Thank you to the whole GFF team. This has been a massive, event. It's just getting bigger and bigger every year. So amazing. And I think this topic, it's pretty relevant to the whole theme of this year's GFF. Responsible AI is the theme of this year's GFF. And how do we bring in more inclusion, connect more people, and do it responsibly. That's the whole theme of the whole event. So I'm sure these are two stalwarts of in their own right in each of their industries. Ray is an IBM fellow, and he's been doing deep research on quantum computing. So I'll rather start this session. I would request Mr. Ray to kind of give an intro or a quick peek into the world of quantum computing. I'm sure most of you would have heard about this phenomenon, but just the basics of quantum. What do you think quantum is, and how do you think it can help us? How do you think it? And every technology out there which has been if it has a phenomenal effect on the people, it better changes people's lives, right? Like that's the outcome that we expect out of every technology. So how do you see, what is quantum, and how do you see quantum computing change our world in the near future?
Thank you, Prabhu. First, this is my first time to this event, and I am amazed at the presence here, the number of people, the kind of breadth and depth of topics. It's awesome to be here. So I hope you're feeling the same level of interest and enthusiasm that I feel as I walk the halls. So this is, again, great to be here and appreciate the invite. There are a lot of things in the questions that you just asked, Prabhu. So let me just unpack that a bit and see how I can simplify this. I know that the audience isn't going to be familiar with what quantum computing is, so let me start with that. And I'll try to simplify it in such a way that maybe you can relate to it. And I will connect it to fintech and finance and insurance and the impact of that. And hopefully at the end of that, you're going to feel an appreciation for what quantum computing is, but also be aware of the impact it can create. So the simple way of describing it is, I'll start off by saying what it is not. It is not, quantum computing is not faster classical computing. It is a completely different paradigm of computing. If you were to, I'm sure that all of you are aware of zeros and ones, bits. So think about it as an on-off switch, where there are two positions in it, on or off, 0 or 1. Whereas in quantum computing, you can think about it as a dimmer switch, where it has a 0, where it is dark, and then it has the other extreme, where it is fully bright, and then a number of settings in between. So instead of 0 and 1, you have 0, 1, and any value in between 0 and 1. That is what we call a qubit. So when you have bits with 0 and 1, you have qubits with 0, 1, and a value anywhere in between. So you can take 3 values or any number of those values in between. So therein begins the difference. And as I said, quantum computing is not going to any time replace your laptop or your server that you have in the office. It will always work in conjunction with that. So this quantum computing is based on certain quantum mechanical and quantum physics properties. I won't go into that because that's a little complicated. And you might say, okay, fine, if I understand qubits, then what can I use it for? Why is it more useful, right? So we, as from IBM and Google and several other companies, are into the business of building quantum computers, right? So these are computers that are capable of managing these qubits and use them for computation. Very much like how you would use a classical i86 chip or whatever it is to figure out certain problems, right? But quantum is never going to do your payroll. It's not going to do your retail banking. It is not going to do a number of things that you would come to expect. There are certain kinds of problems that quantum is extremely good at solving. There are problems that classical computing simply cannot solve because algorithms don't exist. The mathematics or the science behind it doesn't allow it. And I'll talk about one of those. So factorization, for example, is one of those. So factorization is simply saying, if I gave you a number 65 and said, tell me the factors, immediately we say 13 and 5 as two possible numbers that you multiply to get 65. But classical computer does not have an algorithm to find that out, whereas quantum computer does. Why is it important? Hold that thought, I'll come back to it. That's one use case, right? There are other cases where quantum is better at solving things that classical computer does solve today. Case in point, optimization in general, portfolio analysis, fraud detection. These are all, and performing customer analytics. These are all things that classical computers do today, but they have certain limitations. Quantum can do it better. Quantum can do it much faster, right? So now let me bring it home and talk about examples where you can relate to, primarily being from the financial services industry. I kind of touched on it, fraud detection, right? So fraud detection models are usually plagued by false positives. And there are techniques and algorithms in quantum that will allow you to reduce the false positives by applying quantum machine learning. So that's a proven example that you can apply or begin to learn how to apply. Then there is risk analysis or your capital management. How much capital should you have as a buffer? And that's typically a problem that you solve right now in using classical computing. But because of the efficiency of quantum computing and the algorithms that are good at doing it, you can do them better. So you can afford to do with much better buffer for your capital. I talked about portfolio analysis. That's an optimization and portfolio analysis is usually a multi-objective optimization problem. You have certain number of parameters. You have to balance against that in order to arrive at the right balance for your portfolio objectives. Classical is good at doing it, but it assumes, it makes a lot of assumptions and in computing that. With quantum, you have a large capacity to manage multiple objectives more accurately at the same time. So your model definitely comes out looking much better. Now I can go on and on about a number of these use cases where you can apply specific algorithms that are very good in quantum computing that you can apply to banking. And you may say, who is using all of this, right? There are a number of companies that we are working with that have started to work with this, and many of them obviously don't want it to be public that they are working with this, but nevertheless, the ones that are openly publishing papers and talking with us are HSBC, Wells Fargo, Truist Bank, Credit Mutual. These are all institutions that are working with us in developing solutions based on some of these use cases. So I know I've rambled on for a while, but hopefully you have a pretty good appreciation for what quantum computing is and how it is applied in finance. I'll make one last point and toss it back to you, and then maybe I can pick up this point later on. I did talk about the fact that there is factorization is a use case that I'll come back and talk to. That is actually a real problem that every one of you should be concerned about, right? I don't know if you want me to go into that now or you want me to go into that later as part of responsible quantum computing. Sure. But I don't want to hog the conversation. I do want to have you listen to Nitin as well.
Sure. So we'll double click on it. Thank you, Mr. Ray. Like it was definitely very interesting. I know this is post-lunch session, so most people who were kind of half asleep would have definitely woken up to a new concept. So I'll probably touch upon a topic that we have all of us have been discussing for the last couple of years, especially after the advent of ChatGPT. Everybody keeps talking about AI. Mr. Nitin Chugh, you've been responsible and you've been carrying the mandate of digital transformation for SBI. SBI needs no introduction in India. You service almost every pin code out there in India, length and breadth of the country. What do you think are areas where AI is helping you transform the bank and the lives of the customers that you service? And what do you think about, like, few words about quantum computing as well? Yeah.
So thank you first of all, and it's actually an honor to be sitting next to Ray, who's got 25 patents to himself, and he just shared with me that his target is 1 patent per year of years spent at IBM. So it's really an honor to be sharing the dice with you, the stage with you here. I think in AI, the way we've looked at it, we of course moved from traditional AI and now we are experimenting with generative AI. But along the way, we also found and realized that we need to put the guardrails in place, because anything that needs to be built on top of a foundational model, even if it's core banking, basic principles of lending, or let's say portfolio analysis, fraud management, fraud prevention, etc., the guardrails need to be put upfront. You can't, as an afterthought, come back and say that I wish I had done that, because accidents do happen. So what we've done is to create a framework, and it's been around for almost 6 years now. We call it the overall responsible and ethical AI framework, but in practice, it is called FEAT, fairness, ethical, accountable, and transparent. And each one of them have several set of subpoints to go through before any model is deployed. So what are the key things which are required? And I think the same discourse will also get carried forward to quantum, and since Ray works extensively in the quantum safe space, I'm sure the principles will generally remain the same. So things like explainability. Now today there is ability to explain an AI model, but the model has to be built in a manner that it can explain itself to somebody who doesn't understand why the outcomes are what they are. It needs to be ethical, it needs to be transparent, it needs to remove all biases. If there are biases, either the model should self-correct. If it cannot self-correct, then there has to be a human in the middle. And today we prefer a human in the middle sort of a model. We prefer an oversight where our people are able to look at these models, calibrate them, and as and when any kind of a model drift happens, which happens over a period of time, there is an ability to pull it back through a recalibration process. So in fact, this has been coming up even in the industry conversations, starting with the RBI governor, talking about this about a year ago, saying that there should not be excessive dependence on algorithmic lending. And I think we have been trying to make sure that we are not excessively dependent by just making sure that there is a good amount of recalibration that takes place periodically. Now, what we haven't done as yet, and which is what we are trying to do, is to how do we automate that? And at the same time, because we are also dabbling with generative AI, of course, like everybody else, I think we share the same classroom, so our knowledge is no better than anybody else. Maybe especially maybe the people who are working on the tech side, of course, know a lot better. But as practitioners, I think we are as literate or illiterate. But I think what we are trying to do is to again build generative AI-based models using the same principles, because generative AI can be even more riskier. And what we are learning now is that there is an intersection of quantum and generative AI, which is now coming about. And it can either be very potent in a positive manner, or it can also have very, very negative consequences. In fact, as I was preparing for this, to come and speak on this panel, I also found that now there is another thing called biocomputing, which has gone from physics to biology. So quantum was all about physics, but now even biology is coming into this whole space. So I think these things will happen, but the principles will always remain the same. Banking is about prudence. Banking is about making sure that you don't take risks that you don't understand. And AI is just a way to deliver to that. And I think our principles, our value systems completely reflect there. And any responsible bank would be no different in terms of making sure that what they produce with AI or what they use AI for follows exactly the same principles.
Definitely, sir. Thank you so much. One key tenet that most large companies want to kind of do is to make sure the most deserved but underserved communities are served well, right? So the beauty of a great technology or a phenomena is to make sure like the last mile delivery of a certain service, if it is delivered digitally, it kind of aids or it helps the most deserved category of people, right? Have you seen AI helping in the whole inclusion story or reaching out to the last mile story? Have you ever seen anything or experienced any?
Yes, absolutely. So if you look at the traditional wisdom of banking, it relies a lot on experience, which is bad experience, right? So you say that loans in this area, you tend to go bad faster than some other places in, let's say, a downturn. Or loans from, let's say, this category of professionals are more riskier than the others, okay? But these are old nuances. Today, I don't think people practice that as a principle anymore. If somebody does that out of, just the fact that they have limited capital to use, that's a different situation altogether. But these principles have now been kind of left behind a lot because there is an ability today to use data science to have a far better precision in identifying even the excluded set of people who otherwise would have been excluded with a broad brush. You can identify capable people, good people, better people, rather than saying that, this whole area is a black-red area for me and I will not enter the perimeter of this area. So those days are over. I think most lenders, not just banks, are taking very, very calculated steps into that kind of a domain to say that, okay, my data science is telling me very clearly that these are the 50% people that I can deal with. And the next 50%, maybe we need to go through a certain process and a journey to bring them up to that level, which is part of the whole financial inclusion, financial literacy, et cetera, et cetera.
Great. Thank you so much. Changing gears back to quantum as a topic. Mr. Ray, if you could touch upon some of the use cases or some of the efforts that you are doing in partnership with large enterprises who you are already working with, maybe some of the avenues that you're taking to see how can it, help transform the, current computing world.
So to pick up on the point that Nitin you made about responsible AI and the overlap with responsible quantum computing, we at IBM have come up with 5 principles, if you will, that we call as part of responsible quantum computing, right? And simply put, responsible quantum computing is quantum computing that is aware of the significance of the power as well as the effect it has, not just on the enterprises, but on a community as a whole. So the first thing our principle is it needs to have significant societal benefit. So we are not doing it, and that is the challenge with any new technology, right? if it's not managed well, then it has the potential to cause significant unintended consequences, right? So we are aware of that and want to avoid it. And talking about use cases, the second principle is we want to make sure that the use cases that we explore, or we explore them with foresight. What we mean by that is we need to be aware of what the outcome of that intended use case could be, because technology by itself is neither good nor bad. It is how you apply it and what you apply it for that makes it good or bad. So we want to make sure that the exploration of these use cases are not for nefarious purposes, but for the overall good. The third is there is such a lot of hype that started off, and Gen AI is a great example of that. So we are keen in calling out that we need to represent the capabilities of the technology appropriately. Not hype it up, not keep it on the low as well. Be factual about what it can do so folks are aware, right? And then the last couple ones are about making sure that we make principled decisions in a consistent manner, that we cannot change the way we make decisions. We lay down some principles and we are guided by those principles in every decision we make. And that has to be consistent. Otherwise, there's chaos, right? And the last one is to the point you just made about how does it benefit the community, right? So we want to make sure that quantum computing is available to all the community out there. So we are keen in building a very inclusive and diverse community of people who can take advantage of it. So one of the examples, in fact, you'd be surprised to hear that India has a lot of quantum computing. We have this product called Qiskit. It's actually an open sourced piece of software that you can go in and learn how to use quantum computing. India has the most number of people signed up, right? And then there's a lot of quantum startups here as well. And there was a recent World Economic Forum study that came out about the quantum economy, and in that it calls out Telangana state as one of the examples where they're calling out that they have it's a case study of how well Telangana is doing in terms of making innovation, open innovation available, and how it reaches the masses, and how that is progressing well in that space. So my point is there are a lot of local examples on how innovation in the quantum space is being consumed by not just end consumers, but also being a fostering location for startups and the while. Now, you did ask about the benefits. I talked about a lot of enterprise level use cases, but at the end of the day, all of them have to end up benefiting the common consumer. Right? So there are no direct use cases yet on quantum that will benefit a single customer. But if you think about fraud detection and your ability to do customer analytics in a more effective way, does have an indirect way of benefiting the clients at the end.
Perfect. So, and in fact, the whole way in which current underwriting models for when I spoke about financial inclusion, one of the key aspects as part of the inclusion is not just to connect people having a bank account or a way to kind of have access to financial services. It's also about how do they participate in the economy by being able to borrow money, and if they need to borrow money, the regulated institutions need to be able to kind of underwrite based on certain data sets. And for some of the segments of the society, these data sets aren't readily available. And if you have to kind of filter through and get access to these data sets, it's like basically trying to find a pin in the middle of the ocean, right? Like, so it's so vast. So I'm sure like once quantum and the technology catches up and matures, there will be enough and more avenues to kind of do large scale, data filtration and stuff like that. Now, changing gears back to AI, Nitin sir, I'd like to bring you in on one key aspect which is pretty core to banking, which is trust, right? People entrust the banks to safekeep their money. And that's how the whole economy works, right? Like, so how do you think in your personal experience, professional experience, how do you think AI can come in and add to the level of trust that the customer has? Will it be possible for customers to see more transparency from the banks? Or what kind of steps do financial institutions need to take? And probably you can even bring in the angle of how a regulator would like to think, because you work very closely with the regulator as well. So what's your take on how the whole factor around trust, will people start trusting banks more with the advent of AI and quantum? Or do you think it's going to get diluted? Or what's your take on this whole trust as a topic?
See, I think the bedrock of trust is inclusion. If you don't include somebody, that that somebody is not going to trust you. You can't go and say that I don't want to deal with you, but please trust me. So I think that problem has been solved now. So since we are an exclusive large bank, we've always enjoyed the trust of, we have 500 million customers, so we do, they have reposed their trust. Now we believe that their trust is certainly for safekeeping. There was a time, and this is not specific to SBI, but across the industry, when all the banks were introducing their digital apps or even web portals, it started with the position of not trusting it very much. I trust the bank, but I don't trust the application. Is the bank going to guarantee that the application is going to deliver everything in just the same secure way, like my money is safe? And accidents have taken place and they continue to happen. So when these things happen, there is a bit of going forward and coming back for sure. People, take 3 steps forward, come back 1 step. And of course, there is usually this whole thing about if you lost money, then why would you ever want to trust? And everybody knows somebody who's lost money these days. So I think it's a difficult problem and an ongoing problem to keep assuring that your money is safe in the bank, but the way you access the bank today, how are we making it more and more safe? And that is where I think some of these new technologies are going to be helpful. But one of the worries that we have now, and I think that is again something that we see happening across the world, is that there is hoarding of information that is taking place, which today might be encrypted, but later when quantum is available, quantum can go and crack that whole crypto, the existing crypto, all of that will get exposed. So we need to start preparing for that. If that happens in the next 5 years, it is very, very worrisome. If it happens in 10 years, hopefully we get a little more time to prepare ourselves. But then that is again the reason why we need to invest in some of these new technologies, and especially the place that Ray works for in making quantum safe. Those are the places we're trying to understand, because today they might be okay with, let's say, AI delivering to a certain level of personalization, and that is all right for them. And they don't quite care that, that it is increasing my safety or reducing my safety, because it's really not doing anything there. It might alert them, for example, for something which is fraudulent is going to happen, which is again more of a pattern detection. But that's all right. I think most people have got used to that. But to take it to a level where your entire credentials can get compromised, because that whole cryptography can be broken through quantum computing, and we have seen examples of that. And RSA, for example, was what everybody has used for the last 2 decades, and today even that can be broken. So I think before it becomes mainstream, before the bad actors get hold of this, we have to move faster and make sure that we find a way to keep people aware, while the producers of technology like IBM will make sure that computing is safe. But how do you keep the users safe? Because user has still not got access. Like Ray was saying, that there is no use case at the user level. But imagine if, let's say, this is going to be offered as a cloud service in future, and the computing actually takes place on your handset, on your smartphone, and that has the ability to either create a compromise or reduce a compromise. We will have to start preparing for that. So I think one of the things at least we've started to do is to also get into a lot of research. And we do have a partnership with IIT Bombay where we've set up a hub for data science and analytics. And we are trying to research on some of these new technologies, so at least we form a view what we should be doing. Otherwise, it is not something you can go and pluck and buy and say that, oh, I have bought an application which is going to keep my cryptography safe.
Absolutely. And you touched a very, key topic. This is called as post-quantum cryptography. It is actually, I would say, it's largely a threat that we foresee. When quantum computing can do, as Ray mentioned, it can do many, many mathematical calculations, arithmetic operations very, very quickly. The whole world of cryptography is based on the fundamental arithmetic is on top of which the entire cryptography is based on. So the encryptions and the strength of encryption that we have today, you would have heard about RSA, you would have heard about AES 256, AES 512, all of these, terminologies are being used, but it will be meaningless when quantum computing is able to kind of process it and crack it in a minute or two, right? So all the encryptions that we have today to safeguard our data will be, meaningless. So how do we prepare for it? Like, I'm sure you would have worked quite deeply in quantum safe, as that is your main area of, focus. What's your take on this whole post-quantum cryptography?
Well, I think that is a here and now use case of quantum computing that many are unaware of. And so thank you for the question, and thanks for the opportunity for me to sort of scare you a little bit, because that is what's going to happen. So going back to the trust, the word of trust, right? We trust every digital communication that we send, whether it be email, your airline booking, or your shopping, anything, any digital transaction that you send. You trust that nobody else can eavesdrop and listen to it because it is encrypted. Right? Very simple mechanism. And it's even more simpler when you really think about how the heck does that encryption work. And that encryption works on the point I made earlier about finding factors of a number, right? So finding factors for a number like 65 is fairly simple. We can do it in our head. But if I were to give you a 637-digit number and say, find me 2 prime numbers that you have to multiply to arrive at that, that is what RSA 2048 is about, right? It's impossible. I say impossible because there is no algorithm that exists in classical computers. You can put the most powerful supercomputer to work at it. It will take 1 million years, and it's hit or miss whether it will have a problem solved or not. It is that very simple math problem that all encryption pretty much depends on. There are derivatives of that, but this is the fundamental problem, right? Until a guy called Peter Shor in 1994, without even having a quantum computer, came up with an algorithm to solve this using quantum computers. So he says, oh, if I had a quantum computer that would do this and that, I can solve this, right? And he has. So now what happens is when you have a cryptographically relevant quantum computer, what do I mean by that? A quantum computer powerful enough to break this RSA encryption. Because right now, we have quantum computers that have been shown to break RSA 12, for example, meaning a 12-bit RSA code can be broken using Peter's algorithm. So we know the algorithm works. But it gets exponentially difficult as it gets larger and larger. So you're safe for now, but not for long. When such a powerful computer becomes available, it will break all encryption that you're currently using. What does that mean? It means your digital signatures can be compromised. I can fraudulently authenticate myself as you. All your blockchains become broken. Any digital communication that I can intercept, right now I cannot do anything with it, but with a broken key, I will be able to unlock that and look at what communication you have been sending. So there is a problem that exists here and now, I said, and that problem is called harvest now and decrypt later. What it means is, let's say I'm able to download a bunch of encrypted information anywhere, right? I'm sitting outside a cafe near a sensitive location, whether it be a financial institution, whether it be defense location, doesn't matter. Let's say I'm able to intercept and download the data. Now we are not worried because nobody can unencrypt that. Right? Nobody can take a look at inside, so it's safe. But if I were to store that and sit on it for 10 years, and then a quantum computer becomes available after 10 years, now I can unencrypt it and see what damage I can cause. So I'm harvesting the data now so that I can decrypt it much later to cause damage. Trust me, bad actors, typically bad state actors, are doing that today. So information is being exfiltrated, and we just don't know that it is being exfiltrated because no harm has come because of that yet, right? So this is where I'm saying I'm going to, scare you, because it is a concern. But at the same time, you may say, wait a minute, I don't see a quantum computer right now, so I don't need to worry about it for a period of time. You are correct. But if a quantum computer becomes available in the early 2030s, that is where we predict, that is where a number of pundits and other organizations are predicting that a viable quantum computer capable of breaking encryption will become available. At that time, bad actors can break this code and decrypt the data. So if the data that you have has value over 7 to 10 years, then you need to worry about it. I mean, credit card information, for example, you may not have to worry about it because you can change that in a relatively short order. But if you have longer information of longer duration, I'm sure there are financial data that is really sensitive, that has longevity over 7 or 10 years. You really need to be concerned about the safety of that. So the point about quantum safe is identifying where you're using current cryptography. You mentioned RSA and other mechanisms. RSA was, discovered in 1976, if I remember right. It's that old. It's nearly 50 years old, and we are continuing to use it. I guarantee you don't even know where you're using RSA in your software system. It is that old, right? It's embedded somewhere deep. But now you have to go rip it out and replace it with post-quantum cryptography. Right? And those new algorithms exist. NIST just 2 weeks ago announced a set of algorithms that you can use in place of current algorithms. Instead of RSA, you can use new ones that will work in this space. But it is a lot of effort to go and identify where you are using these algorithms and then replace them with new ones. So that is where you have to get started now. If you have any prayer of completing this work in the next 7 to 10 years, you have to start now. Because we recently did a study that average CIO, I think we surveyed over 100 institutions across the world. They said it will take them anywhere from 10 to 14 years to do this transformation. But guys, we don't have 14 years, right? People are improving Shor's algorithm, rather frequently now. And so what used to be, 2035 is slowly left shifting, and now we are talking about early 2030s. And I think the most aggressive one was Gartner, who called out that 2029 is when they expect something bad to happen. So I'm not here just to scare you, but also to say that you need to start preparing now. So it's not like everything is lost, but if you don't prepare now, chances are you are going to have a major problem that you need to deal with and not enough time to deal with it.
Thank you, Zirag. That's eye-opening for sure. So, Mr. Nitin, I'd like to probably, I think we have a few minutes left. So I thought of hearing from you about a key aspect with all the technologies that we spoke. The key part that this becomes meaningful is how iterative it is and how soon are innovators able to catch up to these technologies, whether it is AI or quantum. You can pick and choose any one of these topics. But where do you see innovators participating in this whole game? How quickly do you see the iterations would probably get shortened? I'll give you a live example, right? Like back in those days, like when computing, or I would say computing became mainstream in banking. This was 2.5 decades ago, when in the whole of 90s we started computerizing the whole of banking, from core banking systems to ledger systems to all card management systems to everything. And then within a decade we started seeing the innovators participating and new products coming out and various versions of digital products that are based on the digital framework coming out. And here we are now, we have the whole success story of UPI helping us, even the street vendor or flower vendor to participate in the, financial ecosystem. So, but the innovation cycles or the iterations have actually come down. Now we see within a couple of years, things of order of magnitude way higher than the previous version getting churned out. So how do you see this in your experience?
See, the people who start first, largely the people who work on the tech side, they will usually innovate at a core capability level. They will create those platforms, the core capability, on top of which an ecosystem will start thriving, which is what we're seeing with payments and UPI, that now the whole innovation is happening at a interface level, use case level. Okay. Now that is much easier because you have a foundation which is already there and somebody has done the hard work of thinking about it and innovating around that. So I think the way we look at it is also both in terms of building long-term capabilities, which will help us in spawning off, as many use cases as we want, not restricting ourselves to just the low-hanging and depending on a core tech that's been built elsewhere and you just license it, but work on both tracks. Use the learning cycle to learn about a new technology through use cases, but at the same time, on the second track, invest for the long term. If you really believe in that technology and you believe that, yes, this is really going to be mainstream in future. And for that matter, it has to start with a whole lot of academic research. Because if you're not researching enough, then what is the whole point of saying that, and today, most of the research that happens in businesses is about market fit and, whether this product is going to work or not, whether users are going to accept it or not. But the technology itself needs to be researched. And that is the part I think we believe very strongly in. So a lot of through our own academic faculty in the bank and our partnerships with the academia, we spend a lot of time and resources just in understanding the themes that will emerge in future. And even if half of them are not going to be practical enough, at least we are knowledgeably discarding them to say that, yes, we examined it, it will not make sense. Now, on top of that, it's easy to build a platform. On top of that, it's easy to say that, okay, let's start innovating now. That's how I think we would look at it. And for that reason alone, I think there is a case for a lot more deep tech innovation in India, which many people have spoken about in the past also. But that is really what we need.
Wonderful. I'm sure we can keep talking about these topics on and on. 40 minutes for about, two very, very futuristic topics is like too less. But, in the interest of the, the time of all of you, we are coming to a close, but maybe we can take a couple of questions if that's possible. Any questions from the audience to these gentlemen? Yeah.
Yes.
Thank you. Hi, my name is Diksha. Thank you so much for giving me this opportunity to listen to Ray sir and Nitin sir. I missed the initial bit of the trialogue, I'll be honest about that. So I'm a solutions architect with a company, and my question revolves around solutioning itself. I know quantum computing itself is very in the initial or in the research phase right now, but how do you see that getting factored in the production state of, let's say, banking and financial institutions? And then since the financial world itself is of a quantum nature, like every single factor is so codependent on the other one and it's so sensitive at the same time, then how do you see the sensitivity of the financial world getting incorporated into the sensitivity of the quantum world? Because as we're incorporating more and more machine learning, quantum computing is going to be need of the hour, and that was also sort of my research as well when I was doing my MBA. So just your bits around those aspects would be helpful. Thank you.
I could catch most of your questions, so if I don't answer your question, come back and catch me after the meeting.
I will.
I'll be happy to do that. Quick answer is, when quantum computing becomes much more mainstream, how do we deal with it, or when will it become that, and how does financial institution take advantage of it, as well as the data sensitivity considerations around that, right?
Yes.
Perfect. So one thing I failed to call out is that right now, IBM has about 120 quantum computers available on the cloud for people to use, right? So in other words, it is, I would call mainstream, but the kind of problems you can solve with it are fairly small, right? So that's the reality of it. And the number of banks that I called out are doing experiments with it so that they can come up with algorithms that they can apply to begin taking advantage, because I guarantee you that their ability, for example, to do better portfolio analysis or better fraud management will become a differentiator in the marketplace when a few years from now, quantum becomes much more mainstream. So we predict that by 2029, we will have a number of business use cases that can be executed in quantum computers. So 5 years is not a long time for us to look at to see when it will become mainstream. The other point about data sensitivity is a quantum computer will never operate on its own. It is always going to operate in conjunction with a classical computer, in that you submit a portfolio analysis workload to a classical computer, it does what it needs to do, passes on a certain part of the problem to quantum computer to solve, gets back the results and continues. So that way, any data considerations you have that are handled by your existing data center and classical computing continue to be supported within the quantum world as well. Now, if you want to hear more about this, a shameless plug, Marianne and I are doing a master class on quantum computing and its impact on finance, particularly payments, at 11:40 a.m. tomorrow in room 202. One more question at the back.
Just an extension of that one. So how do you think...
If you could excuse me, sorry, you can catch him up
I will,
offline.
I will.
Yeah, we'll just take one last question and then...
One person behind you.
Yeah.
I think I'll catch her later on.
Hello. I'm Sharval. I had a doubt when you mentioned that quantum computers can do a lot of calculations very quickly. And I'm asking this because I'm a machine learning engineer. And primarily, when it comes to training a model, it takes a long time to train a model, right? Because you need to go through a multiple sets of calculation. So when it comes to leveraging quantum computers, and if they're allowed in the hands of people, would it be detrimental because they can train machine learning models now? Because a lot of machine learning models are restricted, or there is a lot of regulation coming in for use of AI and machine learning. Now you're giving them potent solutions wherein they can train their own model where regulation is not going to be enforced. So just wanted to know where we're going to head with respect to that.
The whole topic of regulation and quantum computing is a separate chapter by itself. There's a lot of discussion that has been going on. And again, I go back to a World Economic Forum report from 2022, if I remember right, where it talked about regulating or regulations in quantum computing, right? So that's a sort of a reference that I can point you to. The other is, I didn't quite catch the question about machine learning, but we can talk about that separately outside. But the simple thing is, quantum is good at doing certain things, is what I said. Quantum is good at doing division or factorization, but it is very bad at doing multiplication. So there are certain things that it does well, but with respect to machine learning, it can do QML or quantum machine learning quite effectively for certain types of problems. So it is not a one-size-fits-all where you say, anywhere I can do machine learning, I'm going to do much better with quantum machine learning. If you can do fast Fourier transform, for example, just to complicate the message, quantum does it better, but there are certain things it doesn't. So it's not anywhere you can apply AI, I'm now going to apply quantum and make it better. Not quite as simple as that.
Great. Thank you so much, Mr. Ray and Mr. Nitin. I'm sure we would love to continue, but I think in the interest of time, we'll probably end this discussion here. But thank you so much for coming in and giving your, sharing your wisdom here. I'm sure it's been a long journey for you. You just landed yesterday. And Mr. Nitin, thank you so much for coming here. Thanks for all the views and your suggestions here. Thank you so much, everyone.
Yep, thanks for the opportunity.
Thank you. Thank you very much. If I could request all the speakers to come together for a group photograph. We'd like to thank Mr. Nitin Chugh and Mr. Ray Harishankar for joining us. And thank you very much, Mr. Prabhu, for beautifully spearheading the session for us. Ladies and gentlemen, I'd also like to inform you that our next keynote session will commence exactly at 3:45 p.m. Thank you. Thank you so much. Once again, I'd like to inform all the members of the audience, please note that the next keynote, the Finternet keynote, featuring Shri Nandan Nilekani, will commence exactly at 3:45 p.m. inside the Jasmine 2 Hall. I repeat, 3:45 p.m. Well, until then, we'll of course be setting the stage and we'll take that little short break. But 3:45 p.m., I'd like to urge for your presence here exactly at 3:45 p.m. Thank you. And please grab your seats. We've got ample space right across here. Ladies and gentlemen, before we march ahead once again, I'd like to also thank our agenda partner HSBC, Gourmet partner Payten, FinTech enabler Singletech, Gold partners Brisk Pay, Silver partners InSolutions Global and Pay with Ring, and Z47, Bronze partners MTech Innovation, NCR Atlicos. That being said, I'm sure all of us are now eagerly looking forward to the keynote. Let me remind you all that the topic or the theme for this keynote is all about Finternet, transforming financial services through digital innovation. This is where we'll all come together to explore how digital innovation is revolutionizing financial services. Let's together gain insights on enhancing financial inclusivity, streamlining operations, and most importantly, creating customer-centric solutions. On that note, ladies and gentlemen, we have the august presence of one of the most pioneering tech visionaries ever. Please put your hands together to welcome on stage none other than Sri Nandan Nilekani, co-founder Infosys and former chairman UIDAI.
Hi guys. So today I'll speak about the Finternet. Now you're wondering what is this Finternet, whether it's a spelling mistake or whatever. But what we'll present today in the course of the next half an hour is a vision for the future of the financial system. And I hope you'll be able to get a sense of it here. We know that there's been tremendous innovation in financial services around the world, in payments, in lending, cross-border transactions, data sharing, open banking, all kinds of things. And we know this is happening around the world. In India, of course, we have the great example of NPCI and the amazing success they've had with UPI. But we have, we have mobile app, Apple Pay, or you have Pix in Brazil, or you have Stripe, or Visa, whatever. The point is that around the world, SWIFT, my friends from SWIFT are here, So I think what we're seeing is enormous innovation around the world over the last 30, 40 years. But more and more, in some sense, the financial system is not able to cope with the demands of users. Users want more choice, more control. They want to be able to do things as easily as everything else they do in their life. Everybody wants universal banking. You want different types of assets. You could have deposits, you could have real estate, you have art, you have NFTs, all kinds of assets that you need to manage. And we know that we have lots of global systems, everybody is in their own silo. Now, cleaning all this up will take 100 years. To give an example, NPCI and under RBI leadership has tied up with PayNow under MAS leadership in Singapore. That would have taken a few years to do. Imagine if you're going to build these bilateral pipes between countries. It will go on forever. So is there a way of doing this very differently? And what is happening today is that we have purpose-driven pipes. So person to merchant, there's one pipe. G2P, there's one pipe. P2P, there's another pipe. And all this is creating siloed, slow, and expensive systems because we're building a new road for each type of application. Now, what happens, we have seen, is that when technology becomes more sophisticated, there is a time when we have all these various siloed solutions working, and then all of a sudden, they come together and change things. If you remember, those of you of my generation will remember that before the internet, you had all kinds of competing technologies. You had SNA, OSI, this, that, and there was an alphabet soup of communication technologies. And out of all that emerged TCP/IP as a superior way of doing things, and now that is dominating the world. In those days, every company had its own email, and you couldn't send email to each other. Today we have an SMTP protocol, and you can send an email to anybody in the world. The same thing happened in devices. In the 20 years back, we had Palm Pilot, we had Nokia phones, we had Blackberries, everybody was doing their own thing. It's only in the late 2008-9 with iPhone and Android that we came up with the notion of a single device with an app store, which collapsed everything into it, whether it's a camera, a dictaphone, everything came into that. So what we find is that when you get this convergence of technology, you can unlock exponential value. So is there something we can do in the financial area? And therefore, what we talk about the Finternet is a new approach to global finance, which is defined with 3 U's. It is user-centric. It puts the user at the heart of what we want to solve, because users want more control over their lives, over their assets, over their destiny. It has to be unified, which means that it should cut across all asset classes. It could be shares, it could be bonds, it could be deposits, it could be paintings, it could be horses, doesn't matter. All kinds of asset classes should all come together. And you need an universal infrastructure on which all of this works. And sometimes we underestimate the value of universal infrastructure. Today, if somebody has come to GFF from New York, they go to their hotel, connect the laptop, and they start the email. They don't question the fact that behind the scenes, there is a universal infrastructure which makes this possible. Can something similar be done for financial services? And we want to have Finternet is something which allows everyone to participate and control all kinds of assets. User-controlled assets, user content, NFTs, attested assets which are certified by somebody, registered assets like land, or regulated assets like financial products. All of them should be able to participate in this economy, and we need a good way of protecting them from the downsides. So in the real world, we actually have tokens. When you get a paper file from somebody, which is a property file, everything about that property is in that file. So when you give that file to somebody else, you're able to take it forward, or you can keep it in the cupboard, right? Now, in the digital world, we actually broke this up with databases and code and so on. Now, with tokens or tokenization, we can have self-described, self-contained packets that have all the attributes of that asset. So in some sense, we are going back to the future. We're going back to the world, except that instead of a paper file, we have a token packet. Now, why is this possible? Because of advances in cryptography. Cryptography allows you immutability, which means you cannot change. You can make sure nobody can change that packet using a blockchain. It's verifiable, it has security, and it has privacy. Now, all these things were applied in the world of cryptocurrency and so on. And so we have 16,000 cryptocurrencies and so on. But in some sense, these cryptocurrencies were outside the regulated system. So they were in their own planet. And we have seen some of the consequences of that. What we need to do is bring the power of cryptography, the power of tokenization to our world, our regulated world, where we have rules, where we have regulations, where we have anti-money laundering, where we have KYC. All these things have to be there. In other words, can we think of a way to combine the best of a regulated world with the best that tokenization technology can offer us? And that's what the Finternet does, because it uses these basic constructs of tokens and then enables universal interoperability and composability. What do I mean by that? Interoperability in the sense tokens can be bought and sold across different ledgers and so on. And composability means you can combine different kinds of assets to create a full transaction. So let me explain some more. So what is this Finternet architecture we are proposing? First, put the user or the business at the center of the equation. Second, give them applications. Otherwise, how do they talk to the system? They have variety of applications. And now we're very familiar with the idea of applications that we all use for different purposes. Third, we have existing actors, banks, companies, asset managers. They all exist, they all do the business. But in the world of the Finternet, they also are token managers because they are able to take their respective asset and tokenize it. In other words, a bank can tokenize a deposit, a company can tokenize some asset manager can tokenize a mutual fund. All of them can do that. So there's a way for them to do that. And all these tokens that belong to either individuals or companies, tokenized deposits, equity, or real estate, will all be on a unified ledger. Now, the unified ledger is not one ledger. There could be multiple ledgers. There are multiple ledgers of different technologies. So it's not saying use only Ethereum or this or that. It can be any underlying ledger. And there will be protocols for interledger transactions. So if I sell a tokenized deposit to somebody else, that can be done from my ledger to that person's ledger. And then to make all this happen, you have all kinds of trust services today. For example, if you buy a piece of art, somebody gives a provenance certificate saying this is a genuine piece of art. Or if I buy real estate, somebody certifies that, and so on. So we have people who provide trust services who are all talking to each other. Now, what this does is now we have two levels of trust in such a system. The tokenization itself, because of its immutability and other features, is one level of trust. So if I take a bank and tokenize a deposit, that deposit carries with it all the attributes of that token, and it's immutable, so it can't be changed. It can be sold very easily. And second, the trust service providers provide an additional layer of trust, so we can create a very high trust system. Now, this system can be very high volume. So you can build a very high volume, low cost transaction system, being able to do billions of transactions of different kinds of assets tokenized, but all transacted in the same way. This is a very important point, that no matter which asset class it is, I can convert it to a standard way of doing things, and then use the standard token engine for doing it. So think of it is you have a car, you have an old engine, you remove the engine, and you airdrop a new high-performance engine. That's what we're doing here. It's a very simple, very elegant way of taking our financial systems to a whole new dimension. And by doing this, you reduce friction to usage, you reduce friction to adoption, and at any point, even when I sell my tokenized deposit to somebody else, that person can go back and de-tokenize it with the bank. So you can always go back and forth. So that way, it's not like a parallel economy. It's really nothing but a tokenized representation of the real world. But when you take a particular deposit and tokenize it, the bank will mark that this is already tokenized, and therefore you can't do anything else with it. So it has to operate either in the tokenized world or in the real world. But you can go back and forth. It's a very elegant way of combining the today's world with the best power of cryptography. And above all this, of course, is trust and governance. So all this will work within the regulated system. So whether it's the regulators, whether it's the government, whether it's international bodies, they all have a view into what's happening. So that's why you're combining the best of both worlds. Now let's take a few use cases. So Maya is a creator setting up a new business. She needs some capital to start. In the old days, she wants a loan against property. You would do paper-based, unreliable due diligence. You know what it is like to get a loan. In this new world, Maya would take her documents, maybe the house papers, tokenize them, give them access, and somebody will give she can get a loan against that. All that will happen in a tokenized world. And then once the loan is given, that documents can be locked and kept in a non-tamperable way and always taken out when you want to. Or she wants trade insurance for de-risking her cash flow. Here again, instead of doing all that paper-based stuff, she can create a token and get the insurance for the invoices that she has, and then all the settlements can happen immediately. Or if you have, suppose she wants a government grant, then again, she can apply for a grant for a solar-powered office, get a tokenized verification, and issue the token. And then she can apply for global carbon credits because this is now verifiable, authenticated data that she has implemented an energy-saving platform. So these are all ways you can do it in this new world of the Finternet. Finternet also enables efficient dispute resolution because you have the full provenance of all the assets. You can resolve it very easily. Just to give you a sense, today in India, 10% of the cases in our judicial system are check bouncing cases. 10%. Imagine if you had online dispute resolution for all these things, then you'd be able to dramatically reduce the whole cost of conflict resolution in the financial system. So what is important here is separation of individuals or consumers or businesses from governance, from technology. So essentially, we are separating this out and putting the technology as a universal layer below with no pretensions of creating some parallel economy. They are playing the role of enabling the Finternet to succeed. All the governance rules are at the governance layer, so every transaction in this system will follow the rules of the appropriate regulator, appropriate government rules are all applied at the governance level. So it's safe and secure by design. It's designed fully with public authorities, and it provides for different kinds of trust providers, be it attestation or be it or provenance of art or whatever. Interestingly, the paper on Finternet was written by Mr. Augustine Carstens, the general manager and CEO of BIS, and I am the co-author with him. Paper was done entirely with the support of Dr. Pramod Verma and Siddharth Shetty. But the fact that the general manager of BIS, which is the central bank of central bankers, has shown this, shows how much it is very much a mainstream idea, that this is something that central bankers want. Now, is tokenization something new? Not really. The crypto world has seen tokenization for quite some time, and even today, we are doing different kinds of asset tokenization. In fact, India is doing a great experiment in CBDC under the leadership of RBI, and NPCI is implementing tokenization for the last 1-2 years. So we are doing many things in this space. But our feeling was you need an overweening holistic architecture which allows it to be user-centric, which allows multiple asset classes to be interoperable, and which creates a universal architecture for ledgers, how you write a token to the ledger, how you transfer a token, how do you do interledger protocols. All that can be standardized. Because one thing we have learned is when you unlock friction, you have an explosion of market usage. And if we continue to just try it in bits and pieces, you will not be able to unlock the friction. If you have a holistic architecture which cuts across all asset classes and unlocks it using similar APIs, similar schemas, and everything is spelled out, then suddenly it will unlock huge amount of business activity. So Finternet is like a network of networks. It really connects individuals and businesses. It's across, it can be a global thing. It's basically universal rails with permission flows. Universal rails is the technology part of it. Permission flows is the governance part of it. Now, so far it sounds, okay, all this is great, but so what? This is not just an architecture or a paper. it is actually coming together on the ground. We already have Finternet labs coming up in different parts of the world who are working on it. There's tremendous energy here. There are lots of global hackathons happening. There are a lot of local ecosystems which are coming together. And all that is really coming to life. So Finternet is not just an idea. It is getting implemented as we speak around the world. And we have open source sandbox. Developers can build apps. Financial institutions can manage tokens, or public authorities, regulators can observe. All this is already there in our GitHub and other places. And we already have a community of companies around the world working on this, addressing different parts of the Finternet issue, user applications, ledgers, how to do programmatic compliance. So everybody is looking at different parts of the problem, and we are orchestrating, bringing all these ideas together. So while it's an ambitious vision, we'll actually do it step by step. And, would you guys like to be part of this? Yeah, all right. So to show you that it's for real, I'm going to ask my colleague and young friend, Siddharth Shetty, to give you a demo of how an actual Finternet application will look like, or two demos.
Yeah, if they can bring up the demo as well, please. I always get goosebumps after Nandan speaks because it's sort of like a peek into the future, what's going to play out. So out here, what we felt we would show all of you, in addition to what so far has been, an abstract concept known as the Finternet, is really bringing this down to code. If you had to prototype this, what would it look like? This journey is not going to be quick. I mean, we see this playing out over the next 10 years. But if we actually had to get to, working prototypes, working code, how are you going to bring different asset classes together, which today have multiple silos, multiple different settlement systems? Is that even possible? So the first step is really, imagine I'm an individual, and my first gateway into the Finternet is my wallet application. But a wallet that could be a holder of credentials, holder of money, holder of different property records. And so in this case, I'm just signing up with one wallet application. This is not my real number in case anyone's taking note for privacy reasons. But out here, I'm very simply going to create a basic wallet. It doesn't require any KYC because I'm not doing any financial transactions. I'm just authenticating. And so a key construct within the Finternet is how do you layer compliance? Depending on the type of transaction, then can I attach corresponding KYC proofs, so on and so forth. So now I've signed up. It's as simple as that. I've got my own Finternet QR code. What happens next? The next step is I want to use this to participate in the flow of money. In this case, I go to another application. And this is an application that can be built by any developer. The apps are fundamentally not regulated within the Finternet. The flows are regulated. The issuers are regulated. And so any third-party developer creates one. In this case, MyFin is one of those. I sign in. And now that I've signed in, I want to tokenize my existing banking deposits as it's traditionally known. Deposit not really meaning fixed deposit, but savings account, current account, so on and so forth, right? So in this case, I choose ABC Bank. ABC Bank can say, this is the limit. If I have a balance of 10,000 rupees, I'm allowed to tokenize maybe 2,000 of those rupees as per regulatory norms. And so in this case, I have tokenized that amount, and it's available for me to transact as INR within the Finternet. I don't have to use any other form of cryptocurrency. In this case now, I want to transfer some of this to Nandan. And, I feel Nandan works extremely hard, so I'm going to programmatically attach a use case that he can only use this for entertainment-related purposes like tickets, but you could attach many other use cases. I mean, you could really explode this to programmatically doing government payouts, programmatically choosing, instead of expecting a farmer to have a title deed, as the governor spoke about a few days back. You can programmatically control the end use of money, all on common universal infrastructure, not purpose-specific siloed systems or one app that does this. And so in this case, I'm transferring 2,000 rupees. I authenticate. In real time, 2,000 rupees has been transferred. And this playground is completely open sourced. You can see in this case, we integrated with one ledger, which was Solana, and the transaction shows up that you can actually take a look at. Right? Now, there's a lot more work that needs to go into this, but this is a basic flow of money transfer that's been made programmable. The second step, as you heard Nandan speak about, was an individual wanting access to a loan against a property. And as we all know today, physically those property records get locked in a locker. And so, again, some entrepreneur creates their own property application. MyProp is an example of that. I go ahead, register with them. I decide to get started. Now, because in the Finternet, you have the ability to add verifiable credentials, all your traditional property documents, ownership certificate, no objection certificate, valuation records, can get digitally attached. So I'm giving my permission to share these records. And when they get shared, they can go to the corresponding lender once it's been tokenized. So I decide to request for a loan, share those tokenized data points. I'm proceeding to share it with the lender. I can see those loan offers, right? So the lender can now underwrite against verifiable, authentic data that's been issued by whoever they trust. I view the loan offer, I select it, I decide to sign it. If you actually zoom in, we do believe a lot of contracts will evolve with more variable clauses such that it's linked back to the underlying smart contracts. But I sign the loan agreement, and in real time, that property gets locked, and the amount is dispersed into my wallet, the same wallet. I'm not going again into N different applications. And so this is really how it comes together. Some of you may be wondering, how did even the bank come on board the Finternet? So we created a very quick prototype of that. You can imagine your bank as a token manager decides, okay, I want to enable for my customers a current account product, which is nothing but a set of smart contracts. I choose the type of account, I choose my rules against this, I choose the corresponding configurations attached to that account, the limits that are applicable, KYC required, does this work for cross-border or not, and I can in real time deploy that, and once it's deployed, then transactions start to get basically audited against that. So if you see the previous transactions which happened against a savings account, you can actually get into more and more details of that, of the transaction. Banks may report it, freeze it. So all of those layers, this is just a very, very basic prototype, but it just shows what is possible when you unify the underlying infrastructure and unleash that back to innovators. So that's an overview of the demo. Quickly behind the scenes how it works, because sometimes we get questions saying, that looks exactly how I transfer money today. There's the same questions UPI got saying, I could do it over IMPS. What's different? Seems like a very small delta. So that's a reason why we thought we'll show you a quick peek without getting too much into the details. But really what's happening is you now have unifying infrastructure that allows you to do settlements. That's what the unified ledger does. That's unbundled from the technology and the apps on top. And that's a simple flow for money. And similarly, this is a simple flow for property. And the last thing I would add, a key part of the Finternet design, is how do you, in an asynchronous manner, allow for different participants to come in? Property registrars, for example, in India, are state-governed. And so it's not like they're all going to join the same table, and all of them are going to come on board at the same point in time. So architecturally, how do you allow for each of these authorities to plug in? But when they do plug in, they are part of a larger interoperable whole. And that's really the core idea behind the Finternet. So I'll hand it back to Nandan. Thank you so much.
Thank you. So you can see that this is not just theory. People right now, there's a dynamic global community of developers who are actually building things, debugging these things to show how it will work. And this was just in April where this paper was launched in Washington with Mr. Augustine Carstens of BIS. And there were 3 other central bankers, the governors of Germany, Brazil, and Korea. So they were all part of this launch. And there are 2 papers that you can look at. The paper by Augustine and myself, and then there's a paper by Pramod, Siddharth, and myself on the technology. They're complementary documents. The first one is an architecture document. The second one is a technology document. Please read it if you can. And everything you want to know is on this. I'm going to leave this here so that you guys can, see the QR code. And this is a movement. This is not 1 year or 2 years, this could be multiple years. But this movement, we believe, is the beginning of the transformation of the financial system by taking the traditional financial system, marrying it to the power of cryptography, and creating a whole new user-centric, universal, unified way of doing finance in the 21st century. Thank you very much. Thank you.
Ladies and gentlemen, can we have the loudest round of applause as we all join the movement? Ashwin Nilekani sir has mentioned and shared about this amazing initiative. This is the cutting edge trend that we're talking about that is truly shaping the future of financial ecosystem. Now that being said, I know that's bound to happen inside the hall. That's bound to happen, especially when you have a behemoth of a speaker joining in. But let me also inform you that up next, we'll also be having the next session featuring the Governor of Reserve Bank of India. But that session will begin exactly at 5 p.m. I'd like to urge all of you to please come back inside the hall exactly at 5 p.m. As of now, if I could urge members of the audience to kindly proceed to the pre-function area. This hall will be taking a break for the next 15 minutes. We'll commence the next session exactly at 5 p.m. So I'm going to urge all of you to kindly proceed to the pre-function area. Of course, let's keep safety in mind. There's a massive commotion out there, but that's bound to happen when we have a house full of an audience. So thank you for being with us, but please do be back exactly at 5 p.m. for another exciting launch and a very, very exciting lineup of speakers joining us. Thank you. Which is why I'd like to request you to kindly occupy the place or the seats right behind. And please note, our next session will only commence at 5 p.m. I repeat, 5 p.m. We're trying to make sure that there's ample space. Just a small request again. First 6 rows, I request the delegates in the first 6 rows to please head to the seats behind. This is purely for protocol reasons. I request you to please head to the chairs, the seats right behind. And thank you so much. Thank you again. First 7. All right, I've been informed. I'm getting my math right and my vision right. It's not just the first 6 rows, but the first 7 rows. Thank you, sir. First 7 rows. I can see a little bit of a widened smile there. But thank you, sir. Thank you so much. The first 7 rows, I request our delegates to please head to the rows, the seats right behind. You know, back in the morning, one of our speakers very rightly said that a hall like this, or for that matter, GFF, literally defines the ambition of the fintech industry, the fin and the tech industry. And I think this is a shining example. So thank you so much for your patience again. Thank you so much for obliging with us. We'll get the next session started exactly at 5 p.m. Thank you.
weather.
ask everybody to take seats. Front row, everyone, please take seats. Are all those people who are standing, even in the front row, all those people who are sitting, please take your designated seats or...
Ladies and gentlemen, we'd like to request all of you to please take your seats. We're about to get up for a very power-packed keynote, and I'd like to request all of you to please take your seats. We managed to extend the room as well to accommodate all the amazing delegates, all of you under one roof. So I'm going to request all of you to ensure you're inside the hall. In the next couple of minutes, we're about to get started. So I'm going to request all of you, all the ones in the first few rows as well, please take your designated seats. Kindly take your seats, everyone, as we get up for the next session. Ladies and gentlemen, once again, I request all of you to very quickly take your seats. All the ones in the first few rows as well, kindly occupy your designated seats at the earliest. We're about to get started with the next session, and I request all of you, very quickly, please take your seats. All the ones in the first two rows as well, please take your seats. Thank you. Ladies and gentlemen, once again, a really quick request. Everyone in the first row, please occupy your designated seats at the earliest. Really quick, if I may put it that way. Once again, ladies and gentlemen, everyone right across the first row, I'm going to request you very quickly, occupy your designated seats. Well, I can see it's a house full already, so thank you so much for joining in, but a quick request. The only way we can begin the session is if you all take your seats, all the ones, especially in the first few rows, really quick. Well, let me inform our members of the audience that we're all gearing up for a very befitting keynote session around fintech innovations for India at 100, shaping the future of India's financial landscape. And I know we're all ears, all eyes, all set for this session to begin. But owing to protocol, I'm going to be requesting everyone who's still standing right near the stage, I'm going to request you all to very quickly, please take your seats. All the ones who are standing near the stage area, I'm going to request you to please take your seats. Thank you. I'm going to request you to occupy your designated seats really quick. Everyone near the stage area. We need to clear the area, the aisle area. I request you all to very quickly take your seats. While the hall is literally brimming with ambition, with a vision, And it's wonderful to see the scale of it getting bigger and better, even bigger than before. But that's going to be one quick request. All the ones near the stage area, very quickly, please take your seats. Thank you. All the delegates, please occupy the seats. I'm going to request you to also please clear the stage area. Please occupy your seats really quick. Thank you. And with that, ladies and gentlemen, we're about to begin with the much awaited keynote. Once again, I'm going to request all of you to take your seats. Please take your designated seats really quick. Well, all I can admit is that from this side of the stage, I can see the hall is literally brimming with the present and the future of fintech, with ambition. And I'm sure we're all keen, all ears, all set to witness some of our transformative leaders come on board to share their words with the August gathering. As we're about to begin once again, I'd like to request all the ones who are still standing near the stage area, very quickly, please take your seats. One last request to all the members of the audience near the stage area, very quickly, please take your seats. Thank you. Ladies and gentlemen, this is the last and final call for all of you to take your seats. All of those with the designated seats, I request you please, really quick, especially near the stage area, kindly very quickly take your seats. Well, since morning we've been witnessing and sharing groundbreaking ideas, or for that matter, hearing out on the best practices from the leaders as we manage to forge new partnerships. We believe an event like this is truly a catalyst for a more inclusive, resilient, and responsible financial future. And I'm sure all of us are equally gearing up for this particular session, which is why, while we do have your keen attention, I request you one last time again to very quickly take your seats. All the ones near the stage area especially. Thank you. With that, ladies and gentlemen, we are truly honored to have the esteemed presence of our guest of honor at the Global FinTech Fest 2024, the Governor of Reserve Bank of India, Shri Shaktikanta Das. Ladies and gentlemen, let's have a huge round of applause. Please help me welcome Shri Shaktikanta Das, Governor, Reserve Bank of India, our esteemed guest of honor at the Global FinTech Fest 2024. I humbly invite Mr. Chris Gopalakrishnan, Chair GFF 2024, Co-founder Infosys and Chairman Axelar Ventures. Dhanyavad, sir. Thank you so much for joining us this evening. And with that, if I could please request Mr. Gopalakrishnan to please set the tone and to also introduce and invite our esteemed guest of honor. Over to you, sir.
Good afternoon, everyone. Welcome to this special session with Governor, Reserve Bank of India, Sri Shaktikant Das. Can I request everyone to settle down? First of all, I would like you to give a round of applause. Sri Shaktikant Das has been recognized as the best central bank governor for the second year consecutively. As introduction, I will mention three things of many things I could do. You know, the role of a regulator is enabling and enforcing. Without enabling, enforcement is not possible because nothing to enforce. And I believe that Reserve Bank of India, amongst other regulators in India, have done a fantastic job of working with the industry and making innovation possible, and with innovation creating a economy that's inclusive, that's equitable, and that's driven by technology. So managing the economy, the fifth largest economy, the fastest growing economy, managing inflation, and strengthening the economy such that now we can look at the next 10 years with confidence. That's one. Second is working with industry to introduce products leveraging emerging technologies. As I said, creating a society that's inclusive, building trust in the financial system. And the third thing is, the Reserve Bank of India is fully aware of the opportunities emerging technologies provide. And Reserve Bank of India is working with industry to leverage these technologies, working with industry to find the right set of regulatory framework such that innovation can be deployed to provide new products and services in the economy. I'm sure that the governor will talk about these in his speech. So without further ado, I invite Sri Shaktikant Das, Governor, Reserve Bank of India, to deliver his address. Thank you.
Good afternoon. I hope I'm audible to the last section in this hall. It's indeed overwhelming to see such a large gathering here of serious players in our financial sector and in particular the fintech sector. I think each one of you who's present in this hall is contributing to the nation's progress, is also contributing to the global developments in financial services sector as well as in the fintech ecosystem at a global level, irrespective of which country you come from. And I'm told by the organizers that by the third day, the expected footfalls through registrations is going to touch 80,000, 80,000. So a big round of congratulations and appreciations to the team, already to the organizing team, and I'm told already 50,000 is the footfall which has been recorded so far. So with that, let me begin my address. Shri Chris Gopalakrishnan, members of the organizing team, dignitaries present in the audience, CEOs of banks, NBFCs and fintech companies and their other executives, members of media, ladies and gentlemen. I am very happy to participate in the 5th edition of the Global FinTech Festival, GFF. I would like to congratulate the organizers, the NPCI, the PCI and the FCC for bringing together diverse stakeholders from the fintech ecosystem, including fintech innovators and companies, banks, NBFCs, regulators, and others for this year's GFF. This event has grown into a much-awaited fixture in the calendar of not just the fintech industry, but also of the broader technology ecosystem. The GFF indeed represents a true melting pot of ideas where innovative concepts and diverse perspectives come together with potential to shape the digital future of our country and especially the financial sector. It also provides a unique opportunity to align our goals and strategies to ensure that the fintech ecosystem continues to grow dynamically and sustainably. India is now a fast-growing economic powerhouse with an increasingly tech-savvy population. India's financial sector has witnessed a remarkable transformation driven, among other factors, by the fintech sector. Publicly available information places the number of fintech founded in India at approximately 11,000. The sector has received investments of about $6 billion in the last 2 years alone. In my address today, I propose to highlight 3 major aspects. First, setting the priorities for India at 100. Second, technologies for the future. And third, the regulatory architecture for fintechs. I would like to begin by the first part of the first theme which I wish to highlight, that is setting the priorities for India at 100. As you know, India will reach 100 years of its independence in 2047, and that's what I mean when I say India at 100. I would like to begin by quoting Mahatma Gandhi, who had said, "The future depends on what we do in the present." Therefore, as we proceed in our journey towards the centenary of India's independence in 2047, it would be essential to reflect and imagine the future of our financial landscape, its requirements, and the technologies that will shape it. This journey will be marked by dynamic shifts in technology, regulation, geopolitics, and growing societal expectations. The financial sector is experiencing rapid digitalization and innovation. While all of us strive to enhance financial inclusion, optimize digital payments, and harness emerging technologies like blockchain and artificial intelligence, we also confront the inherent unpredictability and interconnectedness of the global financial system. In this environment, developing a mindset that anticipates disruption and embraces change with prudence becomes very, very important. Financial institutions and fintech startups alike must therefore adapt swiftly, leveraging agile strategies and robust frameworks to capitalize the new opportunities while mitigating the connected risks. It's up to the stakeholders in the Indian financial ecosystem, banks, non-banks, fintechs, regulators, and the government to foster innovation with resilience. While the fintech ecosystem is ushering in much needed personalization and contextualization of finance for consumers, the context needs to be broadened to build a financial system that serves the broader society. To achieve these, I wish to propose the following 5 policy priorities for the future of India's financial system. The first policy priority would be digital financial inclusion. As a policy priority, financial inclusion should ensure that everyone has appropriate access to financial services. The Reserve Bank's Financial Inclusion Index, which we launched in 2021 and which measured 53.9 in March 2021, has gone up to 64.2 in March 2024. So from 53.9 in 2021 March, it has gone up to 64.2 to this year's, that is March 2024. As a country, we have succeeded in ensuring banking access to every village within a 5-kilometer radius or a hamlet of 500 households in hilly areas. So far, 530 million Jan Dhan accounts have been opened under a national mission. And incidentally, as I'm speaking to you, the Jan Dhan scheme of the government has completed 10 years since its establishment, and its progress is there before all of us to see. Initially, the apprehension was that all these accounts will be zero balance accounts and there will be no activity, there will be no sort of transactions taking place through such financial accounts. But I think the experience over the last 10 years has completely belied such apprehensions, and today there are 530 million Jan Dhan accounts, most of it in the name of women, and many of it in the name of women, and the total savings bank savings in these accounts, I don't recollect the number, but it is a huge amount. And I have to also mention that of the Jan Dhan accounts, 66% of the accounts have been opened in rural and semi-urban areas, and 55% with women beneficiaries. While significant strides have been made in expanding financial inclusion, the evolving landscape demands a shift towards digital financial inclusion. That is, promoting secure and digitally enabled financial services and products for the financially excluded and underserved population. Digital financial inclusion has the unique advantages of scalability and cost effectiveness. Accordingly, the next 2 decades will predominantly be about leveraging technology to deliver accessible and tailored financial services that meet diverse needs. In the pursuit of digital financial inclusion, fintechs may strive to offer innovative and accessible financial services, bridging gaps in traditional banking with digital payment solutions, microloans, and affordable insurance. They can enable seamless access to financial services in remote areas through mobile banking apps, digital wallets, and online lending platforms with superior and safe customer experience. The use of data analytics and AI could further enable personalized and efficient financial solutions. I would now like to highlight and speak on priority 2. I said that there are 5 priorities I would like to highlight. Priority 1 was digital financial inclusion. Priority 2 is digital public infrastructure or DPI. The second key policy priority would be to further deepen digital public infrastructure. DPI, which encompasses frameworks like digital identity, that is Aadhaar, universal fast retail payments, that is UPI, and targeted payment solutions like platform for bill payments will enhance the efficacy of the financial system in general. They would be key tools to promote interoperability, transparency, and cost effectiveness. New DPIs could address emerging challenges such as frauds, cyber threats, data privacy, and other concerns. They could also support the integration of advanced technologies like blockchain and AI to enhance security and efficiency in financial services. Continuous innovation is crucial in harnessing technological advancements and maintaining a competitive edge in the global financial landscape. One significant initiative in this direction is the Reserve Bank's pilot on Unified Lending Interface, that is ULI, earlier known as the Public Tech Platform for Frictionless Credit. ULI aims to enable lending institutions to offer frictionless end-to-end digital credit by leveraging consent-based data and related services. There are about 50 such types of data services on the ULI platform. Apart from banks and NBFCs, we are now focusing on inclusion of other lenders like cooperative credit institutions through the NABARD. A full-scale launch of the ULI will be done in due course. As I said 2 days ago in another event in Bangalore, the new trinity of JAM, UPI, ULI will mark a revolutionary step forward in India's digital public infrastructure journey. Priority 3 that I wish to highlight is consumer protection and cyber security. Ensuring robust consumer protection is crucial for upholding trust in the financial system. As consumers are increasingly relying on digital financial services, their expectations for personalized, efficient, and seamless experience are also growing. Alongside traditional risks such as mis-selling and fraud, new manifestations of consumer risks such as data privacy and security breaches have emerged with the advent of new technologies. Leveraging technology for real-time monitoring and ensuring regulatory compliance will be essential to address these challenges effectively. The Digital Personal Data Protection Act 2023, that is DPDP Act 2023, is a cornerstone in India's consumer protection landscape. It marks a significant shift towards safeguarding personal data. This act enshrines the principles of data minimization and purpose limitation to ensure that organizations collect only necessary information and use it solely for specified purposes for the required period of time. It empowers individuals with the right to access, correct, and erase their data, thus giving consumers greater control over their personal information. This act incentivizes businesses to adopt robust data protection measures, which will ultimately enhance trust in the digital transactions. Dark patterns such as misleading buttons, hidden charges, and forced continuity have become big concerns in the digital marketplace. The Guidelines for Prevention and Regulation of Dark Patterns 2023, issued by Government of India, is an important step to protect consumers from unfair application of technology in businesses. These guidelines aim to identify, prohibit, and penalize restrictive and misleading practices so that consumers can make informed choices. On their part, banks and fintech NBFCs are expected to adopt a customer-centric approach, implement robust security measures, offer transparent financial products, and adopt fair lending practices. Algorithmic decisions need to be fair and unbiased and treat customers equitably. Minimizing technology risks requires investing in resilient IT infrastructure and continuous monitoring to protect against cyber threats and technical failures. By embracing these principles, businesses can enhance consumer trust, foster long-term relationships, contribute to a more secure and reliable financial ecosystem, and ensure their own long-term viability. Beyond these steps, cybersecurity emerges as a critical pillar in safeguarding India's digital financial ecosystem from a systemic stability perspective. As financial transactions increasingly migrate online, the threat landscape is expanding exponentially. Investing in state-of-the-art technologies such as AI-driven threat detection, analysis, and mitigation, along with clear focus on improving human resource capabilities, are indeed necessary to bolster resilience of our information systems. Promoting cybersecurity awareness among consumers and employees alike are essential steps towards building a secure digital economy. As a regulator, I have to emphasize these aspects on behalf of the Reserve Bank, while at the same time reiterating our continued commitment to promote innovation. Priority 4 is sustainable finance. Long-term economic stability needs prioritization of sustainable finance, sustainable growth, and environmental preservation. India's commitment to environmental preservation is enshrined in Article 48A of the Constitution of India. From a financial sector perspective, we meaning the Reserve Bank, we have taken steps for ensuring sustainability with recent initiatives like Sovereign Green Bonds Framework of India in 2022 and the Framework for Acceptance of Green Deposits in 2023. These frameworks are expected to play an important role in financing green projects, incentivizing sustainable practices, and lowering societal costs of development. Despite their benefits, green bond and green deposit frameworks nonetheless face several challenges. They include scalability, as the market for green bonds needs to expand significantly to attract larger issuances and diverse set of investors. Ensuring authenticity and impact of green projects financed through these frameworks requires robust monitoring and reporting mechanisms. Technology can play a pivotal role in overcoming these challenges. Blockchain technology, for instance, can enhance transparency and traceability in green bond issuances and provide immutable records of project impacts. Artificial intelligence and big data analytics could enable banks and investors to assess environmental risks and opportunities associated with their green investments. Fintech innovations such as digital platforms for trading green bonds and impact measurement tools can streamline processes and attract a broader investor base. Looking ahead over the next 2 decades, fintechs will be instrumental in driving the progress in transition finance, climate finance, and nature-based solutions, strengthening regulatory frameworks, enhancing investor awareness, and fostering public-private partnerships will be very critical. By harnessing the transformative power of technology and promoting innovation in sustainable finance, India can accelerate its transition towards a resilient and low-carbon economy. We have to put our heads together to achieve sustainable growth and environmental stewardship for the future generations. I would now like to focus on priority number 5, that is global integration and cooperation. India has engaged actively in international fora and bilateral agreements to foster economic cooperation with many countries. Going forward, strengthening financial infrastructure, including cross-border payment systems, will be our key focus areas. India, with its tech talent and evolved financial fintech ecosystem, holds the potential to serve as a global hub for digital innovation and fintech startups. Building and strengthening strategic partnerships, reinforcing our commitment to international cooperation, developing institutions of excellence in the areas of technology and innovation across a wide spectrum of areas, including financial services, would give the right impetus for our journey towards 2047. Based on encouraging response we have received from several jurisdictions, we are now focusing on making the UPI and the RuPay truly global. The deployment of UPI-like infrastructure in foreign jurisdictions, facilitating QR code-based payment acceptance through UPI apps at international merchant locations, and interlinking UPI with fast payment systems in other countries for cross-border remittances are on top of our agenda. Notable progress in this direction has already been made with countries like Bhutan, Nepal, Sri Lanka, Singapore, the UAE, Mauritius, Namibia, Peru, France, and a few other countries. These endeavors underscore collaborative efforts for adoption of India's initiatives across the globe. I would like to compliment NPCI and my colleagues in the Reserve Bank for what has been achieved so far. But we must resolve to do more in this national endeavor. And that's a message. We have done a lot, but we have to do more. India's CBDC, which is in pilot stage, is another example of possible international cooperation. We are now utilizing features like programmability to provide credit or government assistance to landless tenant farmers and carbon credits to farmers through CBDC. While we have successfully demonstrated the interoperability of CBDC with retail fast payment systems like the UPI, we continue to gain from our experimentation on offline solutions. As we make progress, we would be happy to cooperate with other nations in their CBDC efforts. So that was the first part of what I said, priorities for India at 100. The second part which I would like to focus is technologies for the future. Now, looking towards the future of India's financial landscape, the integration of cutting-edge technologies promises transformative advantages across various facets of our life. Artificial intelligence and machine learning are poised to revolutionize financial services in unprecedented ways. AI algorithms are already being deployed for fraud detection. Machine learning models are increasingly being employed in credit scoring, leveraging predictive analytics to assess creditworthiness and expand access to credit. AI-driven chatbots and virtual assistants are steadily enhancing customer service experience by providing personalized recommendations, resolving queries promptly, and improving overall satisfaction. As AI and ML capabilities continue to evolve, their potential applications in regulatory compliance, investment advisory services, and algorithmic trading are expected to further redefine the financial landscape. Simultaneously, we should also fully understand the risks posed by AI and facilitate calibrated and responsible adoption. Players in the financial sector, central banks, and governments should facilitate development of trustworthy AI, keeping in mind the concerns surrounding data privacy, explainability, accountability, and transparency. What can be a desirable model for governing technologies by AI may perhaps be a key issue for discussion among the experts assembled here and in the next 2 days. Now, the Internet of Things represents, that is IoT, represents another frontier of opportunity for the financial sector. IoT devices embedded with sensors and connectivity capabilities are reshaping the payments ecosystem by enabling seamless transactions through connected devices such as wearables and smart appliances. Further, IoT-driven data analytics offer insurers real-time insights into policyholders' behavior and risk profiles. They can facilitate personalized insurance offerings and dynamic pricing models. IoT-enabled devices in supply chain finance and asset tracking have the capacity to streamline operations, enhance transparency, and mitigate risks. As IoT adoption grows, collaboration between fintech innovators and IoT developers will be crucial to harnessing its full potential. Now let me turn to quantum computing. Quantum computing holds great promise as a game-changing technology with profound implications for cryptography, financial modeling, and risk management. Its potential to perform complex calculations at great speed and scale poses both opportunities and challenges. In cryptography, quantum-resistant algorithms are being developed to safeguard sensitive financial data from quantum-enabled cyber threats. In financial modeling, quantum computing's ability to process vast amounts of data and simulate complex scenarios promises to revolutionize portfolio optimization, trading strategies, and risk assessment. Moreover, quantum computing's potential to solve optimization problems could enhance real-time decision-making processes and improve predictive analytics in risk management. As these future technologies continue to evolve, their integration into India's financial ecosystem will require strategic investments in research and development, collaboration across sectors, and proactive regulatory frameworks to ensure ethical deployment and mitigation of potential risks. The Reserve Bank is fully conscious of all these issues, and we are giving due attention to these areas. Finally, the third part of and the last part of what I wanted to say focuses on regulatory architecture. Finally, as I said, I will like to touch upon regulatory approach for the fintech sector. Sustainable and orderly development of fintech sector requires an appropriate balance between innovation and prudence. Our endeavor is to carefully craft regulations to achieve this delicate balance while simultaneously ensuring trust, security, accessibility, risk management, and competition. In this context, I would like to mention that several regulatory guidelines have been issued in the recent past by the Reserve Bank after wide-ranging consultations with stakeholders. These include the issuance of the guidelines on digital lending in September 2022, master directions on outsourcing of information technology services in April 2023, and master directions on cyber resilience and digital payment security controls for non-bank payment system operators in July 2024. A preferred approach, this may be of interest to all of you, a preferred approach for achieving balance between innovation and prudent regulation involves self-regulation within the fintech sector. Self-regulatory organizations, that is SROs, comprising industry participants and having a good understanding of the sector's unique challenges and opportunities, would be in a position to give appropriate suggestions to regulators on issues of regulation that are both practical, that is the suggestions should be that can be practical and effective. So these SROs, when constituted, they are uniquely placed as an interface between the regulator and the fintech sector, because these SROs would understand the requirements and the evolving technologies. They are closer to the ground, and they can sort of consolidate, synthesize, analyze, and give practical, effective, and stable and what we can say prudent recommendations to the Reserve Bank, which we are always willing to discuss and always willing to engage with all of you. Now, the announcement of a framework for recognition of self-regulatory organizations for fintech by the Reserve Bank, which we did last year in 2023, marks a pivotal step forward in this direction. I think we issued the framework sometime earlier this year in 2024. So this is actually a pivotal step forward in the direction of positioning SROs. It may be recalled that in last year's GFF, in this event, I had announced our desire, that is Reserve Bank's desire, to see at least one fintech sector SRO, self-regulatory organization, taking shape by GFF 2024, that is taking shape by this year's event. I am happy to announce that of the 3 industry bodies, entities who have applied for recognition as SRO, the Reserve Bank has granted recognition to one applicant, that is to one entity. Of the remaining 2 applications, one application has been returned with a provision for resubmission after meeting certain requirements. The 3rd application is under examination. Through regular consultations, feedback mechanisms, and policy dialogues, the SROs would facilitate open communication and enable fintechs to stay informed about regulatory expectations and priorities. Just to illustrate the depth of our engagement with the fintechs over the past 1 year, I would like to mention that officials and teams from various departments of the Reserve Bank have engaged in about 750 interactions bilaterally and held about 50 structured meetings with fintech players over the last 1 year. I reiterate our commitment to fostering a dynamic fintech sector. Let me now try and conclude. The journey towards India at 100 is filled with immense potential and opportunities. The transformative power of fintech innovations, coupled with our commitment to financial inclusion, sustainability, and consumer protection, sets a robust foundation for the future. The seamless integration of emerging technologies will further redefine the financial landscape. Let us embrace this dynamic era with a collective vision and collaborative spirit to ensure that India's financial ecosystem not only meets the aspirations of our people, but also sets a global benchmark for innovation and growth. Thank you very much for your patient hearing. Namaskar.
On your behalf, I want to thank the Governor, Sri Shaktikant Das, for this wonderful presentation. And you can see what I meant when I said, the regulator works with the industry to progress innovation and progress the economy. Thank you, sir, very much for this.
Ladies and gentlemen, on that note, first up, can we have a round of applause? And I request Sri Shaktikanta Das, sir, to please remain on stage. I request you, sir, to remain on stage. And I thank Mr. Gopal Krishnan, sir, for spearheading this important keynote for us, this important initiative for us. And as I request Sri Shaktikanta Das to remain on stage, I also thank Mr. Gopal Krishnan, and I invite him to please join the audience because, ladies and gentlemen, it's now time for the much-awaited product launch by NPCI. So we are truly setting the stage. That's right, ladies and gentlemen, that's right indeed. But on that note, I'd like to also please invite on stage Sri Nandan Nilekani. Can we have a huge round of applause for the co-founder Infosys, former chairman UIDAI, and advisor NPCI. May I please invite Sri Nandan Nilekani to please come on stage, and may I further please invite Sri Ajay Kumar Chaudhary, non-executive chairman NPCI, to please come on stage, sir. We managed to gather the priorities, the significant initiatives and the frameworks that are truly shaping the future of India's financial landscape, which is why we bring the excitement together and the energy together as we gear up for the much-awaited product launch by NPCI. So first up, may I please request Sri Ajay Kumar Chaudhary to please address the August gathering, and can we keep that round of applause going one more time, ladies and gentlemen.
A very warm welcome, good evening, and namaskar to each one of you who are sitting here. On behalf of NPCI Group, I welcome the Honorable Governor of Reserve Bank of India, Sri Shaktikant Das, to this event and thank him for his continuing guidance and support. We are also honored by the presence of Sri Nandan Nilekani, co-founder and chairman Infosys, and advisor to NPCI on innovation and public policy. We are also thankful for the presence of Sri Vasudevan, Executive Director from Reserve Bank of India, and senior officers from RBI and government, MD and CEO of banks, leaders from fintechs, startups, press and media, professionals from various fields, and my colleagues from NPCI. It gives me immense pleasure to welcome all of you to be part of this glorious event, to witness the launch of two special initiatives that will take India's digital payments journey to the next level. The number one, delegate payment, we all know it, is the UPI circle. And number two is the BBPS B2B platform, that is business to business platform. These UPI platform features were announced by the governor in different monetary policy statements, and we at NPCI are extremely happy to deliver his expectations at the shortest possible time. Digital payment advisory or advocacy in our country is championed by key figures including the Honorable Prime Minister, Honorable Finance Minister, and Honorable Governor of Reserve Bank of India, reflecting our commitment to a less cash economy. Furthermore, I also wish to acknowledge the pivotal role played by our advisor, Sri Nilekani, whose advice I always found very valuable and motivating. UPI has perhaps, I am underlining perhaps, grown at the fastest pace than any real-time payment system globally. In July 2024, UPI has processed transaction volume of 14.43 billion and settlement value of rupees 20.64 lakh crore. Delegate payments and Bharat Bill Pay B2B platform has the potential to transform the digital payment ecosystem further, expand the reach of digital payment to millions of new users in India and abroad, and facilitate the integration of the next 300 million users to digital payments. Now coming to the specific features, UPI Circle, what we call as delegate payments, will have full and partial delegation feature, which will empower any UPI user to delegate payment capabilities to another individual, allowing transactions to be conducted on their behalf while adhering to the stringent security protocols. This approach will significantly extend the reach of digital payments, thereby promoting greater financial inclusion and ensuring that a broader segment of population will benefit from the seamless digital transactions. As regards BBPS B2B platform, it is designed to revolutionize business transactions by simplifying B2B collection and fostering interoperability among ERP systems, I mean enterprise-wide resource planning systems. By offering an integrated solution, it will enhance the ease of recons and payment tracking for businesses and significantly improve efficiency and accuracy. This platform will not only streamline financial operation, but also increase market penetration by enabling seamless interaction between diverse ERP systems. The impact is likely to be profound as it will empower businesses with more robust financial control, reduce operational frictions, and ultimately drive higher adoption of digital payment solutions across the industry. FinTech at its core is about inclusivity, as Governor has mentioned. We are confident that these initiatives will help spearhead Reserve Bank of India's vision of empowering every Indian with access to a bouquet of e-payment options that are safe, secure, convenient, quick, and affordable to society. I once again thank the support of Honorable Governor Mr. Das, as also to Mr. Nilekani, Department of Payment and Settlement System of RBI, and NPCI Group in building the successful journey of digital payment platform. Thank you once again for gracing the momentous occasion for NPCI Group and UPI and BBPS ecosystem. Thank you.
Thank you. Thank you very much, sir, for sharing the dynamic features and the impact of these products. And in a short while, we're about to witness the product launch. But before that, I'd now like to please request Sri Nandan Nilekani, co-founder Infosys, former chairman UIDAI, and advisor NPCI, to please share a special address with the August gathering. Ladies and gentlemen, let's get the applause roaring. Please help me welcome Sri Nandan Nilekani.
Thank you very much, and it's really a great pleasure and privilege to be here at this event with Governor Das and Mr. Ajay Chowdhury. I think GFF has grown from strength to strength. It's pretty impossible to enter this place because there's so many people here that it's really like an amazing thing. I must say that I've always said that NPCI is a jewel in India's crown. It's just a 15-year-old company. It was set up by the RBI to operate the National Financial Switch, which at that time was run by an RBI subsidiary called IDBRT. And it was set up with 10 banks as shareholders. And today it has become central to India's economy. And we have seen the success, of course, of UPI, but there are many other things. Before UPI, we had IMPS, we had Aadhaar KYC, Aadhaar-enabled payment system, Aadhaar payment bridge. BBPS now. I mean, there's no shortage of great innovations from NPCI that have played a role in transforming the company. So it's really an innovation powerhouse. And the best part is that they have the same drive, the same commitment, the same passion, the same speed that we saw 15 years back. So it's really a company that has really changed the face of India. Also, I think we are now beginning to see the power of combinatorial innovation and private enterprise, because the DPI philosophy always has been public rails, private innovation. So whether we build Aadhaar or UPI or account aggregator, the idea was to build rails that everybody could use, reduce friction, and then allow market innovators to flourish. And today we are seeing an amazing number of companies in every field. And the estimate is that the market value of startups on top of India's DPI is about $100 billion. And many of those entrepreneurs are there in this room. So I think we have demonstrated the value of creating these public rails, opening them up to private innovation, and RBI has provided the regulatory framework to allow these markets to expand, to make, at the same time, make sure it's well regulated and within the guardrails. So I think RBI has been a huge actor in the transformation that we're seeing today. Governor Das, thank you so much for your leadership. Even, today, for example, we see dramatic performance in the capital markets. SIPs every month is $3-4 billion. But that's possible because it's so easy to set up an SIP, so easy to set up UPI AutoPay, so easy to do an IPO. In fact, I think about 50% of the IPOs are using the ASBA platform, using UPI to reserve money. So what I'm saying is all these combinatorial things happening, which have a direct impact on the economy, on economic growth and participation. And so once again, I'm very happy to be here. It's always a pleasure to come here. GFF once a year, you get a shot of energy, you can go back and come back a year later. And every year, there are new innovations from NPCI. You'll see 2 more today. All the best to them. Thank you.
Thank you very much indeed, sir. As you had mentioned, there is indeed no shortage of great innovation, and we are now about to witness that with the much-awaited product launch by NPCI, for which, if I may humbly request our dignitaries to please come together. I request Shri Shakti Kanta Das. Sir, if I could request you, we will harness the power of technology. I request you to place your palm on the iPad, and with that, we will get the launch sequence started for the launch of the much-awaited products by NPCI.
Imagine a room full of people, each speaking a different language, trying to communicate without a single word in common. Sounds chaotic, right? Now, think about businesses. Companies across the world with different systems and practices, trying to connect, collaborate, and transact with each other. It's a lot like that chaotic room, complicated, confusing, and often frustrating. But what if there's a common language that could turn that chaos into harmony? Imagine a world where there are no complex vendor onboarding, no mismatched entries, no manual reconciliation, no repetitive follow-ups. A world where 2 businesses can communicate and understand each other. Now, stop imagining, because the future is here. Introducing Bharat Bill Pay for Business, the universal language for businesses.
Mic check. Thank you. Thank you, Governor Sir, for launching NPCI Bharat Bill Pay for Business. Thank you, Nilkani Sir, and thank you, Chairman Sir, for your presence.
Welcome everyone to the GFF main launch event 2024, and as our dignitary said, an event we all wait for. So as the video talked about, when we think about universal language, for some of us it's food, music, poetry, some of us it's love. But what is it for businesses? Businesses have to deal with reconciliation, invoices, payments. Is there a universal language? Is it music? Rajiv, is this what we're talking about today?
Not exactly music. Maybe after this event we can discuss about music. But we are going to discuss something on the lines of universal language. We know language is a system which is used by individuals and entities to exchange their ideas for communication, which results into a positive action. Likewise, like language, our Bharat Bill Pay for Business APIs enable two businesses to talk to each other, interoperate, which results into efficiency and growth.
Well, interoperability like what Bharat Bill Pay builds for retail business, or perhaps what UPI brings for payments.
Absolutely, just like that. And there are interoperability in itself is a beautiful thing, mainly because of two things. First, there is no manual intervention which is required between the two systems. The systems are always live. They are talking to each other. The businesses, there's no data leakage. And second, the existing systems themselves are made capable to talk. Does not require replacing or overhauling their existing systems altogether. Results into scalability and cost effectiveness. So let's just dive right into it. We have our partners here with us. And what do you think? We go for a live demonstration of how it works?
Absolutely.
Okay.
Let's dive right into it.
Okay. So we have Zoho with us, a leading software organization, which is supported by Yes Bank. We also have EaseBus, and we also have HapPay, which is supported by Axis Bank here with us. And we will see how the businesses are using these multiple applications, and we'll go for a live demonstration of interoperability with these applications. We'll see. So let's start. We also have a customer with us who is using these applications. So for Zoho, we have a customer by the name of Highland Valley, which is into interior designing, interior furniture, right? And what they're going to do is they're going to raise an invoice through Zoho application. So let's start this process. Can I request Mr. Highland Valley to raise an invoice? First, starting through the B2B ID. So Aditi, B2B ID is a powerful feature of Bharat Bill Pay for Business, mainly because it helps other businesses to search and add verified businesses into their books for easy operations. The business has already gone through a KYC process, which means the lengthy paperwork can be avoided. So as you can see on the screen, just by putting in the B2B ID, you've got all the customer details. You've got their address, and these are the details that you can see on the screen. And now I can request them to go for a new transaction. Yes, and create invoice. Okay. So now you can see that they have the billing details, which are pre-fetched through the Bharat Bill Pay APIs, right? And invoicing is another powerful feature because it supports a regular invoice as well as e-invoice. So you can add the tax component, you can add the product details. I see that they are adding chairs for 1 rupee, okay. Chairs, they can add the tax component, yes, and they can save and push the invoice. Okay. The invoice has been created. Okay. So now we can check whether the EaseBus has received the invoice. Aditi?
Yes. And on the other side, we have other business, SRB Media. So let's check here. Have they received the invoice? The business has the choice to accept or reject the invoice. As we refresh the status, you would see it has 3 actions to do: reject, return, or accept. In this case, SRB Media accepts the invoice and it becomes the part of their accounting transactions. With true interoperability, as we see, 2 platforms are talking to each other with a simple invoice. Rajiv, in this entire flow, why don't we just do a live transaction of payment as well?
Yes, we'll get right into it. We can also see on the Zoho screen that the status has changed to invoice accepted. Okay. Yes, we can get into a payment. As you know, Bharat Bill Pay is a payment agnostic platform. You can use NEFT, IMPS, UPI. So let's go for it.
Absolutely. So in this case, businesses can have various requirements, high value to lower value. In this case, the value being small, we are going to do a payment through a QR code. A QR code is generated, payment method is selected, business authentication is done in this case, and a payment is authorized for an invoice to be paid in real time. While this payment is being made, and we see that the payment is successful.
So now we can check back on the Zoho application whether they have received the confirmation. We'll ask Mr. Highland Valley to refresh their page. Yes, it shows
They have
paid.
received the confirmation.
Okay, great. So we have seen the power of B2B ID, we have seen invoicing, we have seen order management, and we have seen payments. But there's one more thing which we should not miss. Do you want to take a guess, Aditi?
Well, I know about. It's financing.
It's financing, yes. We all need financing, right? Corporates need financing, MSMEs, micro enterprises. So for that, we have partnered with RBI Trades platform, M1 Exchange, and InvoiceSmart, and they are also right here in this hall with us. Why don't we give a demo of how financing works? What do you think?
Let's do a live transaction.
Let's go for another live transaction. We all love the thrill of a live transaction, don't we?
So here we have a business, DPTL. It's a multimedia service onboarded on Cred HapPay for invoicing, for invoice financing. They are going to select an invoice which has been raised by Zoho and is showing outstanding in their books of accounts. The invoice is selected using a B2B ID. All the business details are put in here and applied for. In this entire process, this is a real-time invoice financing process. And here, the business goes for choosing the Creds partner which they want to. In this case, it's M1 Exchange and InvoiceSmart. It is applied for, a repayment date is selected, and a final application is made. Businesses have various needs. There's seasonality, cyclicity, everything needs to be taken care of. Our financing partners ensure that such business needs are met through either capital requirements or cash flow requirements. All of these are met through our financing. And here we have the invoice has been submitted for financing. Can we actually look at the bids as well? When the invoice has been submitted, if we refresh the screen, we would see there are multiple bids which have come to the business. Let's view the bids. In the bids, we have one by M1 Exchange, one by InvoiceSmart. Businesses have the choice of either accepting or rejecting the bid. In this case, the business is accepting the bid for M1 Exchange, which is most beneficial. And here they confirm in real time for an invoice financing. Business can have various needs, and their needs can be met in real time through these processes. Can we check for a confirmation?
We can check on Zoho application whether they have received the confirmation. Mr. Highland Valley, if you can refresh the page. Yes, it shows that the invoice has been paid. All this is through financing. Okay, yes.
Absolutely. So to summarize, if we move forward, Bharat Bill Pay for Business is not only powering payments, it is also powering invoicing, it's powering interoperability, it is also powering financing. And as we move forward, we realize this is probably how the businesses will do a business in future.
Yes, this is not just a payment platform. It is definitely much more than that. It's an engine that will drive the business grow further.
So it's time to say goodbye to old ways of doing business and embrace a simpler, safer, and much smarter way of conducting business. Welcome to the future. Welcome to Bharat Bill Pay for Business, first of its kind, made in India for Indian businesses. Thank you.
We would also like to thank our banking partners, Axis Bank, HDFC Bank, IDFC Bank, and Yes Bank.
And we'd also like to thank our fintech partners, our finance partners. You've made it, all of us come here, and we owe all this to you and your support. Thank you very much.
Thank you. Have a nice evening.
Thank you, Aditi and Rajiv. That was a great demo. Good evening, Governor Sir. Good evening, Nandan Sir. Good evening, Chairman Sir. Ladies and gentlemen, like I'm taking a cue from the Governor Sir's speech, Sir, Dil Mangi More and we will do more, Sir. We are here today to change lives of 300 million citizens of the country. We'll have a bit of a tech conversation. Like we simplified digital payments, we will also simplify tech conversations between ourselves. Tech conversations are actually very simple. I think the first thing is we will choose for ourselves to rest. We'll use the REST APIs and we'll just relax and just take a deep breath. That's the first state. The second is we'll do a request API. I think when the conversation comes up around this time of the year, Dilip says, what's new? I think everybody here is asking what's new. The response is responsible innovation. That's the response to that API. The next API is a concept note. That's the request API. The response API is co-creation with the ecosystem. The next request API is product note. The response API is regulatory approvals. The next API is request launch. And the response is GFF, GFF, GFF. Thank you, GFF, for creating a platform for all the hard work that we do to be showcased here. Thank you for the banks, fintechs, the apps. This is the biggest show that we have put together of co-creation, 35 banks, 20 apps, and 11 TSP partners coming together to create this innovation, sir, that we'll show as a demo to you. Thank you to Team NPCI. Thank you to everyone in the room, and thank you to everyone who's not in the room. Thank you to everyone for the last 45 days who skipped seeing sunrises and sunsets. Thank you very much. And I can tell you this effort is immeasurable. Thank you very much. Thank you in advance for the 180 million transactions that we're going to do this year. I think welcome to the UPI universe. This universe has 400 million consumers already part of the UPI universe. We're going to be adding another 300 million more users to this universe. We have a strong ecosystem of 5 crore merchants in this universe. The UPI universe is easy, instant, and most important, safe. That's the UPI universe. The rules of the UPI universe are very, very simple. In the UPI universe, we transact, but we don't transact all the time for ourselves. We transact for our loved ones. We do transactions to show our love, affection, our care for them. When Lalit is buying a guitar for his brother, when Nidhi is buying medicines for somebody at home, when Vivek is wanting to plan a surprise for his spouse, that's all what we care for. These are people that we're ready to fight for. These are people that we're ready to fight with. These are part of our circle, the UPI circle. With UPI Circle, what you can do is add friends, families, trusted ones with your money. Like you trust them with your emotions, your office squad, your friends group, or the great Indian family. For all of them, UPI Circle. Money never has been about money so much. It's not so much the money, the value of it. It's always been about emotions and stories around money. So we have few stories here. I think in the day you are that modern entrepreneur juggling with multiple things. Your VC calls you for a seed fund pitch, and at the same point of time, your daughter calls up for a shopping plan. That's the dilemma that you're dealing with. How do you really live with that dilemma is what life is about. You are the office help whose man Friday to many can do anything and everything at any time. But you know that the accountant sitting in the corner at the end of the day is going to be asking you for the receipt for the last paisa. That's your dilemma. You're a soldier. You've signed up for protecting the country and the countrymen. There's no dilemma. You're 100% available for the country. But you hope that back home your family is happy and comfortable. UPI Circle allows you and your loved ones to take care of payments so that you don't live those dilemmas every day. What we will go through is a round of demos after this. UPI Circle has two parts to it: partial delegation and full delegation. Just to simplify, partial delegation would mean that you want to give the power of transaction to your loved ones, but you want to supervise. There's a certain discipline and training that you want to do, before which you will want to choose for full delegation. Full delegation is you authorize your loved ones to handle your money directly from your bank account. While you get to see the transaction, you don't actually enter the PIN for authorizing the transaction. So in full delegation, the power is given to your loved ones. So that's a small difference. Partial delegation, the transaction comes back to you for authorization. Full delegation, the power of the transaction is given to the family member, loved one, or the person that you want to authorize. Yeah. We'll go to the demo. For the demo, I have Rahul and Priscilla on the control panel with me. Rahul and Priscilla, you there? For today, Rahul and Priscilla, while they play many roles, they're going to be playing the role of an elder brother and a younger sister. And this younger sister is smart. She was negotiating a rise in her pocket money with the parents, but that's failed. And she was able to get the elder brother to promise a few days back, Raksha Bandhan, that she would get a delegate for a large amount. And Rahul is already committed to it. Right, Rahul? So we'll start with the transaction and the demos here. First, we'll go with the partial delegation product. We'll do the linking where Rahul raises the request to Priscilla to join the UPI Circle. Priscilla accepts it, and then she becomes the secondary user. So we start this journey. There are two screens, so I think you'll have to do a bit of neck yoga here. The screen here is the primary user. The screen on the other side is the secondary user. The primary user, Rahul, opens up the GPay app, powered by the Axis Bank PSP. Clicks on the UPI Circle. Priscilla is already ready. She's a smart one. She's already ready. She's downloaded the app. She's downloaded the Bheem app, generated her UPI QR and the UPI ID. Rahul now scans the UPI QR of Priscilla and then selects Priscilla's mobile number from her contact list. The idea is not to enter here the mobile number, but pick up from the contact list so that you know that the person knows the other person. Selects and then selects the first one, which is approve every payment, which is partial delegation. All the transaction that Priscilla does on this partial delegation would come to Rahul for entering the PIN and authorizing the payment. He selects this, sends the request to Priscilla. Priscilla on the home screen now would get the notification for this request. Priscilla, you're getting the notification? Rahul, you need to commit. Yes. Yes, got it. So Priscilla accepts the notification, their terms and conditions clearly calling out, and she's accepted it. And now Priscilla is part of Rahul's UPI circle. Priscilla, I think it's time to warm up. You have the wallet in your hand for Rahul. We'll do a transaction. Priscilla opens up the Beam app, goes to the scan QR. The Beam app powered by the Beam PSP. She scans the QR. She's buying stationery. She does not want Rahul to panic right now. So she's doing transactions which says that she's a responsible sister. She's buying some stationery there. She's entering the value. And this transaction now, notification comes to Rahul. This is a partial delegation where Rahul will have to enter the PIN in his GPay app. And Rahul, you don't have to share your UPI PIN, but you have to enter the UPI PIN here. You've already taken the partial delegation. You enter the UPI PIN, continue to pay. Enter the UPI PIN, you select Axis, SDFC, State, a lot of banks. Rahul has a choice, he's linked to all of them. He selects State Bank of India, enters the PIN, and the transaction goes through. At this point of time, both Rahul and Priscilla get to see the transaction confirmations. So both Rahul and Priscilla now can see the transactions. Rahul has a choice. If he wants to dispute the transaction, can go to the transaction and raise a dispute using the ODR framework. That's partial delegation for us. Now we'll do full delegation. Rahul, you have to give full controls to Priscilla. She's trained. She knows how to do her transactions. She's got financially literate in terms of how to use UPI, and I think she's responsible. So now we go to the Salary Say app, Rahul. Yes Bank PSP. Now he clicks on the UPI circle, scans the QR. Priscilla is already ready with her app, Amazon Pay. Scans the QR, selects the contact of Priscilla in a contact list, sends the request, approve. Oh, sorry, this time not approve. This is set monthly limits. This is full authorization. The request goes to Priscilla, chooses the bank, month limit. Rahul has an option to set the amount as a limit. So he chooses the amount. 15,000 is the max he can set. He can put a date and time. 31st December, New Year Eve. Rahul. Priscilla, you'll have to be responsible around that time. Selects the bank, SDFC, confirms, enters the PIN, and this mandate moves to Priscilla for accepting. Priscilla has 30 minutes, but I don't think she's going to wait for 30 minutes. Priscilla gets the notification. She opens up the Amazon Pay app, accepts the TNCs and accepts, and this connection is established. Priscilla, you have a full delegation from Rahul to spend that money. Spend it wisely. Priscilla opens up the scan QR. Priscilla will go a bit fast there. You have to test what you get, right? So Priscilla opens up the Amazon Pay app, scans the QR, enters the money, and enters a PIN. And the payment goes through. We'll do a last try. I think 3 is a lucky number here. So we'll do one more. Priscilla and Rahul, PhonePe and the UNO app. This is a partial delegation. The linking has already happened. We'll just do a transaction and we'll see how it works. Yes, Priscilla, you're supposed to do the transaction. Open up the app. Priscilla opens up the UNO app, puts her PIN in, scans the QR. Priscilla is treating Rahul for all these delegations that she has given, and also an interesting fact, she's brought all a group. And I think that's a great opportunity for Rahul. He's still single. So I think from her friends group, I think if somebody chooses Rahul, then Rahul, you have a good chance there for all the delegations that you've given her. Yeah. I think you should have spent more, Priscilla. But go ahead. Use that delegation to the fullest. You know, power is available, take it. Spend. And oh, this one will come to Rahul. Rahul, you have to authorize it. You have a lot of chances there. Rahul opens up his PhonePe app. He's got the request from Priscilla. He enters the PIN. ICICI Bank. Select, enter the PIN. And the transaction goes through. I think thank you for this lovely demos, Rahul and Priscilla. I think, sir, it's been a great effort from the team present here. 30 banks, 20 apps, and 11 TSPs. I can tell you, sir, this is the biggest co-creation effort made by the ecosystem. So thank you, everyone here. Just to end it, I think the UPI Chalega line needs to come in now. अब आपके पास बैंक हो ना हो, UPI चलेगा. अब आपके UPI सर्कल में UPI चलेगा. Thank you very much. Thank you, sir.
Thank you very much, Kunal. And Priscilla, I'm waiting for my treat. All right, jokes apart, ladies and gentlemen, I'm going to request you to please be inside the hall. And dignitaries, what we're now about to do is invite the very partners, the very people who have been responsible in the success of the initiatives Bharat Bill Pay for Business as well as UPI Circles. We're about to have a group photograph with the three of you. So first up, ladies and gentlemen, let me please invite the delegates, the partners of success for Bharat Bill Pay for Business. Let me please invite them back to back for a group photograph. Let me please invite Rahul Harishankar from Happy, Sivaramakrishnan Ishwaran from Zoho. May I invite you all to please come on stage. I further invite Rohit Prasad from EaseBuzz, Ajay Adiseshan from Paymate, Yadvendra Tyagi from Encash, Ketan Patel from MSwipe, Anish Achutan from Open. May I further please invite Sunil G from System XS, Mr. Rajiv Anand from Axis Bank. I'd like to request these delegates, yes, may I please invite you all to come on stage for a group photograph. I further invite Sandeep Mohindu from M1 Exchange, Mr. Prakash Sankaran from Invoicement, Parag Rao from HDFC. I'd like to also please invite Mr. V. Vaidyanathan from IDFC First Bank. And may I also please invite Mr. Prashant Kumar from Yes Bank. As Kunal had mentioned that this was a collaborative effort with co-creation, so I invite you all to please come together for a group photograph. We managed to witness something absolutely phenomenal, absolutely transformational, and I request all of you to please come together for a group photograph. Well, it's not over until it's over, so I'm going to request you all to please be seated. We'll bring those collaborative smiles together for a photo op. Ladies and gentlemen, Mr. Dilip Asbe. The Managing Director and CEO NPCI, Mr. Dilip Asbe, joining in as well. I request our dignitaries to please remain on stage. Up next, we'll now be inviting the delegates, the banks that have partnered for the success of UPI Circle. I request our dignitaries to please remain on stage. Up next, let me please invite our collaborative partners that have helped in the success of UPI Circle. So may I please invite on stage. First up, Shri Anubrata Biswas of Airtel Payments Bank. May I please invite you, sir, on stage. May I further invite Shri Uttam Tibrawal of AU Small Finance Bank, Shri Rajiv Anand from Axis Bank. May I also please invite Bharat Cooperative Bank to please come on stage. I request our partners of success for the UPI Circle to please join in as well. I further invite Shri Sanjay Mudaliar from Bank of Baroda, Shri Hardeep Singh Ahluwalia from Canara Bank. I request you all to please join on stage. I further invite Shri M.B. Rao from Central Bank of India, Dr. N. Kamakodi from City Union Bank, Srimati Apekshita Tipsay from Cosmos Bank, Shri Praveen Kutti from DCB Bank, Srimati Shalini Warrior from Federal Bank, Shri Rishi Gupta from Fino Payments Bank, Shri Parag Rao from HDFC Bank, Shri Rakesh Jha from ICICI Bank, Shri Rakesh Sharma from IDBI, Shri V. Vaidyanathan from IDFC First Bank. May I further please invite Shri Binay Bhushan from Indian Bank, Shri Charu Mathur, IndusInd Bank, Shri Ajay Kumar Srivastava from Indian Overseas Bank, Shri Jagdish Kashyap from Janta Sahakari Bank, Shri Sri Krishna Nech from Karnataka Bank, Shri Bhavnish Latia from Kotak Mahindra Bank, Shri Kalyan Kumar from Punjab National Bank, Shri Rajiv Ahuja from RBL Bank. I further please invite on stage Srimati Aarti Patil from Saraswat Bank, Shri Nitin Chugh and Srimati Vidya Krishnan from State Bank of India, Shri Dolphy Jose from South Indian Bank, Shri Bhaskar Babu from Suryoday Small Finance Bank. May I also please invite Shri Anand Tagarasi from SVC Bank. I also invite the Tamil Nadu Mercantile Bank, Srimati Subbalakshmi Shirali from TJSB. I invite UCO Bank on stage. I also invite Shri Nitesh Ranjan from Union Bank, Shri Inderjit from Unity Bank, and Shri Prashant Kumar from Yes Bank. These are the banks that have literally partnered in the success of UPI Circle. Thank you so much for joining in. You know, look at the number of partners. Even the stage is not able to accommodate. It takes such mammoth number of amazing partners, amazing people to come together to create something so phenomenal. Well, after this, I'll also be inviting the delegates from the apps to join in on stage in a short while. Thank you very much. I request our dignitaries to please remain on stage. And now from the apps, may I please invite Shri Anubrata Biswas of Airtel Payments app. May I please request Shri M.V. Rao from CentPay, Shri Ajay Kumar Srivastava of IOB, Shri Jay Kotak from Kotak 811, Shri Bhaskar Babu from Suryoday app. May I also please invite Shri Prashant Kumar from Yes Pay Next, Shri Sanjay Mudaliar of BOB ePay, Shri Hardeep Singh Ahluwalia, Canara A1. May I also please invite once again Shri Nitin Chugh and Srimati Vidya Krishnan of Yono. I also invite Shri Kalyan Kumar of PNB Beam, Shri N. Kamakodi of City Union Bank, Shri Amrish Kenge of GPay, Shri Sameer Nigam from PhonePe. May I further please invite Mr. Arjun Dvajan from Amazon Pay, Shri Prashant Kumar, Credit Pay, Shri Pankaj Gadgil of ABCD, Shri Mohit Gorisaria of Salary Say, Shri Vishal Lal, Ultra Cash. May I also please invite Shashwat Nakarani of Bharat Pay and Shri Deepak Thakur, Time Pay. Let me please invite these amazing partners to please join for a group photograph. And while we have the group photograph, I'll also take the opportunity to extend the gratitude to the technology service providers, the TSPs who have also worked on these initiatives. We also want to thank Euronet, Finicos, Infrasoft, JustPay, Maximus, MindGate, Mobileware, Montran, NPST, Olive, and Sarvatra. So thank you indeed to the technology service providers as well, the TSPs. Well, this is a shining example of how teamwork makes the dream work. Absolutely incredible. Thank you very much. But ladies and gentlemen, while I request our dignitaries to remain on stage, I also invite Nupur Chaturvedi, CEO, NBBL, to propose the vote of thanks for this phenomenal evening. So ladies and gentlemen, up next, I'd like to please invite Nupur Chaturvedi. Can we have a huge round of applause, everyone? We're not done as yet. Nupur Chaturvedi.
Can I request everyone to take seats for a few more minutes, please? We have such a gracious set of people on the stage. Can we have everyone settle down for a few more minutes, please? Yep. NPCI team, please hold on the celebrations. I'm joining you in a minute. Good evening, all of you. I once again request all of you to please settle down and give me just a couple of minutes. We at NPCI are a bunch of builders. However, a lot of what we build is an outcome of RBI payment vision as well as the monetary policy announcement that keeps us motivated and keeps us on our toes. These are the documents that provide us the guardrails as well as the guidance for everything that we do. Honorable Governor, sir, thank you so much for taking time out and being here to encourage us. We are grateful for you, Shri Vasudevan sir, Shri Vivek Deep sir, Shri Gunveer sir, and the entire DPSS team for your continuous guidance and the help that you provide day in and day out. Thank you so much, Nandan sir, for your presence, as well as the multiple roles that you've played since the inception of NPCI. Thank you for the inspiration that keeps us working towards the digital impact and the social good. Your words during the address today will work as a guiding light for us in the BFSI space. On the behalf of NPCI Group, I would also like to thank our chairman, Ajay sir, who keeps us honest towards our execution and commitment. Thank you, sir, for the dual role that you play in guiding our strategic vision while keeping us grounded and focused on governance. I take this opportunity to thank the MDs, CEOs, founders, and the other senior leaders of banks and fintechs alike, without whom digital payments in India would not be where it is. Your partnership, your support, and your feedback nudges us forward every day. Thank you for helping us co-create and collaborate on UPI Circle and B2B solutions by BBPS. We look forward to scaling both of these along with you in the times to come. Last but not the least, I would like to thank each and every one of my NPCI colleagues, those who are in the room and those who are back in office. We all work under the aegis and guidance of Dilip and bring our passion, our commitment every day to the work and make it happen. We at NPCI are a bunch of builders. I'm sure building a conference was not part of the original mandate. However, I'm so glad that we partnered with PCI, FCC under the aegis of METI, DFS and MEA to build and grow GFF conference to become a stage that we are all proud to attend today. With that, I wish you eventful and meaningful days ahead in GFF. Thank you and happy GFF. Thank you.
Thank you very much, Nupur. Thank you so much for sharing your thoughts and summing it up beautifully, the entire launch. On that note, ladies and gentlemen, I also humbly extend our gratitude and our thanks to our esteemed guest of honor, Shri Shaktikanta Das, for his valuable and pioneering presence here at GFF. Thank you once again, sir. We also thank Shri Nandan Nilekani and Shri Ajay Kumar Chaudhary. Thank you once again for joining us. Thank you very much. Thank you, Nupur. With that, ladies and gentlemen, I do have a couple of announcements for all of you. First up, I think since morning I've been talking about the fact that the networking, we have curated certain networking opportunities that's open to all. So I hope you're taking a good look at the app because, well, now it's 6:40. Let me tell you, 7:15 onwards, the Night Fest begins. Take a look at the app. We've got 4 venues. In fact, we've got Razorpay that's hosting the Networking at Social BKC. I repeat, Razorpay is hosting the Networking Night at Social. It's a first come, first serve. We also have Dallas Dice hosting the Networking at Soda Bottle Opener Wala. Then we have M2P that's hosting the Networking at Taftoon. And we have HeavyPay that's hosting the Networking at Toast and Tonic BKC. So there are 4 exciting venues for networking. It starts at 7:15. First come, first serve. Please wear your badges, most importantly. And while it begins at 7:15, there are limited coupons, limited slots. So go ahead, head to these venues, go ahead and get your networking started. With that, while we call it a wrap to the day 1 of GFF, super exciting. I suddenly feel like I'm in Planet GFF. We will be back again tomorrow with some more insightful sessions, more leaders joining in. So as of now, let's brace ourselves with all that energy for Night Fest. Please enjoy the networking, and the team is right around if any doubts. But until then, we'll see you tomorrow morning, and please enjoy the rest of the evening. Thank you.